Let's go. Bitcoin Strategy World Day 2. This is probably what we're gonna be doing most of the day, unfortunately. But it is what it is. It should be interesting, I guess. And you get the Federal Reserve interest rate decision. No GameStop news. So let's get it.
I'd like to argue that the next phase for for the way Bitcoin's role in society and the narrative around Bitcoin is Bitcoin as a default savings asset, Bitcoin as a store of value, Bitcoin as something distinct from risk-on textile investments. So what evidence do we have for this? If we look at some of the largest macroeconomic events in the last 5 years, some of the most disruptive macroeconomic events, we see that throughout the vast majority of these events, owning Bitcoin was superior.
Yeah, I am on early, but I'm not really gonna be talking as much, I don't think. I got stuff to do for a second, so I just threw this on.
The more Bitcoin behaves like a safe haven store of value, the more it will be seen as a safe haven store of value. And we can look at individual adoption.
Let's see.
Using some on-chain analytics, we can see that Bitcoin is increasingly held for longer on the Bitcoin blockchain. Now, on-chain analytics aren't perfect, but they directionally indicate that Bitcoin is trading hands less and less often. It is more commonly being accumulated and held for longer periods of time. In fact, over 42% of clients at River who have ever bought Bitcoin have never sold it. And the most important data point, I think, and what this conference is all about, is the business adoption of Bitcoin as a treasury asset. And to me, the trend here is undeniable, and it is the strongest indicator that Bitcoin is becoming seen as a distinct asset, as a store of value. Businesses are stacking Bitcoin at an unprecedented rate. Here's a chart showing the estimated business Bitcoin treasuries using both known public company data and disclosed private company treasury data. So that means that this chart is an absolute lower bound. It's almost certainly higher than this chart. And we've seen tremendous growth in the last year. Now, it's important to hammer this point home. These companies are thinking about preserving their treasury. They're not running hedge funds. They want to preserve their capital through time to further the interests of the business and their operations. What are these companies not doing? These companies are not opening Charles Schwab accounts and buying Apple shares or Tesla shares. These companies historically have held cash and cash-related assets. And they're skipping stocks. They're not even looking at that for preserving their treasury. They're going straight to Bitcoin. To me, this is the biggest indicator that Bitcoin is becoming an asset totally distinct from being seen as anything like a tech investment.
I need to figure out how to make it so when I talk, the audio on this lowers so you can hear me. Because I noticed during yesterday's stream, I'd be talking, but you could barely hear me over the live stream. I'm trying to figure that out, but I gotta go to the bathroom. I'll be right back.
Tech company.
I've also learned a ton about Bitcoin recently. It's kind of interesting. I mean, that's why this stream's dope, you know? It's a GameStop stream, but you actually learn things, I feel like, that are practical rather than just talking about a bunch of tinfoil nonsense that everyone else talks about, you know? But I'll be right back.
Bitcoin. They're not buying stocks. They're buying Bitcoin. We're also seeing the most conservative financial institutions in the world continuing to grow their Bitcoin allocations. Insurance companies, pension funds, university endowments. The narrative is changing quickly. And lastly, nation states continue to build Bitcoin reserves. You have the leaders, like El Salvador, continually buying Bitcoin. You have state-sponsored mining operations in Bhutan and other countries. I think we'll probably see the announcement of a few other nation states over over the coming years buying Bitcoin or running Bitcoin mining operations. And we have the Bitcoin Strategic Reserve in the United States. We'll see what actually comes to fruition there. But the fact that this is even a point of conversation. The United States is not discussing a strategic Tesla share reserve or a strategic Apple share reserve. Strategic reserves are for assets seen by the people of a country and by the government of that country as critical for having a reserve for various scenarios. And the fact that Bitcoin is in that conversation at all, to me, is proof that Bitcoin is becoming seen as something completely distinct from a risk-on tech-type investment to being seen as a true store of value and place to save. So what does this tangibly mean? What are the activities and behaviors we're going to see from people because of this shift? Well, for one, I think that Bitcoin savings will become mainstream for individuals. Said another way, Bitcoin is going to kill the savings account. Today, the people who save in Bitcoin are seen as a little bit wacky. It's maybe becoming a little bit normal over the last year or two. But years from now, saving in Bitcoin will just be seen as the default. People won't even think about it. That will just be what they do. A large percentage of their paycheck every month, every 2 weeks, will be going to Bitcoin. Bitcoin as a treasury asset for businesses will be mainstream. Today, the entrepreneurs who are buying Bitcoin for their treasury are leaders. They're pioneers. They're doing something different. It's just going to be normal in 5 years. It won't even be special. So my worst case analysis is that Bitcoin becomes a reliable tool for saving, which is massive. This means that every business and every human on the planet saves in Bitcoin. But it could be even bigger. Bitcoin could emerge from this, the next phase after this, as a true global reserve asset. Now, I don't have time to go into this today. Perhaps this will be a talk for next year. But I think this is the true end state for Bitcoin, and I think the trajectory is clear. So just to reiterate, over the coming years, I expect businesses and individuals to continually save in Bitcoin. Yet they'll still use dollars for transacting. You'll still get paid in dollars, but you'll save in Bitcoin, and you'll pay your bills in dollars. Businesses will continue to stack Bitcoin for their treasury. This will lead to drastic pressure on the upward price of Bitcoin, and it will become a very mainstream part of our financial lives. Thank you, and I look forward to seeing you all again next year.
Thank you so much, Alex. I'm glad I could help with those statistics with my stacking. All right, next up we have Chris Kuiper. He is the Director of Research for Fidelity Digital Assets, which provides enterprise-grade digital asset solutions for institutional investors. Chris contributes to and oversees the research creation process to provide leading Bitcoin education and resources to clients. Welcome, Chris.
All right, thank you everyone. Thank you for being here. Thank you to Strategy for inviting me. It is a pleasure and honor to be here today. One of the things I do at Fidelity Digital Assets on the research side is I talk to a lot of institutional investors. So money managers, fund managers, advisors, and I try to speak in their language, making the investment case for Bitcoin. So that's what I want to try to do this morning. I want to take that, but tailor it to corporations and specifically talk to corporations. To be clear, I think that you have to have the philosophical understanding and conviction in Bitcoin. You have to have the fundamentals, a lot of the stuff that Alex just talked about. But it helps to add another leg to that investment thesis stool, the investment angle. And so let's jump in right into the numbers here. I'm going to put on my CFA hat, my nerdy analyst glasses here. This is a chart that I show a lot of institutional investors. This is, broadly speaking, their menu of options if they're running a fund or running money. You see they've got stocks, fixed income, real assets, and then you've got your first two columns are your return. Your second two columns are what they consider to be risk. I'm going to talk a little bit about that in a second, though. And then the last two, bring those two together, risk versus return. So not surprising for a lot of people here, Bitcoin 79% annual, compound annual growth rate over the last 10 years. Now you might say 10 years, well that includes a pretty fantastic early period for Bitcoin, you would be right. But if you take the last 5 years, it's still very high, around 65%. So I'm not trying to cherry pick here. I'd rather have the 10-year picture for you here for the other things. So for example, corporations, as Alex said, they're not buying stocks. Real assets are hard. Gold, commodities, real estate, they're hard to buy, they're hard to purchase, they're hard to insure, transport. They're literally boxed in that middle box. Treasuries, maybe they can go out on the duration curve with intermediate treasuries, investment-grade corporate bonds. But you see, over the last 10 years, they've only gotten about 1.3% out of those. And that's nominal. We're going to get to real in just a second, real returns. Now, of course, the reason for this is they like the low risk, the low perceived risk. Low standard deviation, not too much of a drawdown there. But if you put the two together, which is what a good analyst should do, what return are you getting for the risk you're taking on? The Sharpe ratio shows a different story. So Sharpe ratio, as you know, is your excess return, return minus your risk-free rate, divided by that risk measure, standard deviation. The Sortino ratio might be a little more interesting, especially for corporations, because this takes your excess return and divides it only by the downside standard deviation. So in other words, most people don't care if Bitcoin is volatile on the way up, it's ripping higher. They care when it's crashing and going down, and I'll get to that in just a second as well. So here's your return, risk versus return. The other thing they always look at is correlation. So on the left chart there, you see the correlation of Bitcoin to major.
All right, I turned off ads. What's up, Moose again?
But this is over a longer time period. At some time periods, it is very high, especially to things like stocks. But if you take a longer term view, low correlation even to things like commodities, gold, real estate, other real assets. The chart on the right is what I think is more interesting. This is very underappreciated, in my opinion, both in the Bitcoin community and certainly in the investment community. This is a histogram showing the monthly returns for the S&P 500 in blue, and then Bitcoin in orange, of course. So the S&P 500 looks like a pretty normal distribution. So on any given month, the S&P is going to go up 1% or 2%. Maybe it'll go down 1% or 2%. Bitcoin, of course, is completely inverted. It's flipped inside out. Any given month for Bitcoin, you're not going to go up or down 1% or 2%. You're going to go up a lot, or you're going to go down a lot. And this obviously talks a little bit about the correlation. So this is why it's uncorrelated. And that's, of course, the holy grail in finance. Find an uncorrelated asset to add to your mix. You can improve your risk-adjusted returns. William Sharpe, of the Sharpe ratio that you just saw, he is thought to have said, I can't prove this anywhere, but everyone agrees at one point he said, there's no free lunch in finance except for diversification, or diversification is the only free lunch. So that's one reason why this is interesting. But more importantly, the distribution is skewed to the right, at least historically, meaning there's more times when Bitcoin has gone up than it's gone down. And this makes it very different from every other asset class out there. So if you've heard of good cholesterol versus bad cholesterol, not all cholesterol is the same, LDL, HDL, good versus bad. You want the good cholesterol in your body, you don't want the bad cholesterol. Bitcoin has more good volatility than bad volatility. And this makes it unique because, for one, you can actually harvest that volatility. If you do a quarterly, monthly, annual rebalancing, whatever it is, Bitcoin goes up, you rebalance back to your target rate, you're harvesting that volatility. The other reason this makes this so unique, and this is what I think is quite profound, is that it turns on its head a lot of traditional finance, which says volatility equals risk. The pure definition of finance is
I
things
just
like
changed
standard
that
deviation.
setting.
But that's because
That should
most
make my
assets
voice
have that
higher
normal
than this
distribution.
audio.
Or
Let me know how
they
this
even have,
sounds.
you can even see in this chart here, there's a little bit of a spike in the blue to the left there. So if you heard the old Wall Street adage, stocks take the escalators up, the elevator down, that's because that volatility comes at times
good?
of crashes.
Or do I need
and
to,
that's
like,
why they
make it
think
better?
of volatility as risk. Risk is not volatility, though. Volatility, the other side of it, is opportunity. True risk, in my opinion, is permanent loss of capital. And of course, I'm not the first to say this. I think even Warren Buffett, who hates Bitcoin, has said this before.
That's dope.
So risk is not volatility, it's permanent loss of capital. So for
What do you,
corporations, the permanent
what do you
loss
think
of
about
capital they should be
Bilal
concerned about
versus
is
Jack
this.
Medina?
You've seen this chart before, the purchasing power of the US dollar.
I think Bilal's
This
gonna
is,
whoop that
used
ass.
with CPI numbers.
What's up, hero
Notice
of the
on
day?
the left, I've done a log base 2, logarithmic base 2. So every horizontal grid line you see there is the dollar getting cut in half. So you can see the half-life of the dollar is a decade, maybe 2, if it's doing okay. And so this is the problem that everyone faces on an individual level and certainly a corporate level. You say, well, that's fine, but I'm a corporation. I don't put cash in a vault. I don't stick it under a mattress. I invest it. So here's cumulative returns of a 3-month Treasury bill, $100 to what it is to today. So you've done a little better. Nominal returns for bonds, 10-year bonds, you can do even a little bit better still. But of course, that's nominal. If you look at real returns, the 3-month T-bill, you've barely tread water. And with treasuries, you've done a little bit better as interest rates have come down and inflation has come down as well from the 70s and 80s. This next chart here, I saw a version of it, and I didn't actually believe it when I first saw it.
I want to hear it. I want to hear how it sounds. Test, test,
Meaning
test.
if you held a 10-year treasury for 100 years, after your real return, after inflation, and after tax, you have made no progress. So I actually calculated these numbers myself to verify it. Don't trust, verify, right? And
you don't like
it's
Bilal,
worse than I
bro?
thought. So I
don't
used
like
the
Bilal?
statutory tax rate historically for corporations here. So maybe tax rates are around 21% right now for corporations. They've been as high as 50% or more. So as you see with the recent bout of inflation, you are, again, underwater after almost 100 years. And the question, of course, is do you think tax rates for corporations will stay at 21%? Do you think inflation will stay where it is today? Do you think interest rates have a lot more room to go lower and bond prices higher? Maybe, maybe not. A lot of corporations say, okay, I'm convinced. I've got to protect my purchasing power. This is a real threat, especially maybe in today's macro environment. But the thing that scares them the most is this. They look at these massive drawdowns in Bitcoin. And to be clear, we have to recognize this. 70 to 80% drawdowns are nothing to sneeze at. So let's acknowledge that up front. But one thing I want to point to is notice the time period here. Every drawdown lasts maybe 3 years or so. But this is why they go into things like 10-year treasury bonds, or even shorter. They see these nice, shallow, nominal drawdowns. Very short, very shallow, although recently, minus 20%. But again, the bigger threat to a corporation, especially if you plan to be around for a long time, is your real return. This is
I just don't know,
the drawdown you're
I don't
experiencing
know the welterweight
because you
division
have
that
to
well,
use your money to purchase things.
I mean,
And so even bonds have experienced a 55% drawdown on an
he's the best
inflation-adjusted
fighter
basis.
in that division.
And notice it
personally,
wasn't just 3 or 4
that I
years
know
of a
of.
drawdown. It was 40 years
I don't think
of a
anyone's
drawdown
better
that
than
they
him.
sat in that underwater. I just saw a statistic this week. The U.S. aggregate
also
bond
don't
index,
know who's
the
in that
Bloomberg
division
U.S. aggregate bond index,
that I
is in its 57th year of a drawdown, the longest it has ever been in its history. And it's still going on since the year 2000. So again, this is what Bitcoin is designed to protect against, in my opinion. In our research, we find Bitcoin is driven by 2 major macro factors. Number one, currency debasement, which we're showing here with the global broad money supply change year over year. Notice there are 2 different axes, so Bitcoin has massively outperformed that debasement. And then inflation expectations. Not CPI, which is backwards looking, but if you look at when inflation expectations actually spike, that's when Bitcoin is spiking as well. And so this is what it's designed to do. If you look at this data on this chart, it actually has an R squared of 0.8 to 0.9. That means that 80 to 90% of Bitcoin's move can be explained by the change in the money supply. All right, so even after saying all that to a lot of corporations, I still hear from them, I got to protect my purchasing powers, but I just can't handle that volatility. I've got bills to pay, I've got intermediate bills to pay, I've got intermediate opportunities to pursue, and I certainly can't have a 80% drawdown at a time when it's probably going to be pretty bad for the rest of the environment as well. Again, that elevator, that crash there. So I'll offer 2 simple ways to mitigate this volatility. Number one is just the power of position sizing. In the green, you see the current option set for someone like a corporate treasury. They can be in T-bills, cash-like instruments. There's no max drawdown there. There's no drawdown at all.
What's
but
that?
Of course, they're not keeping
I
up
only know
inflation
all in
with inflation,
GameStop.
minus 1.2% over the last 10 years.
What's
It's actually worse if they
positioning?
go out on the duration curve with 10 years. At least it has been over the last 10 years. And then, of course, you have Bitcoin, but they can't stomach the 75 to 80% drawdown. But Bitcoin, like a lot of things in finance, is not an either or. It doesn't have to be. It doesn't have to be 100% in or 0% out. It's not a switch. It's more like a dial. So you can think about adjusting an analog dial. You can move your exposure up or down depending on your risk tolerance, depending on your situation. And so here in the orange columns, you see just some hypothetical examples. These are not recommendations necessarily. But the cash part is just 3-month treasury bills. It assumes annual rebalancing. It assumes reinvestment of dividends. And you can see by blending in different levels of Bitcoin, you can greatly increase your returns, at least historically you would have. Your risk in terms of standard deviation, that classic measure, does go up. But what you're mostly concerned about is that max drawdown. And you can dial this up to what you think your company could handle. And then to throw another ratio at you here, we talked about the Sharpe ratio, the Sortino ratio. There's also the Calmer ratio. And that is your excess return divided by your maximum drawdown. And this is very important for companies like banks who have certain capital requirements, or any corporation that just says, I need X amount of cash. I can never go below this line. And so you can see the Calmer ratio for different levels there, and you can, again, dial this up or down to what suits you. So that's one way to handle it. The second way to handle it is just have a longer time frame. This is Bitcoin's compound annual growth rate over various periods, rolling periods. So you've got rolling 4-year CAGR, rolling 5-year, rolling 7-year, rolling 10-year. And you can see the worst that has ever happened, at least historically, is that 5-year CAGR. At one point, you barely hit 0, maybe dipped it below it for just a few days or weeks. But if you have a long enough time period, all of these have been positive on a rolling basis. So again, if you don't need cash as a company for the next 4, 5, 7 years,
I said what's up.
You can ride it out. You can wait out the drawdown. You can wait out the volatility. But this goes back to my first point. That's why you have to have the conviction as well. All right, this is my favorite part. I started my career as an investment analyst. It's what I did mostly before coming to Fidelity. And early on in my career, I listened to hundreds, if not thousands, of corporate earnings calls. And it became clear to me right away that corporations and Wall Street focuses almost exclusively on the income statement, not the balance sheet. So it's all about revenues. What was your revenue growth? Did you hit your target? What were your expenses, your margins, and then that big EPS number? Did you hit it? Did you exceed it? What did you guide to? You guys know this game. But as I tried to be a better analyst and I started reading a lot of books, some of the better analysts out there, they all said the same thing. Start with a balance sheet to understand a company. And then my mind was really blown. My eyes were literally opened when I came across Michael Mauboussin. I don't know if any of you have heard of him, but he's a great thinker. He's a professor of finance. He's worked in the industry many, many years. He's an author of multiple books. And the book that really opened my mind was one called Expectations Investing. And there's a lot in this book that I won't get to, but the big part about it is he introduces return on invested capital. And this is not unique to him, but he's the one that put it in terms that took out a lot of the noise. So if you're not familiar with return on invested capital, it's simply this. You take your income statement, you want to get your cash earnings, so NOPAT is net operating profit after taxes, and then you divide that by your invested capital, and that comes from your balance sheet. So it is explicitly linking the income statement to the balance sheet in one metric. If you're wondering what the invested capital is, just a side note, you can compute it top down or bottom up. If you're going from the bottom up, it's simply your net working capital plus all your property, plant, and equipment, your acquired intangibles, and your goodwill. So basically all the stuff you need to operate your business. So if you take the cash earnings divided by your capital base, you get return on invested capital. Now this number doesn't mean a whole lot just by itself. You can see trends if it's going up or if it's going down for a company. But where it really comes into play is when you compare a company's cost of or return on invested capital to its cost of capital. So if it's returning more than its cost of capital, you're creating shareholder value. Less, you're destroying shareholder value. Now, where the insight came from with Mauboussin and others is that you can decompose this, you can see what's driving it, but most of all, it strips out the noise of the income statement. It strips out the noise of all the things you hear on financial television and analysts and what they're saying. Because, for example, a company could be growing its earnings very quickly. But if it's growing its invested capital base to get that earnings growth or that revenue growth, it could be destroying capital. And you wouldn't know it just by looking at the income statement. And the research shows, and the academic research shows, that the market eventually figures this out, and it will punish a company accordingly through its stock price. And the reverse is also true. You could have a company that's shrinking its capital base, its revenues might actually be declining, and you think it's a dying company, but they're actually increasing the returns on invested capital. They might be divesting business lines that don't make sense anymore, are low return, they take up way too much capital, and the market rewards them as well. So you might be wondering, what does a typical company look like? So here's the 5-year average return on invested capital for the S&P 500.
How you doing?
Most of them, as you can see, are in that left tail. They're all bunched around 0 to 5, 5 to 10, 10 to 15%. Pretty
I honestly might
moderate
go to the gym here in a minute.
returns. And mind you, this is for
I don't know.
the S&P 500, the cream of the crop. And there's, of course, a few way out on the tail, companies that you probably would surely recognize that have outstanding returns. The other interesting thing about this is there's a debate in the investment community of how to handle excess cash. Michael Mauboussin and others say you should strip it out, don't include it. Why? Because you're trying to get at a measure of how economically efficient a company is. How does it compare to its peers? So if you're trying to do that, I would agree with it. However, I'm in the other side of the camp, where I think you should include it if you're trying to evaluate how good management is allocating capital. Cash is something that management has the discretion to allocate, and one of their #1 jobs is to be a capital allocator. So we should include it. And this is becoming a big deal. As you can see,
Fed meeting,
S&P 500 companies, cash as a percent of revenues.
Shit, like he always says.
From the early 90s, it's gone from 10 all the way up to 35% today. You can see we came down a little bit from the COVID era where they were hoarding a lot of cash.
That'll make it interesting.
And this even goes back earlier to the 70s and 80s.
I think
the
they're
two biggest
cut,
drivers to this.
They're most likely not going to.
Better inventory management, so think of like just-in-time inventory, a more globalized world. And the other one is just the digital nature that all of these companies live in today. You can now run a multi-trillion-dollar company with very little capital. It's code, it's software, it's servers, it's not heavy equipment, railroads, industry, that sort of thing. So those are the two big trends there. And to give you an idea of how big of a difference this makes in a company's returns, if you take Microsoft, just as an example, at one point they were earning 49% return on invested capital. That is extremely high,
would be
as you
crazy.
saw with that histogram.
Like
that tells you how good of a business
economics
that is.
are like set up
incredibly
for
high
it,
margins,
so they
incredibly
could.
capital light, efficient, and lean. If, though, you add in their excess cash, that 49% goes down to 29%. So that tells you how much of a drag this extra capital, this extra cash, is on their returns. That's just sitting there, not earning as much as their cost of capital. So here's my last slide and my question to companies today. Is your company generating shareholder value? Here's a summary of that histogram you saw for the S&P 500. The average S&P 500 company returns about 12% on their capital. The median's a little lower, around 11%, but they still have a positive spread. They are above their cost of capital, around 8%. If you zoom out and you cast a wider net, the Russell 3000, the median Russell 3000 company is only earning mid to high single-digit return on invested capital. The average is much lower. That tells you how much is being driven by these outliers. And of course, they have a negative spread. They're not earning their cost of capital. They are, on average, destroying shareholder value. And then you compare this to Bitcoin. Average annual return last 5 years, 65%. So the question to companies out there is, number one, what's your return on invested capital? Have you calculated it? How does that compare to your cost of capital? Are you generating shareholder value? Do you have extra cash? And if so, what are you doing with that extra cash? And then the ultimate question is, what's your current opportunity set? What are the investment ideas and opportunities that are in front of you? And do you think or do you believe the return on those ideas or opportunities will exceed the opportunity cost of Bitcoin? Thank you.
Thank you so much, Chris. Has anyone seen the viral ad from Coinbase? The shipping container, pretty cool, right? They're coming out with some really great marketing videos. Well, our next speaker is from Coinbase. I'm pleased to introduce Rick Schoenberg. He is the CEO of Coinbase Custody, bringing over 3 decades of experience in electronic trading and leadership roles at Goldman Sachs, State Street, and LCH. Appointed in late 2023, he is steering Coinbase Custody's institutional strategy amid the growing demand for secure digital asset storage solutions, particularly in anticipation of spot Bitcoin ETF approvals, which were already approved. So, welcome, Rick. Thank you.
Hello, and thank you again. My name is Rick Schoenberg, and I help lead custody at Coinbase. Unlike our ads, my presentation is not going to be all that exciting. We do custody, and custody is meant to be secure and not exciting. So jumping into that, the presentation here about fortifying your security around the assets that you store at your custodian, I want to talk about how we custody things today, how we're going to be custodying assets in the future, and how that's important to the world of digitized finance as this market evolves and changes. So let's just get into the challenge at the very beginning here. To start with, if we go back to the end of the last calendar year, Coinbase Custody, our qualified custodian, held over $200 billion in client assets. And that's just within our QC custodian. Our Inc. business held another very large sum of client assets. Now, when you think about $200 billion in assets, that's a lot. But we hear a lot of talk about banks and others that have assets measured in trillions. But I challenge you there. When you give a bank $1,000, does it secure those assets? Does it hold them in a vault, in a teller? They don't. All their efficiency ratios dictate that they get those assets out of their hands as quickly as possible. They deploy them, they loan them out, they give them to the Fed or the Treasury or to a clearing corp, and they don't really secure them. And I think that's an important point that we will get back to.
It's funny, I'm just like in this chat over here.
But here at Coinbase, those hundreds of billions of dollars in assets, we secure each and every one of them.
I don't know about that.
And that's what makes us different. So trust is our brand, it's core to our mission, and that brings me to security. And security, therefore, is absolutely existential to what we do. So to this quote here from Brian, which I like, various people at Coinbase, they get up in the morning, they look in the mirror, and maybe some of them might see a top 30 bank looking back at them. Others will see a top 10 broker. At Coinbase Custody, we see one thing and one thing only, and we see it always. We want and we are the world's leading and preeminent digital asset custodian, which brings me to the challenge of security. So security is at the core of what we do, as I said, and at its core, security is about a trade-off between usability and security. So going back in time, we created these funky terms like cold and frozen or hot. And just briefly here for everyone, the idea of a hot security or an asset that's kept in hot, the keys there are encrypted in a server, in memory, in one location. When it comes to security, having them in one location is not optimal. When it comes to usability, it gets good marks. And that's where hot is on that efficient frontier. And at the other end, you had cold or you had frozen. And that usually means those keys are kept offline, usually in a physical medium, requiring humans to access. And from a security perspective, accepting the fact that humans are involved, that's pretty good, that's better. But from a usability perspective, that clearly suffers. But that's that efficient frontier. And the question is, how do we achieve progress? And what does progress look like? So you'd think that, oh, well, why don't we just add usability? But that's not good enough. We've all read the press. We all know what's going on. It's a pretty dangerous world out there. So just achieving security parity as time goes on is falling behind. So the question is, how do we achieve progress, and how do we do that here at Coinbase? Here, for me at Coinbase. So we have launched a platform called Core KMS, or Core Key Management System. Not a very clever name, but it's our 6th generation key management system, and it aims to achieve, and we would argue it does achieve, this exact trade-off of usability versus security by increasing both usability and security at the same time. So how exactly do we do that? So I'll dig in for a moment and I'll bore some people, and for others, maybe this will be a bit new, but there's a concept which is heavily used in cryptography called multi-party computation. So just reading the slide briefly, this allows multiple parties to jointly calculate a function while keeping their inputs private. I borrowed that from one of my PhDs. He dumbed it down for me. But what that lets us do, sort of just conceptually, is if today you go into a bank, you access your vault that you have there, your safety deposit box, you have one key, the bank has one key, you turn them at the same time, you access your assets. In the land of multi-party computation, what that means is instead of just having 2 keys, you can have 10 keys, and you could define a flexible quorum such that any 8 of 10 keys are necessary to sign a transaction or to access assets. So what you can then do is you could then send those 10 keys to 10 different locations on the planet, secure them differently, and then have any 8 or 10 of them asynchronously access or sign a transaction and effectively give you access to those assets. And what that does is it makes sure that there's no one single point of failure or compromise. So if you think back to that asset of the hot storage being in one place, even protected, this lets you have them in 10 places protected. So this gives you an unrivaled level of security. Now, one thing that's interesting to note about MPC, sounds great, sounds bulletproof, but not all MPCs are created equal. So there are a lot of devils and a lot of details, and I'm not going to belabor it, but it's just a point to keep in mind. So as we go forward, MPC is amazing, but MPC is just one part, just one layer in a multi-layered approach to security. So in addition to having secure keys at the core, we have something that I like to call a multi-party consensus, or these policy engines at the edge of our network, protecting things and protecting transactions before they get initiated. So what we do is we have these policies that we work with clients to help define. So this is one thing that makes Core KMS unique and our processing unique, is that the client gets to determine their own trade-off between usability and security. And just to bring it home and to give a real-world example, it may be that for one client, if they want to do just a small transaction, they may have one pool of people that can initiate that transaction, and say 1 of 5 partners at that firm that have to approve it, any 1 of 5. But for larger transactions, they have a different set of people that can initiate, and maybe they require 3 of 5 to sign that transaction before it even moves off to the part in the process where the keys are involved. And what that lets clients do, it adds an extra layer of security around that transaction before it even gets initiated. So this is protection at point of use. Again, multi-layered security. So bringing this all together, what does this mean and how does this work, and sort of how does Coinbase do custody and achieve security? For starters, we start off with best-in-class multi-party computation. As I said, there's a lot of ways to do it. There are some ways that are better than others, and it's something that we have invested years and years in perfecting, which is an interesting point when I get to a second, as how we've open sourced it. What we have next is we have data centers that also, for the cryptographic keys, and these data centers are distributed globally, they are secure, and they are secret. We don't take clients there, we don't take senior execs there. I've never been there. In fact, I don't even know where they all are. And at those data centers, we have best-in-class military-grade hardware isolating those networks and ensuring their security. We then have AI agents scrubbing our network and scrubbing our systems. And then we also have a group of anonymous Coinbase employees that are globally distributed, adding an extra layer of distributed security. And then we have security personnel. We have over 250 security engineers on our team, and I believe that's the biggest security team in the digital asset business. I know it's bigger than a lot of startups in its entirety, and they're obviously key to our success. And then at the end here, as I mentioned previously, we have the customer's involvement, your involvement for defining how exactly you want to live on that efficient frontier. So now that we have that sort of mental model, putting together all the components, how do we ensure that we have our A game going 24/7? In this time of sort of trust but verify, how do we do this? Starting with audits and pen tests. Coinbase was one of the first digital asset custodians to receive their SOC 1 Type 1 and SOC 2 Type 2 certifications audited by Deloitte. Everyone knows Coinbase is a very strong proponent of regulation. And in the case of Coinbase custody, we've done the same. We've found ourselves, we've chosen a strong regulator in the New York Department of Financial Services. They are the same regulator that regulates some of the largest
I guess I'm going to the gym. I'll leave this running.
And they also do their own
I want to
periodic
listen to it
audits.
too. I'm gonna
In
be
true
in the
cloak and
chat.
dagger style, We have a team of
So,
hackers internally,
I'll
our
catch
red
you guys
team,
here in, like,
that is constantly reading up
I don't
on
know, whenever I
third-party
get back.
exploits, testing them on our internal systems, making sure that we
I
have
bet they have,
internal
like, a
vigilance
break,
and
though,
that
or
our
something
systems are
here.
always secure.
Fuck.
And we do also use third-party pen testers to test various subcomponents of our system as
I don't know
well.
if I want to leave, but
On the insurance front, we
just
have
gonna be
one of the
annoying if I
largest
leave and then
one of the
there's
oldest
there's
cyber
nothing
insurance
playing.
policies out there. And then lastly, as I alluded to, a little while ago, our PhD cryptographers came to me and said, we want to open source this marvelous IP that we've been working on the last 4 years. And I said, no, that's crazy. We want to protect our IP. That's what we build IP for. And they said, yes, that's cute, but, and that may be optimizing sort of commercially in the moment the protection of our intellectual property. But if your heart is in protecting and optimizing the protection of the underlying client assets, then you should subject our math to public scrutiny. So that's hard to fight that argument. So they won. So we have actually gone ahead and we've open sourced
leave
the
in a
core
minute.
mathematical libraries. They're on
It
GitHub.
looks like there's only
we have
like
bug bounties. And it's
30 minutes
literally,
more.
We've sort of given away some of the keys to the kingdom, pun there,
Sure.
to help ensure
And then they have an
security of
hour
client
or two
assets.
break.
So putting this all together and sort of thinking ahead to the future of finance, how is this all relevant?
Because I wanna
and just
listen.
sort of
I'm
two
not gonna
last
shut it
slides
down.
to go through things here quickly.
I'll actually just leave here in a bit.
One, I would argue, and I'm biased, but I'll still make the argument, that custody is the core of this future of finance. As I alluded to originally, banks don't really secure assets. They're intermediaries, they transmit them, they transform them, but they aren't really in the safekeeping business. So if you think about today, you're all contemplating put Bitcoin on your balance sheet, as you should. Are you going to do that at your bank? You're thinking about maybe paying your employees in Bitcoin or paying them in USDC. That's great, but that's not a banking service. So this is where the custodian fits in, and picking a custodian that is trusted, extensible, reliable, secure is so important. And so again, just as that paradigm shifts, and this is one way in which the future of finance and the digitized world is very, very different to TradFi, is that in some ways, your new partner really isn't your bank, it's your custodian. And a custodian does a lot more than custody, but just to sort of paint that picture. And on one last slide, I'll try and bring that point home. This future of finance is something that we at Coinbase believe in heavily, obviously a firm founded over 10 years ago, being very crypto native, but we've been investing in that efficient frontier of security and usability for all that time, but especially over the last 4 years, investing heavily in this platform we've called Core KMS. So what do we believe the future of finance looks like? Well, if you're a corporation today thinking about putting assets on your balance sheet, or as the prior presenter showed, a lot of asset managers are moving into the space of digitized assets, one thing is clear. The world is going to become far more tokenized, and those tokens will live on chain. So as that happens, you'll need a banking partner. There I go, too many years in TradFi. You'll need a custodian, a digital asset partner, there with you, delivering security, extensibility, compliance, and that framework. We've all seen the run up in stablecoins and that usage. We see that continuing. I think that's tremendous. But in that world of stablecoin usage, finance goes from being whatever banker hours used to be to 9 to 5, to you're in the FX markets, it's 24 by 5.5, to truly being 24 by 7 in crypto. Again, you need someone on that efficient frontier with usability, security, and speed. And lastly, this topic of embedded finance. I'm not sure how many in the audience were here last year in Las Vegas when Michael spoke to the idea of AI agents sort of working for their carbon-based creators, transacting in Bitcoin and living in a world where Bitcoin is the medium of exchange. But that world is here. All the tools you need, all the infrastructure you need to achieve that, we have live today at Coinbase Custody. We have APIs, we have the speed, we have the extensibility. So all that world is basically here, and it's at your fingertips today, and we're ready to embrace it. So just to bring this home and going back to security and our mission, what we're trying to do is, we're here, obviously, Coinbase, fully committed to the future of a digitized financial system. What we're trying to do, and again, where my mindset is, and what I would probably argue is somewhat mundane to some, but for us is very exciting, is how do we push out that efficient frontier on that first chart? How do we improve both usability and security at the same time. And that's really our mission, to push that curve out. That'll help and underline the future of finance, and it'll also help bring economic freedom to the world. Thank you all very much.
Our next speaker is Boaz Avital. He is the head of product and a founding member of Anchorage Digital. Anchorage, by the way, happens to be the only federally chartered bank in digital assets. Boaz leads the development of secure institutional-grade custody and infrastructure solutions. And prior to Anchorage, he was a senior engineer at Twitter, focusing on large-scale mission-critical systems. Welcome, Boaz.
Hey everyone. You're going to be experts on crypto security by the end of the day, it looks like. My name is Boaz Avital. I am the head of product at Anchorage. Anchorage Digital is one of the oldest and largest digital asset custodians. And what you're going to continue to learn today is that when you talk about digital assets, custody isn't just custody the way you might be used to it in the traditional world. Traditional custody is largely a safekeeping and bookkeeping activity. And when we started Anchorage many years ago, and we talked to traditional managers and companies looking to get into Bitcoin, we talked to them about, hey, what are you thinking about custody for your digital assets? And they were very surprised that we were bringing it up, because in the traditional world, custody has been a problem that has been solved for like 30 years. No one's thinking about it, and we were getting a lot of puzzled faces. But as you already know today,
I don't know what
digital
schedule
asset
they're
custody is
following right
completely
now.
different. It's not just a bookkeeping activity, it is a cybersecurity problem. And with digital asset keys comes a new and broad attack surface, but also comes a bunch more opportunities for more frequent and more verifiable trust-building audits, and enabling programmable money to do what it's supposed to be good at, which is interacting on-chain. So let's break down and start from sort of the beginning, for those of you who are less familiar, about what is different about digital asset custody, and then build up to what you're going to see and what Anchorage provides to make that safe and usable for you. On one side of the screen, you see $1 billion in gold, and on the other side, $1 billion in Bitcoin. Though I, of course, don't recommend you keep your Bitcoin on a USB drive. Already you're beginning to see that things have to operate differently here. But it's actually even worse than what this looks like, because you can't copy a bar of gold. A counterfeit is never going to be the real thing. But you can copy a USB drive, and then that copy has all the same rights and privileges to that Bitcoin as the original. So you know, and you've already built an understanding, I believe, that where your Bitcoin sits at rest is critically important to the safety of your treasury and your assets. But what most people make the mistake of is thinking that that's where digital asset security stops. In reality, crypto has one other big differentiating feature, which is that unlike physical gold, most of the time, crypto always physically
Ryan
settles,
Cohen's not gonna come
which means
out,
you
bro.
always need to have access
Let's
to those
be
assets
real.
when you
He
want
wants
to use
people to
them,
short
interact with them,
stock.
trade them, pay with them, whatever it is that you want to do. And so when you're moving gold, that's a very straightforward but difficult thing to do. You need more trucks, you need more gas, you need more people to load those trucks as you scale up the amount of assets that you move. But when you're moving Bitcoin, moving $1 looks exactly the same as moving $1 billion. Moving your assets across the street to your neighbor look exactly the same as moving them across the world. And so now, for the first time in the history of the financial system, we have an incredibly important focus on how you authorize the movement of funds. And when we started Anchorage, this was one of the most important things that we focused on. How do we authorize the movement of funds so that at every step in the process where risk is introduced, we reduce that risk? And it's not just risk of attack or risk of a malicious actor. It's risk of mistake in human processes. And of course, when you execute on that risk, it's also completely different. Because if somebody is coming in and moving those funds and taking advantage of your risk, they need to physically be there if it's gold. But if it's crypto, they can execute on that risk from somewhere in the comfort of their office chair across the other side of the world, although most often it's going to be North Korea. So, is this just theoretical or has this actually happened? Of course, we know that billions of dollars in Bitcoin and other crypto assets have been compromised in all kinds of ways. But most often, the way that they are compromised is by fooling the company or the crypto system that supports them to move assets in a way that were not originally intended.
Yeah, I somewhat agree. I think they're gonna.
That's why
I feel like they're gonna
choosing a
go hard on
custodian,
this Bitcoin strategy. I don't know.
You are choosing someone who is not just a good financial institution for you to partner with, but who you believe
At this
is a
point,
good
like, I can
digital
see why they
asset
would keep the
security
cash
company
as the hedge.
who is great
but
at
at
the
the same
technical
time,
security that needs to happen.
seems like just going
and who is
all in
ideally
Bitcoin is the
built
move.
up with a DNA of
Especially
security
with
from
a
day
stock
one.
like GameStop, because
So what
if they
options
do
exist
go all
when
in
you talk to these custody
Bitcoin,
companies, both
that
for
shit's gonna
storing
go
your assets
crazy.
and for moving them?
And then they can
Let's
just
go
do
over them
another at
quickly
the money
create
and
a
raise
foundation.
another, 3-4 billion.
First, there's this concept of hot wallets and hot storage. And you guys have interacted with these, of course, when you go to an exchange and you log in and you deposit some assets, those are going into hot wallets. These are basically servers on the internet. They're as safe as any other website that you can log into. And I think we're all in agreement that it's not a good place for you to keep $1 billion. What you'll normally be confronted with when you go to a regulated custodian is something called cold storage, or legacy cold storage. This is essentially a way for companies to go into a secret room, create crypto keys, distribute them, break them up, lock them up into a bunch of different vaults, ideally touch them as little as possible, but when they do want to touch them and move them, because that's necessary in this space, they have to go and do a very heavy and manual process of collecting not just your authorization, usually by calling you up and talking to you and scheduling a time to do that withdrawal, but then going and collecting a bunch of people, going and collecting those keys, coming back and reassembling them, executing that transaction, and moving it on chain. A very heavy and very slow process. What's good about cold storage, especially that those keys are offline, is that when those assets are at rest, they're much safer. But it introduces a lot of new risks. Risks in the movement of manual funds from that custodian onto the chain. A human being going and following a checklist is going to make mistakes sometimes, and that is a risk that we have to take. You guys have your own operational teams and you've seen it. And as this industry scales and custodians are making more and more transactions, that risk goes up, that pressure goes up, and new kinds of operations have to happen that add more complexity into the system. These are the kinds of risks that we need to think about when we're building a true system for the modern financial age. Last thing I'll talk about very quickly is MPC, a thing you've certainly, of course, heard of. MPC is made a big rise in the last few years. It is a very complicated topic. Essentially, it's some complex math that allows one transaction to be signed at the same time in multiple different places in order for it to happen. It's like, think about taking that USB and splitting it up into 3 different ones, and they all need to be used at once. MPC is a great tool. Where most people fall short is that they hear that term, multi-party computation, and they say, okay, that box is checked. But MPC is just a tool. There are many kinds of ways to use MPC. You can have hot MPC, you can have cold MPC, you can store the keys 2 ways, 10 ways. You can give some of the keys to you as a customer, and then you have a question about whether you're in real custody or self-custody. So it's a tool that means that when someone says we use MPC, you need to ask them more questions and figure out what's going on next. There's a lot of different options, and you guys don't want to be professionals in security. What do you need from an institutional custodian? You need someone who is built on security and safety from day one, not just in the way they create those keys and the way they store those keys, but the way they execute those transactions so you feel safe. You need a custodian that gives you usability, so you can actually use those funds when you need to, and you are not introducing risk in that process. And you, of course, need a qualified, well-regulated, well-audited custodian that has a proven track record in the industry. I'm going to talk to you a little bit about Anchorage and what we do. Anchorage Digital was founded in 2017. We are one of the oldest digital asset custodians, focused solely on institutions. And we were founded by security engineers with two main purposes. The first is to provide the best technical security and safety that is available in this market, because we saw that this hot-cold dichotomy was not working. And the second is to be the best regulated digital asset custodian on Earth, with the best possible regulatory framework so that your companies can feel comfortable investing in digital assets. By building up that basis, we now serve some of the largest and most demanding institutions in crypto in the digital asset world, and we are proud to have a very high standard that we maintain not just for them, but for all of our customers. So let's talk about that technical side. What is it that Anchorage does that's a little bit different that helps solve these problems that I talked about? At Anchorage, we have three main pillars of our security system. The first is end-to-end security that goes from hardware in your hands as a customer to cryptographically authorize a transaction, all the way to hardware in this form of HSMs, hardware security modules, in our secure data centers around the world that know who you are, know your own keys that you hold in your hand, and only use those keys as authorization for a transaction to happen. That means end-to-end, it is impossible to tamper with a transaction that goes through Anchorage. At no point is there human judgment or the risk of a fat finger or anything along those lines when you comes to the operations of digital asset movements in Anchorage custody. The second is a really important one, hardware-enforced policies. We believed, and this is all from day one, that the policies that you follow in order to move your Bitcoin need to be just as secure as the storage of the digital asset crypto keys themselves. And so rather than separating out our policy system somewhere else and then having that policy system under a different security model tell our custody system what it can and can't sign, we have combined our policies and our digital asset custody into one hardware enclosure, one HSM that knows who you are, knows your policies, and evaluates those policies against every single transaction. Integrating policy and digital asset custody allows us to be the safest custodian. And finally, wherever it makes sense, we have humans in the loop. Not just your coworkers who go and authorize transactions with verified biometrics in multiple ways to make sure that we know that you are who you say you are when you are authorizing a transaction on demand, but also humans on the Anchorage side with dedicated and expert risk reviewers who know you and know your company and can do another layer of review to say, hey, is this a transaction that your team actually wants to do, or is something strange going on here, and should we reach out to you? That level of support is critically important when you're working with institutions. This technology, might have had some translation errors on the slides, this technology sets us apart in a few ways. One important way that this sets us apart is it lets us have the best security without compromising on access to your funds. You are able to do most transactions with all redundant security in less than 20 minutes on the Anchorage platform. At the same time, we allow you to do all kinds of interactions that are important and always have the safety of 24/7 support. The second part that's important is, of course, regulation. You have a responsibility to your board and to your shareholders to use the best regulated custodian. You don't want to think about, is this a state trust? Is this a money services business? Is this technology? Anchorage, in 2021, to solve this problem, became the first and only nationally chartered bank in digital assets. We hold a federal charter, we're regulated by the OCC at the same level as all of the other national banks that you work with. And that provides a level of comfort not just in our oversight, but also in our bankruptcy protections. We have federally mandated laws around bankruptcy remoteness in national trust banks, and that's a thing that you can take as comfort that your company's Bitcoin is always yours. And of course, this is all part of a larger and full offering. That includes trading, that includes settlement, that includes connecting you with institutions for liquidity and lending, all of the things that your company needs in order to actually operate a Bitcoin treasury, layered on top of comprehensive reporting, on-demand audits, all the things that are important for a public company with 24/7 white glove service. Going into the future with these digital assets is important. We're a $3 trillion asset class with companies like yours investing in Bitcoin treasuries, with new crypto savings and ETFs coming in to advance and further push that Bitcoin, and with new use cases around payments, around tokenization, around securing new networks and innovation. That's why I'm very happy to announce that last week, Anchorage launched staking with Bitcoin, starting with the Babylon network, to help Bitcoin secure innovation in the ecosystem and create new ways to get rewards. And we're going to have a lot more Bitcoin ecosystem opportunities soon. So please reach out to us. Happy to talk to you and help your companies out.
There's only one speaker standing between you and lunch, and I know you're going to be very excited to hear who it is. I am honored to introduce Phong Le, the CEO and President of Strategy, who has done an exceptional job filling the shoes of Michael Saylor as CEO. It's no easy task, but Phong has taken the reins and brilliantly steered the company through its explosive growth. So please give a warm round of applause for Phong Le.
Who's excited to talk about KPIs? I actually am. Let me poll the audience and ask a few questions so I can understand how to calibrate this presentation. Who is one of the 150,000 people that listened to our earnings call last Thursday? That's like almost all of you. Thank you. Second, who's actually taken a class in corporate finance in their entire life? All right, that's pretty good. It's like half of you. All right. And third, you guys are like knocking fists. Yeah, we took a corporate finance class. Third, who actually has a background in finance? Like, you worked in the finance industry. All right, not bad. Still got it. The Morgan Stanley guys did. Okay, this is my first time attempting to teach the new world of corporate finance or the old world of corporate finance, so it'll be a little bit fun for me. The only class I think I've ever really taught in my life was Fortran, which is a lot different than this. But let me just start with, we need a new BTC standard. And you guys are like, we have a Bitcoin standard, right? BTC stands for Bitcoin Treasury Company. We need a new standard. And I think you all agree with that. And I'll show you a few things that you're quite aware of. This is a chart of Strategy's EPS, diluted earnings per share, every quarter since we began the Bitcoin standard. And on top of that chart is our market capitalization, right? And when I had the team put the chart together, they're like, they had like that little thing on the negative $94 where it went off the chart. And I said, no, just show the whole thing. And it screws up the scale. But clearly, diluted earnings per share has zero correlation to the valuation of their company. And what happens is people will literally take some sort of a bot. I don't think they're writing this stuff. I can't imagine someone's really writing this stuff. There's like some AI bot that right after we release our earnings at 4 p.m. on a Thursday, an article comes out 5 minutes later that says, MicroStrategy loss widens as revenue falls, crypto holdings struggle. Terrible news. We had an awful Q1. Wall Street Journal. Right, Bloomberg did a little bit better. Strategy doubles Bitcoin buying capital plan to $84 billion. And then you look at the actual article, And it says, they posted a record first quarter loss that resulted from the adoption of an accounting change, which we advocated for, that requires
Man, Fong Lee
valuing
rocking
the
the
firm's
dunks,
massive
bro.
Bitcoin holdings at
You
market
can't see him
prices.
because I'm in the way. Look at this
Not
dude's
inaccurate,
dunks.
because they're using traditional corporate finance.
Dude's fly as hell.
I took my first corporate finance class in 2003 at MIT, and I was taught by Stuart Myers. Anyone know Stuart Myers? He wrote the book on corporate finance in 1988. And so I went back and I looked at the book and I said, okay, what were the contents? And for all of you, I broke it down. There are 3 major areas, something like 18 chapters: valuation and options, capital deployment and structure, and corporate governance. 1988. I think there's on something like the 11th edition, no mention of Bitcoin. These are the summary topics in that book. And as you go through each of these, bonds, secure debt, asset-backed loans, stocks, equities, volatility, the options market, investments, NPV, which I'll talk about a little bit, capital deployment, right? That's actually meant to be DCF, discount rates, debt financing, equity financing, and go on and on. Investor relations, 8Ks, 10Qs, regulatory affairs, securities, commodity, every single topic in here affects or is affected by Bitcoin. Not one topic needs to be ignored. Every single topic in corporate finance today needs to be rewritten. And so for Bitcoin treasury companies to work, we need to educate the world as to what are the KPIs and what are the metrics. And that's the framework that we really put out last Thursday, and one that I'm going to talk about today, right? And I'll put this into sort of 3 broad categories. BTC KPIs. This one, a lot of you are fairly familiar with. Bitcoin yield, BTC yield, BTC gain, BTC dollar gain, right? As potentially a reasonable substitution for something like diluted earnings per share. The second topic is newer, we introduced last Thursday, is BTC valuation. Think about this as any valuation you might do, right? You might say, hey, I'm going to buy that piece of property, buy some software, make an acquisition, capital allocation. You need to do a valuation. A lot of you do discounted cash flows, right? Perhaps we want to issue an asset-backed security, or Bitcoin-backed security. We need to do a valuation. And the third category is BTC credit, right? And you've heard us talk fairly passionately about the fact that the credit markets today don't value BTC, don't value Bitcoin, and so we need to create a model for that. So think of that as sort of the 3 sort of pillars of the framework that need to be created for the world of corporate finance to work correctly on a go-forward basis, right? So first, let's talk about the BTC standard KPIs, right? BTC yield, BTC gain, BTC dollar gain. And the easiest way to think about this, as I mentioned, is an analogy to diluted earnings per share. What earnings are you providing? What income are you providing to your end shareholder without dilution? And we created some BTC standard metrics, right, that go along with those KPIs. BTC NAV, MNAV. We didn't create MNAV. One of you out there created MNAV, put it on X, and we're like, we like that one. So we started using MNAV, BTC premium, capital spread, and parity. And so what do we do? Let's first talk about why are these KPIs? Why are they important? Ultimately, it would be nice if they became GAAP, metrics. It'd be nice if it was something that we could report on our earnings statement as we file our quarterly filings. It might be nice as something that you all be able to do too, right? Because if they're considered GAAP metrics, then we can stick them to our earnings report, right? And then Wall Street Journal can get some AI to write some article 5 minutes later that said MicroStrategy created 15% BTC yield achieved 13.7% BTC yield in the first quarter of 2025, and they're basically at 90% of what they had targeted. That would be a much more accurate representation of the progress of the company. Or even better, even juicier, they created $5.8 billion in BTC dollar gain, right? And that could be a net income number, as an example, right? That would be much more realistic and much more true about the performance of the company. And what we would encourage is for BTC companies out there, do that. On a quarterly basis, state what your BTC yield is, what your BTC dollar gain is, et cetera, et cetera. And perhaps you might want to actually give guidance, right? We can't use the word guidance today. We use the word target because the word guidance means that we're talking about a gap metric. We're talking about a KPI, which is why we say target. And we updated our target at the end of each quarter. I encourage you, as you get more mature as a BTC company, to do something similar. And you could also use this to compare performance of different products. Right? So imagine if you were a company that had multiple product lines. Right? You're a technology company that sold both software and hardware. You could then say which segment of your business is doing well, which isn't. Right? We offer Bitcoin-backed securities, right? MSTR, convertible notes, strife, and it allows you to have the relative performance at a point-in-time comparison of our different products, if you will. Right? And let's go a step further, and I talked about this yesterday, and you hear us talk about this passionately. What's great about having these KPIs is we can start to provide them and report on them, not just quarterly, but imagine if you were to do it more frequently than that. In our case, we created a site. You might want to do so too. Right? And I know there are other folks who have created sites that aggregate some of these KPIs, which I think is awesome. And we update ours every 15 seconds. The difference between updating something every 15 seconds versus every 90 days is 500,000x more transparency to our shareholders. And that's why this is important. Of course, you've never really had an opportunity in the past to make an investment in a project that literally 15 seconds later, you can let everyone know what the return on that investment was, right? You buy a property, you buy a piece of software, and that return on investment that you're getting might take 5 years, it might take 3 years, it might take 1 year to prove. Here you can prove it right away. And that's the power of BTC as a treasury standard. We also decide every week to publish an 8K with our acquisitions, and associated with those acquisitions, we provide the BTC yield and the BTC gain, right? And some folks are like, well, why don't you provide it more often? Because we don't want to, because it'll give you probably a little bit more insight than we want on sort of what our activities are in terms of ATM issuance, more insight in sort of how we buy our Bitcoin, right? But we think weekly is pretty good, right? We debated, should it be every 2 weeks, should it be every week? And maybe for your company, if you're not purchasing as often, it's when you make acquisitions, right? But that makes sense. Update your KPIs, you know, on whatever frequency makes sense for your company, right? So now let's talk about BTC valuation. And this is where I'm going to go a little bit deeper here and talk about how we value our different offerings and our different instruments. And also I want to talk about how we think about issuing equity and the dilution impacts of that versus issuing bonds and the less dilutive impacts of that, right? So first, valuations in general can help you make a capital allocation decision. It's very simple, right? Like if you sit at home and you decide, hey, I'm going to buy a house, or I'm going to buy a Lamborghini, or I'm going to buy Bitcoin, you do a valuation. And hopefully all you in here decide, I'm going to buy Bitcoin, right? Or even better yet, take your house, get a mortgage, buy Bitcoin.
It's a Toyota
These
car.
are all decisions you're making based off of a valuation. And some of you just do it in your head. Some of you create a spreadsheet and you say, well, that house is going to appreciate, that Lamborghini is going to depreciate, and the Bitcoin's going to go like this. It's an obvious, you maybe look it out 10, 15, 20 years. It's the same thing we do. We decide whether to issue equity or a convertible note or a preferred note or whatever else we might do. We run a spreadsheet valuation exercise. Right? And some of it we do in our heads and we put on a spreadsheet. We want to share with you how to think about that. And to do so, you can't just use BTC yield, BTC gain, BTC dollar gain. You have to use valuation metrics. And as you know, the traditional valuation metrics don't work, which is why we created some new ones. BTC dollar income, BTC value, and BTC torque. So let's think about this a little bit. And I think the numbers are a little bit wonky on this slide, but we can sort of work with this. First thing, what happens if we issue $100 million of equity, right? What happens if strategy issues $100 million of equity? Well, of course, like any valuation model, you first have to take some assumptions, right? And in a traditional valuation, you might make an assumption of, okay, I am going to create a new product. It's going to generate a certain amount of income over time. It's going to generate a certain amount of profits over time. Revenue minus cost profits, right? Same concept that you might want to do with BTC, right? So that's the first thing you want to think about. And we start with BTC dollar gain, right? And so you want to think about what is the appreciation on BTC? What is the BTC ARR? Right? In this case, we said, let's take 30%. Now, somebody might say, wow, you guys are crazy, 30% is really, really low. You should be going with 50%. Right? That's just an input assumption. Just like if you're creating a model, I'm going to sell a product, and I think I'm going to be able to sell this much or this much or this much. You might create a sensitivity on some of the analysis, or this is the profits, create a sensitivity. Okay, so you plug in whether you think it's 30% or 50% or 10%. Right? So that's one pretty important assumption. Right? The other input is what is the MNAV, right? What is the premium to net asset value that the company currently has when it issues stock? We just went with 2x in this case. And as you know, if you issue $100 million of equity, if we issue $100 million of equity and an MNAV of 2x, that basically means there's $15 million of equity dilution to our shareholders and $50 million of BTC gain. Right, that's where you hear Mike saying, I sell $1 for $2. That's what essentially we're saying we're doing for our shareholders. We're taking $1, we're producing $2 because we're priced currently of an MNAV of 2. And so you can imagine if the MNAV is higher, you're getting more BTC dollar gain, right? And so in year 0, what do we get? We get $50 million of BTC dollar gain. And then we have the $50 million of base Bitcoin that we're also buying, but that's dilutive. $50 million that's non-dilutive. This is such a simple concept, but when people talk about the dilution effect of what we're doing, it's not the $100 million. It's $50 million. And it's not a leap of faith. It's not a bad assumption. It's not funny math. It's just the truth.
Put money in there.
Finance guys, you agree with me? All right.
Interesting.
So you have to start with that. Okay. I'm glad you didn't say no. All right. So then any appreciation on the dilutive effect, that bottom white bar, right, is dilutive to the company, dilutive to the shareholders. Still good because you're getting 30% appreciation on it if that's your assumption, and you create $690 million in year 10 based on the 30% increase, right? The next piece is the $50 million BTC gain, which is static over the course of 10 years. And the final part, the yellow bar, is the income we make on top of that. The 30% appreciation is the money we're making as a company, right? It's the profits that we're taking. And so that's the BTC income, and that's the yellow bar.
Paying off
if you add
debt's
the
the
income
move.
and the gain, right, the 639 plus the 50 million, now you have what we call BTC value.
You know,
Okay, the math is
buying
actually relatively
shares
simple,
is
but it's
cool,
good to
but
sort of show how this plays out.
not when you're in debt. You
Now,
gotta
what's
be able
BTC torque?
to hold those shares
Right, think of
indefinitely.
maybe a return on an invested capital, perhaps, right? And that's 6.9x, right? So what are we taking there? We're taking the BTC dollar value, the $689 million that over 10 years we created that is non-dilutive to our
That will
shareholders.
be gone after next check. Let's go.
And we divide it by the
Fire,
$100
bro.
million
Hell yeah.
of investment. 6.9x, right? Which is pretty extraordinary that over 10 years,
Loan on a car
we
that
can
broke
provide
down, they got another
6.9x of
Loan
torque
for it, still
value
owed on the
to a
wall.
$100 million
One, She
investment.
rolled it in one
Right?
loan.
Generally speaking,
They never
if someone
sold it.
says, I'm going to give you $100 million and you
That's
can
weird.
invest it, in 9 years, you can return 6.9x on that. 6.9x return on invested capital. That's pretty darn good. You should be happy with that. So that's it. That's pretty much how this looks.
Paying like $500
And that's the
to
model.
just sit in an account.
And then we say,
That's
okay,
weird. Very weird. Oh well. I mean, I bet it's sick for
somebody
her.
help me with the clicker, please. There we go. Then we say, okay, let's take some of our other instruments.
Sounds cool.
Right, and what does that look like? Our convertible debt would be the next thing, right? And as you get less and less dilutive, right, a convertible bond at $100 million is inherently less dilutive, right, because we pay a coupon on that. We pay a little bit of interest on it, and so we don't have to convert it to as much equity, and so that's going to be less dilutive, right? Of your $100 million, $36 million of equity dilution, $64 million of BTC gain. That's beautiful. Why wouldn't you do that every day of the week?
What's up, Tricky
I'll
One?
tell you that
How
later.
you doing, bro?
Right. But you get a BTC torque of 8.9x, right? Creating a little bit more value. And so we sat around, and you heard the story. Mike asked the AI, well, how can they get even more BTC torque? Well, you try to do things that are even less dilutive. Strike being the next thing, right? Strike is less dilutive in that the conversion premium is much higher, right? It's further out, and the coupon that we have to pay is there, and that's dilutive because we have to pay for that coupon using our ATM, right? But on $100 million of strike, it's $20 million of gain, right? Or sorry, $20 million of equity dilution and $80 million of gain. And over the course of 10 years, now we're talking about 10.4x. You guys are getting excited now, like 6.9, you're like, yeah, that's good. 10.4x BTC torque. And the last thing we did is we issued Strife. And now you're saying, oh my goodness, this BTC gain, dollar gain, is infinite because there is no equity dilution to our shareholders, right? It's a perpetual preferred offering that has zero equity component to it. It's pure debt, right? Over the course of time, we have to pay a coupon on that, and you see that, right, in the white there. But for the most part, it's better, right? It's better from a BTC torque perspective, 12.8, almost twice what you saw by issuing equity at a 2x MNAV. Now, of course, you look at all this and you say to yourself, man, why aren't you guys just doing Strife, Strife, Strife? And are you guys crazy? Why do you even issue any equity whatsoever? I hear that. Some of you NX are saying that. Like, it's like, it makes no sense for folks to issue equity then, right? But of course, it does make sense because to be able to issue debt,
Screw that.
right?
Just get a Chase Freedom or something with
look
a
at our debt
sign-on bonus.
to equity. Look at our leverage.
I feel like that's
And so to be able to issue more debt,
Get
we
something
have
that'll
to have
actually
more
make you
equity
money.
available. That's one
waste your
reason
time
why
with a fucking
you can't just look at BTC
Robinhood or
alone by
GameStop
itself,
card.
right?
Like,
Now
get one with a
here's an
sign-up
interesting view,
bonus.
right? It says if you have 1x MNAV, if basically strategy's valuation,
graduated high school. so
market
it's not bright as
valuation
gold.
was $53
Really?
million instead of 106 or $53 billion.
That's wild.
Instead of $106 billion. If you had 1x
Good thing she has you,
then
my
every
friend.
dollar of equity we
Good
issue
thing she has you.
is dilutive because we're not getting any gain on that. And so you could go a step further and say that at 1x MNAV, it makes even more sense to issue debt, right? In fact, the further to the right we go, Strife, then Strike, then convertible notes, and MicroStrategy, the better it is to issue debt. The lower the MNAV, the better it is to issue debt, right? 2x MNAV, it gets a little bit better. The comparison gets a little bit better. 3x, even better. And so as our MNAV increases, it makes more and more sense to issue equity because the difference in the BTC torque starts to compress, right? And so that's why, for us, creating a higher MNAV for all the reasons we talked about last week is important.
I don't
not
know
just
when
to
the
the
Fed
equity,
meeting is.
but to the
Probably
debt.
in like 2 hours or something.
Right. I'm going to skip this multiple
2
stuff.
or 3 hours.
And you see this in a BTC yield
Yeah,
curve.
probably like 2 hours.
Right? And what happens in this particular curve is you see that the yield you get on your Bitcoin starts to compress and look more similar at higher levels of MNAV, right? And the next slide does an even better job of showing this, is the BTC spread, and that's the percent of capital that we raise that results in BTC gain, starts to compress at higher MNAVs. So you would make an argument that at a 1x MNAV, you really want to issue as much debt as possible. And as it starts to compress, it makes more and more sense to issue more strike, more equity, right? So we're starting to say, okay, number one, right, like on a BTC torque perspective, less dilutive instruments are better. Number two, as MNAV increases, that benefit of less dilutive instruments starts to decrease. And now here's the number three thing, right? Like, what is the BTC hurdle rate? What is the ARR that's required to generate positive income over 10 years? So this starts to tell you the opposite story. Because debt instruments have a coupon, you actually have to pay out every year, where equity we don't. You need a higher ARR on Bitcoin to support those debt instruments, right? So all of a sudden, it's not so obvious that issuing debt is better than equity in a scenario where you think BTC ARR may not go up as much, right? Last piece, two more metrics. BTC break-even price.
I mean, we already kind of
BTC
watched this.
break-even
If you
rate.
guys were here for
This is the
when we
price
watched
at
the
which
strategy earnings call.
Bitcoin
So
has to get
we
to
pretty much already know all this.
for us to generate positive BTC value over 10 years. Think of it another way. I'll say it more simply. This is the price that Bitcoin would have to get to for $100 million of equity issuance to work. And it's pretty extraordinary when you think about it. At 2x MNAV, BTC can be cut essentially in half. It makes sort of sense. Before, that's a bad decision to issue equity. When we get to 5x MNAV, we could withstand BTC going from $95,000 to $19,000 before that's a bad decision. Now you go to the other side, on the debt side, you look at something like Strife. Strife is not dilutive, not at all dependent on Bitcoin price, so it doesn't really matter what BTC price approaches, right? And has to be $95,000. If BTC price, Bitcoin price goes down, all of a sudden, Strife is not such a good instrument, okay? So now I've talked through three things that, if it was a single variable decision, you would all know exactly what we're doing, when we're doing it, and why we're doing it. But there's at least three interesting components here, right? BTC torque, the return on invested capital, favors the less dilutive instruments, right? Debt instruments, right? BTC break-even price and BTC break-even rate favors the more dilutive instruments as MNAV goes up. And the final component to all of this is the more equity we have, the more Bitcoin NAV we have, the better the pricing on our debt, right? Because it lowers our debt, our leverage ratio, our debt to equity ratio, or our debt to Bitcoin ratio. So those are the three sort of things we think about. And now you can't really take that and say, I know exactly what strategy is going to do tomorrow, right? But you can take that and help understand how we think about valuations, right? And I would encourage, right, as some of you are BTC, Bitcoin treasury companies out there, to start to adopt this, just like you adopted the BTC KPIs, right? Because I think these valuation frameworks are quite essential in your decision making as you decide what to do next, right? And this doesn't just apply to if you're solely a Bitcoin treasury company and only hold Bitcoin, but if you're a miner and you have to make a decision between whether you buy Bitcoin or you invest in mining equipment, if you're a medical company and you have to make a decision between your next new product or whether you're going to invest in Bitcoin through an ATM or Bitcoin through some debt offering, a convertible note, et cetera, it helps you drive some of these decisions, okay? You guys still with me? All right. I'm going to skip some of this stuff because it's good, but it's a lot. All right, so let's talk about credit. So we've talked about Bitcoin KPIs.
It's crazy how there's
BTC.
nobody
I
in
keep
this
saying
stream
Bitcoin.
anymore.
I mean to say BTC because
I guess we really
Bitcoin treasury
clapped all the
company.
trolls.
It's confusing for everybody.
That shit's
it's like
funny,
strategy
bro.
versus MicroStrategy. So we talked about BTC KPIs. We talked about BTC valuation. Now let's talk about the credit side of the world, right? And this is an area that really just needs fixing, right? You heard our plea last week. We want to access a market that's 2.6 times the equities market, which is the bond market. I met a gentleman in the bathroom earlier today.
Kinda
and
nice.
He was like,
Honestly, it's kind of nice.
and no, it's not awkward to meet people in the bathroom.
It's
I
good
think
to
it's
see the
totally
real
fine.
number, you know? I always had a
hey,
feeling
you know,
that
nice to meet you.
a lot
I
of
help
those
manage
viewers weren't real
people's
people.
retirement savings.
So it's nice to see the
Do
real
you have an
number.
instrument for me? And I was like, yes, we have an instrument for you. Right? Like if you have $2 million in retirement savings and you're 70 years old and you want to take $1 million of that and put it in Bitcoin, right? But you never sell your Bitcoin, right? So you have to get earnings and income somehow. My suggestion is you take the other $1 million and put it into some sort of a bond, right? And today, like a bond that provides income, fixed income, right? And so if you have $1 million and you are happy with living off of 100K a year, you can put it into something that earns 10%. Guess what your options are to get a bond that earns 10%? There are very, very, very few.
Nah, somebody just had a view bot or something.
Some preferred instruments get you 8, 9%,
Or
but they have a duration.
GameStop has been
Call
dropping, so
3, 4, 5
maybe
years.
people lost faith.
Right? And they have risks associated.
People's minds change
Strife
that quick when it comes to
is a
investing.
perpetual
They're all
preferred bond
bullish. They think it's
that gives
going
you
to
access
the
to
moon.
Bitcoin if you believe
Then
in
it
Bitcoin.
drops.
And
I
at
mean, you've seen
10%
it in
forever
here.
dividend.
You remember when we were back at
So
$20?
you can take
A lot of people
that
were like
$1 million and earn $100,000
pretty
a year
upset about it.
and live a
So who knows?
okay life.
Who knows? Who cares, honestly?
That's the market we
Like,
want
I
to
don't
tap.
care.
And that's why people are in this market. It looks a lot different than the equity market. And it's huge.
Maybe I pissed
By the
off
way,
a
what do
bunch of
do
people when I
right
told
now
them
with
that
They
the
usually don't buy
trolls
the
were my
preferred
bitch.
bond.
I
They
don't
might buy
know.
some
That's a
treasury
possibility.
bill,
I probably
right?
pissed
And
off
you know
some
what
people.
treasury bills are earning nowadays.
Nothing new. Nothing from
and
normal.
declining. They might buy
I don't
corporate
care
bond,
though. Like, who
right?
cares?
Or they
Like,
might, especially if they believe
If
in
nobody,
Bitcoin,
you
buy
know, if
something
nobody's
like Stripe.
talking in the chat, like
so
it
that's
doesn't
why
even
we're
matter if
interested in
they're
this
here
market.
or not. Like it just adds
Why the
viewers
market's
to the
broken.
stream. It doesn't. If nobody's
Right.
talking,
The
who
reason
cares?
the market is broken
Like you want people who
is
are actually
because
going to
for
talk
the
in the
most part,
stream
bond
anyway.
valuations do not take
know?
into account Bitcoin on your balance sheet.
So whatever the case
Like,
may be,
the ability to
whatever.
get a reasonable rate, a reasonable payment from a corporation perspective, like to pay a reasonable coupon, is all based on the valuation and the risk associated with the bond. And so we said, all right, let's start from scratch and say, how would you create a credit analysis using Bitcoin for BTC companies? And the first thing we say is, and this is very normal in sort of a credit analysis world, is what is the likelihood that you will become under collateralized over a period of time? And we said for simple starting base, what is the likely you'll be under collateralized in 1 year? So if you have a $1 million loan, you have $1 million of assets, you're 1-for-1 collateralized. Everyone's happy. It's like anything bad happens, you take your $1 million of assets, you pay off your $1 million loan. That's a good outcome, good scenario. Your risk is reasonable, right? So we said, what is that potential scenario? And we said, okay, let's take our earliest duration, right, notes, and our most senior notes, which are our 2028 converts. And we go and stack them one by one all the way down. 2028 converts, 2029. Our convertibles are more senior than our preferred notes. So you put Strife and Strike below that. And what you start to see as we do this is the first note that's due in 2028. We have $52 billion, $53 billion. Actually, it's higher today. Anyone checking the Bitcoin price today at all? No one? It's higher. So we have more than now $53 billion.
Don't get
of
clapped,
Bitcoin.
Matt.
On a $1 billion
Don't be getting
bond.
clapped.
Very simple. The BTC rating is the amount of Bitcoin net asset value we have divided by the $1 billion. Okay? And then we start to stack that in a cumulative order. You see cumulative notional. And we say, as you go down the seniority list, the BTC rating gets lower and lower, all the way to the point of strike, where for a cumulative roughly $10 billion on a $53 billion asset value of Bitcoin, the BTC rating is 5.3x. Okay? So that's sort of step one. Let's think about a way to think about the risk in 1 year of not being able to cover your Bitcoin. Right? And that's the BTC rating. And in the BTC risk, we say, what, based on a 50% BTC volatility, and this is just math, and a 0% BTC ARR, what is the actual risk of that happening? What is the actual risk in a 1-year period that we would be under collateralized, right? And the first step is for our 2028s, right? Where what is the risk that the $53 billion becomes $1 billion in a 1-year duration? It's zero. It's not going to happen, right? And you go down and down and down that stack. And now we have a rating, the amount of over-collateralization, and the amount of risk, which is the risk that we will be under-collateralized, right? So those two are fairly easy things to do mathematically. And then we say, what is the credit spread associated with that risk? And the credit spread is important because that's how these instruments get priced by the market. They look at the credit spread. And the credit spread is a more complex piece of math. We do the math between like these two, right? And then we let AI do everything in between. And it calculates what the credit spreads are. And this is why this is important as you look at this, is the entire dislocation between the calculated credit spread, the price at which we should be pricing these bonds if all else was efficient, and the price we're getting, right? And of course, now you're like, hey, okay, I remember that conversation about the equity ATM. If we issue more equity, the BTC rating gets better as we buy more Bitcoin. The BTC risk goes down, right? The BTC credit goes down, and we pay less on these bonds as we issue more. That's why it's important that we keep building up our equity, right? So folks are like, okay, what about the dilution effect? It's also about what do you get priced, what do you pay for your debt? Those are two very important components. What do we pay for our debt, which is a reason why the equity is important, and are not covered in any of the BTC valuation KPIs. And of course, you look now, if you believe that Bitcoin is going to go up further than 0% per year, 30%, and keep the BTC volatility at 50, then all of a sudden you see the numbers getting even better, right? In this particular case, if you believe that BTC is going to go up 30% a year, which is generally worse than what we've seen historically, right? Then the BTC risk goes down to 1%, right? On our most junior note, which is strike. And the credit on that is 13 basis points compared to a market credit spread of 700 basis points. And so we're paying a 687 basis point premium because corporate finance does not teach people about Bitcoin, and the debt markets don't understand Bitcoin. And so that's why we had a call of action last week that all of you, if you want this market to really work, right, it's not just about the equity, it's about the debt too, and why you all need to go help us teach the markets, the debt markets especially. Remember, $300 trillion debt market, 2.6 times bigger than the equity market. Why this matters. And we've tried it. They are a tough nut to crack, the debt markets. These are not folks that want to say, hey, tell me about Bitcoin, right? They don't like talking about, things that have high volatility. They don't like talking about things that have 30, 40, 50% ARR, right? So, sorry, go back here. So that's the 30% ARR scenario. Now, we said, all right, what happens in different ARR scenarios, 0, 10, 20, 30, to the different credit spreads, right? You'll see here, as it makes sense, right? As the ARR assumption gets higher, all of our bonds, all of our notes get less risky, right? Makes sense. And if you take a bigger look at this, you're like, okay, I don't really know, what does a 0% credit spread really mean? Right? What does a 10% credit spread really mean? Or 10 basis point credit spread? What is a 1,000 point credit spread? I'm sure most of you aren't waking up every morning thinking about credit spreads, right? The simplest thing to look at is what's in green here basically means your investment grade, right? So a BTC risk of less than 1%, right? Less than 1% being under collateralized on your loan means you're investment grade, right? Means that is something that somebody could go recommend most people invest in, even with your retirement savings, right? And as you get up to this red area, then you get to a place where you're junk grade, 3.8%. I never liked the term junk. I'm sure some really creative, debt person invented it. It's not bad necessarily. It's just your chance of being under collateralized grows. Okay. There's a lot more in here about credit comparisons, but I think you sort of get the point, right? Which is there is a dislocation in the bond market today. It's good that you do your own work, right? Don't let the rating agencies
watching
just do the
Pokemon,
work,
like the OG,
right? Understand what a bond is worth.
OG Pokemon,
And no one
bro.
provided the
That
model.
shit is fire.
Okay.
It's a good ass story right there.
What I'll note here is BTC volatility is going down over time, right? And even though you've heard the term volatility is vitality, in the debt markets, volatility is risk. And as Bitcoin, as an asset class, grows from 2 trillion to 3 trillion to 4 trillion, by nature, its volatility will go down over time. As its volatility goes down over time, what you'll find is the investability of the bonds that are backed on Bitcoin will go up over time. And so that's what we show here. Here is a $95,000 Bitcoin price and a 50% volatility. You see that, what is sort of junk grade in that red zone at a 0% ARR is pretty high, right? And as we see over time, as volatility changes, right, which is what you see in these lines here, the likelihood that Bitcoin-based bonds sort of enter into that junk range gets lower and lower. Okay? The last thing I'll talk through, and I'll try to summarize this, is these three things work together, right? Like in sort of all of corporate finance, right, you need to understand your point-in-time KPIs, right? Valuations and decisions to make investments, and valuations and decisions to take on debt, right? True in personal finance, right? How much money did you make this year? What are you going to buy next year? And what are you going to borrow, right? As it is in corporate finance. We're going to, over the course of the next few months, publish a BTC standard model. Like we did last year, we published a Bitcoin model in 2024. We're going to publish a model and open source it and share it on GitHub and other places so that you all, if you're interested in understanding how strategy thinks about our investment decisions, you can start to build your own strategy models. But more importantly, as other companies adopt a BTC standard, they can start to have models and tools too. And we are extremely appreciative and understand the responsibility of being the first and largest Bitcoin treasury company when we see companies adopt some of the BTC KPIs that we've established. Metaplanet, who you heard from yesterday, Cooler, who you heard from yesterday. And so that's the reason we want to publish this model, is so other companies can start to adopt it like they did the BTC KPIs. And probably most important for all of you is we need to educate folks, right? The Principles of Corporate Finance, written in 1988 by Stuart Myers, needs to be updated. And it needs to be merged with the Bitcoin standard, as written in 2018. We need a book on the BTC standard, right? We're writing the book as we go along. I think it's going to be the book that people will read and teach 20, 30 years from now. And it's exciting to be sitting here talking about the future of finance. So thank you very much.
That you've made earnings calls a must-watch TV now for strategy. It is time for lunch, so I hope you will join us this afternoon
this is
for
why I
an
didn't go to the
exciting
gym. I knew they were gonna
lineup
do
of
this.
more panels, speakers, CEOs of publicly listed companies that have adopted the Bitcoin Treasury strategy. So please enjoy your time. Thank you so much again to Strategy as well as the sponsors. Thank you.
I'm not trolling the Bitcoin chat. I'm trying to get viewers to come to my stream. It's called marketing, my friend. It's called marketing. Nobody in my chat's fucking talking, so I gotta bring new people to the chat. There's some dude in there who was supposedly a GameStop investor, and he's like calling me a bag holder and shit, and I was just laughing. I'm like, I'll see you in the live stream when you FOMO in. People are so fucking stupid, dude. It's unbelievable. Like, people are too focused on dollars. That's all they care about. Well, NSTR's up 30% and GameStop's down 20. It's like, what? You're focused on like 20%? I'm looking for a 10, 20, 100x in the future. You're worried about 20%, 30%? Man, we're not in the same wavelength, my friend. We're not even in the same realm. You care too much about stupid things. 20%? Boring. Boring. Doubling your money? Boring. That's boring, alright? I don't care about doubling my money. I've already doubled my money. If I cared about doubling, I would have sold the stock a long time ago. I've already doubled my money. That's crazy, bro. Those crypto people are funny, bro. Every single person in that crypto chat, like, not every single person, but a majority of them, their response is always, why hasn't Ryan Cohen announced anything? When is Ryan Cohen gonna announce? I'm not gonna buy until Ryan Cohen announces. Ryan Cohen's not gonna buy Bitcoin. He would have announced it already. I'm like, bro, those people in that chat make me so fucking bullish on GameStop. I'm like, bro, when all these fucking when they announce Bitcoin and all these fucking idiots pile into the stock, God is good, baby. God is good, bro. I can't wait for it. I can't wait. I can't wait. It makes me so bullish watching, like, normies talk about GameStop. I guess not normies, fucking crypto bros, I guess. Like, crypto bros make me so bullish because they're so... It's because they don't know shit about the stock market. Crypto bros don't really know fucking anything about stocks. So it's just... yeah. It's funny to see their perspectives. They have to have their little handheld. It's like, come on, little baby. Come on. Come to the Bitcoin. You think if you didn't talk about GME and talk about other tickers, more people would be here? Is GME hated? No, I think I'm hated because I'm an asshole. If I'm being 100% honest, I think I'm hated. Like, straight up, I think I'm hated. But I also think a lot of people who talk about GameStop and whatever, I think they're not real investors. And if they are, they have like a few shares. Like, I don't think people are as invested in GameStop as I am, unless they're like rich. And even then, like, I just don't think people are as invested as they say they are. Or whatever. Like, I just don't know. I think a lot of people post about GameStop because it gets clicks. And why would you invest into something risky when you can just, get clicks for free, basically? You know? And I'm just building it up, bro. I'm just building it up. If GameStop actually goes one day, guess who everyone's gonna think about? I mean, they're gonna think about Roaring Kitty, of course, but anyone I've interacted with, and they didn't think I was like, they think I'm crazy or something. If it happens, they'll remember. They'll remember who told them, Remember this conversation. Remember it. Remember this conversation. I love that shit. I love that chat. That shit's funny. You ever heard of a guy, Catfish Tyler? Did a live streaming, be like, that dude, he's a SoFi nut, but he'd been on this thing where he's starting with 10K and see how it goes. I don't tune in daily, just every now and then. And I don't. People who do that, they do that because they don't have, like, I don't know. People who do those small account videos, I don't care. I'm not a trader, bro. I mean, I am a trader. If I wanted to trade, I would trade, but I don't care about getting views, bro. I don't care what people think. I get on this stream every day because I want to get on this stream and because I'm on my computer anyway, literally doing this. Like, this is what I do every single day. He's rich, has 500K in SoFi. If he's actually rich, he shouldn't be doing a 10K account. I don't know. Maybe he is, but I don't know. I don't trust anyone who says they have money because they're trying to sell you something 99% of the time. But yeah. I don't care about views. I don't care. I literally don't care. I live stream because I want to live stream. If people want to, you know, most people only care about these little dollar whatever, like all they care about is trading. All they want to do is make quick money. But when GameStop works out here in the future, if I hate saying when, if it works out, you know, I'll be here. He shows it all stream daily. I mean, anyone can post an account that has money in it. You know, I don't know. We can look them up. But I don't watch other traders. Like, I don't give a shit what other people are doing in the stock market, you know? Like, I literally don't. I've seen too much, bro. I've been in this game. I've been fucking live streaming and talking about the stock market and for years. I've been in this game for years. I've been in this game for years. It made me an animal. There's rules to this shit. I wrote me a manual, a step-by-step booklet for you to get your game on track, not your wig pushed back. Rule nombre uno. Never let no one know how much dough you hold, 'cause you know... I mean, I broke that rule, but... the jealousy... Oh, man. Get your ass stuck up. Rule number 2. Never let them know your next move. Don't you know bad boys move in silence and violence? Leave it to your highness. I done seen mad kids. I don't know. I forgot. Loading clips and shit. I don't know. I forget. He literally does do the same live stream as me. That's kind of funny. I mean, sort of. It looks like he does a lot more trading stuff, but... What do you mean this guy has 500k in SoFi? He literally has, like, nothing in SoFi. Like, it's literally right here in front of my face. Oh, this is the 10k account. Bro, Muma. This is a simulated trading. You can see it in the top corner, bro. This isn't even a real account. Bro. It's not even a real account, bro. This is what, bro. Come on, Muma. Trolling me, bro. You're trolling me. I don't know if you noticed that, but this is not real money. This is a fake fucking account. So, there you go. That's why I don't watch people on YouTube, because nobody is real. It literally says in the top corner, simulated trading. So, if that guy has 500k, I don't believe that guy has 500k. You're not doing a fucking simulated trading if you have $500,000. I'm sorry. That guy's full of fucking shit. I'm sorry. That guy's full of shit. Maybe he does have 500k, but I fucking doubt it. You're not doing a simulated trading account if you have $500,000. No fucking way. No way. Let's go back there for a second. Let's go to the description. Let's go to the description. Merchandise, Telegram Club. I don't know what that is. I'm surprised he doesn't have a Discord and a course, and yeah. That's ridiculous. That's ridiculous that you even sent me there. I'm sorry. I'm sorry. That's crazy, bro. You can't learn from people who don't risk their own money. Unfortunately. Sorry to say. You can't. $1:30 p.m. Eastern time? What time is that? Like 11? So I could go to the gym for an hour? An hour's not really long enough. Well, I mean, I could, like, not go to the sauna. I don't think I would do cardio. I just want to go do biceps. I think I could bang out biceps in, like, less than an hour and then come back. I think I'm going to go to the gym. I think I'm going to go hit biceps real quick. I want to go to the sauna, too, though. I guess I'll throw Roaring Kitty. I mean, it's gonna suck if this starts, but I should be back pretty quick. Let's see. It's gonna take me like 30-40 minutes to do biceps. I'm not gonna do cardio. Sauna is gonna be like 20 minutes. So yeah, I should be back in time. So I'll be back here in like an hour. I appreciate you guys supporting the stream as always. I'm not gonna end it. I'll just throw up Roaring Kitty or something. Roaring Kitterton. So yeah, I'll be back. Which one do you guys want to watch? I don't even know. We just do another random. All right, this one, I guess.
Cheers, everybody! Happy Friday! What up? What? Happy end of election week, right? Although it's not even really over yet, so I don't even know if this
I'll be in the chat if you guys need anything.
I don't even know if this counts as election stuff, but I had to. Plus, check this shit out, huh? And well, it's after hours right now. I don't know if really that counts, but we're above $12 right now, huh? But I was saying this was a good week for GameStop, right? I think it was there wasn't many news. I just tweeted this out earlier, right? There wasn't much news on the GameStop front, right? There was some other news, things like Nintendo news and so forth. But as far as the chart goes, I feel like for me that was the big news this week. Right here, I just tweeted that. I mean, there's a couple of oh shit. So I didn't even see. Oh shit, you can't even. It's blocking the damn screen. Oh, well, I have to take that down. Welcome, everybody. Who do we got? Oh, just a couple. Daily, Hugo, what up, everybody? Daily, Hugo, Steve, Super Zazie, Rod, Rob, Jorge, Hugo, what up, what up? The headbands, I know, right? I've been getting them all over. I think a lot of them just come from Amazon, you know what I mean? I can't even, I have to take these off. I can barely see in this shit. But yeah, I thought this was a constructive. Hey, Markel, what up, Markel? Happy Friday, everybody. I thought this was a constructive week on the chart. And I was saying, I just tweeted this out, but this is, I feel as though this was an important week. We got, with the consoles coming out next week, had a bit of a sell-off last week. A relatively strong sell-off relative to how it had been up for the past couple of weeks and months. And so it was very, like I said last Friday, I'm sure I did. It's gonna be really important to watch what GameStop does this week. And of course, we're going into the election, pre-election, during election, after the election. And look at this, up, 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 up. It's just 1 week and just a couple of days. But like I said, look, it's back in that box. You know what I mean? Like I was, it's right back in that box. It didn't have to, but it did. And so it's just kind of holding up as I felt it would. I felt that it was heading back to that box. I kind of lightened this red box down here. It's like, that's it. Now we're new consoles next week. But so I felt as though I felt as though this was a good week. Maybe I'm a biased bull. You know what I mean? You could say that. But as far as my analysis of the chart goes, everything continues to look very good, constructive, and this is a good place to be. I mean, all else equal, you want it to be higher price, right? That goes without saying. But as far as chart goes, this is a good chart going into next week, and then we'll talk about sentiment and people. Everyone's going to be talking. The consoles are going to be front of mind. Everyone's going to be talking about that shit. So we'll just have to see what happens next week. I mean, then there's if you're bearish, there's the upside risk that GameStop has decided to announce something. We didn't get anything, right? Nothing after hours. There's the upside risk that GameStop announces something next week at the same time, right? And I was thinking about how they kind of announced some news back in September at around the time, though I think it was the same day the pre-orders were coming out or something like that, or the Cohen news came out that day. And I remember thinking, wouldn't that be something if they announced something next week, right? I have no idea, but I thought, wow, that could be even more impactful. I kept on saying, I think something was going to, if anything, it would be happened before, so I've been discounting. But geez, can you imagine if it comes out on Monday or Tuesday or any time next week, really? I feel like that could impact that could impact investors' mindset. And that's what I mean. So this is a good place. I mean, we're only, what is it? What is it for $11.80 to $15? What is that, a 25% move or something? It's really not that much. And I mean, with a stock like GameStop, it's so volatile and the short interest is so heavy. Like you can pop. That's why the Microsoft news day, it pops over 40%. Like it's just one day away from being taking out its previous highs. You know what I mean? And so going into what is this second week in November, that ain't bad. And so on the news front, there's not much. But there was a lot. That's not true. Look at how much shit I got open here, right? There's a lot of. Some of the mainstream media was picking up some stuff. So first the charts, right? Oh, let me just go through a couple of the charts. Let me just show just quickly the intraday. Intraday's boom, boom, boom. Just turning around a little bit, right? Not that meaningful, but that's stuff I'm looking at, right? Then the daily, it's the same chart, it's the same stuff. Weekly, in the box. Monthly, boom, done. Okay. And then all right. So then there was this article from Bloomberg. I think do I have it out? Is this pandemic video game boom sales? I think this might have been out a while back, but it's this one, right? It just shows you gaming is booming, right? You know what I mean? It's this stuff. Gaming is crushing. You can see some of these figures. They're expecting that the industry. This is from Newzoo, whom I quoted in one of my GameStop videos. They're expecting it to get up to 220 billion just about in a couple of years. So what I mean, thriving backdrop here for GameStop to reinvent itself. You know what I mean? That's nice for a cigar butt. You know what I mean? It's terrific. And so anyway, it's the usual stuff that a lot of us know, but I'm bringing it up because it's hitting mainstream media, right? We talked about this, that reflexivity. It's obviously been picking up past couple of months with pre-orders, and then every incremental news item or every incremental week we get closer to it. People talk about it, but I feel like there was a ton this week, right? I don't think any of them that mentioned GameStop, but that's almost it would have been nice, right? But it's not that big of a deal. It's just that gaming. Wait till people start shopping there, right? That's what I think. And then Nintendo announced this week too. I mean, look at the Switch, huh? And so I tweeted that out. The Switch is such an important console for GameStop. A lot of those folks tend to be more casual. It skews a bit physical. We saw that. I included that in one of my GameStop videos, but just crushing it. Was this year over year? Is it year over year? Yeah, year over year. Look at this. The Switch light up 100%. So this is the type of thing. I think because the new Xbox is coming out, the new Sony's coming out, I feel as though that's hard to prove. That's fair. I feel as though people are discounting the impact that Nintendo's going to have on GameStop's bottom line, including Q3, but through the next 12 months, next 4 quarters. And I think, you know what I mean? Like, I keep on thinking people are discounting how well GameStop's legacy business is going to go, how well it's going to perform. And then there's all the upside, the transforming its business and so forth. So, I mean, Nintendo, seeing these numbers were great. And then Nintendo, do I have it up? Nintendo even broke out some digital sales versus physical sales. And you could, did I have it up? I forget if I got it. Oh, right here. Is this it? Where there was still a good chunk of proportion. Is this it? Proportion of digital sales. I forget what it was. Is this it? Proportion of digital sales. I kind of forget what I was. And now I can't see through my glasses. This could be it, but I can barely see the screen. So you can't expect these to stay on here, huh? Who else we got? Salaryman, Markel, what up? Cheerio, Markel, like that. Jorge, welcome back. Kazi, Markel, and Marzenchi. Well, Marzenchi, he knows Mad TV, right? Marzenchi knows. He's doing, he looked like a man, and I'm like, start. But anyway, what I was getting at here is, we're in 2020. We're at the new consoles, and there's still people purchasing physical during this current time. But importantly, folks tend to skew physical in that first year. And who was it? In fact, I think Justin just mentioned it right here. Justin mentioned a quote. I liked a couple of things here. but saying how FIFA 21 was 50% of sales were physical, lower than the past, but it still shows the resiliency of physical. Just first 3 weeks, right? But I agree with the sentiment here. I was like, people still gonna heavily lean physical. And it's not the point to say that physical's here to stay to perpetuity, right? No one's saying that, but the consoles are here, even at a 50% physical rate for the first couple of quarters, even the first year or two. If it were 50% physical, that's where we're at. GameStop is trading at a discount to what I expect free cash flow to be at that rate. You know what I mean? I think, and I mentioned this in one of my tweets, and props to Dr. Zayas, who was talking about the fact that these latest trailing 12-month figures have been skewed a bit because it's not toward digital, because it's not so much that digital is I mean, people are more likely to download games later in the console cycle, but it's more they start purchasing fewer and fewer physical discs. But I think that's been interfering with folks' analysis of the digital physical shift mix, or however you want to call it. And I think people are going to see in 12 months, they're like, oh shit, we underestimated how well physical's doing. And again, this is that downside protection. You know what I mean? So where was I going? Okay, going Nintendo, and then I just got a couple of articles here, right? Because when Nintendo reports, we all see it, but then Bloomberg picks up the story. They get the message out there, and then I quoted too. We've all talked about this, right? But George Sherman on the last conference call talking about how GameStop gets their fair share of Nintendo Switch, right? We all knew this, right? And we don't exactly know what the figures are. That's not the point. The point is just that the Switch remains an important console for GameStop. Relative to other retailers, we're not totally sure. But it's still, they're getting their fair share. They're getting a decent allocation, and that means good news for GameStop down the line. But I think everyone just continues to discount that shit. And then what else was there? The Wall Street Journal stuff, too. I wasn't able to see this one, I don't think. Was I? Yeah, it kind of got cut off there, right? So Bloomberg picks it up. Wall Street Journal picks it up. And... the economist Pablo, who was it? Was it Pablo? Someone messaged this out to me. I forget who it was. Oh, Pablo. Yeah, Pablo. I don't know if you're on the stream. I just couldn't see this, though. He messaged us out, asking me my thoughts, but I couldn't see it. So if there was anything interesting in this, if y'all saw it, let me know. I assume it's kind of in line with some of the other stuff I was seeing, but I wasn't able to see this. So I don't know if there's anything new or anything exciting or even worth sharing in there. But another article from The Economist. These are three big media sources, you know what I mean? To help getting the word out there. Again, I don't think GameStop was mentioned in any of them, but so this one was interesting, right? I want to talk about this if people have any opinions on this stuff, right? But Best Buy won't sell next-gen consoles in store this year, like at all? Is that what's happening here? And is Walmart launched? So I knew about the launch day stuff, but is this Engadget? I don't know. Engadget. Yeah, I don't know this source all that well. Announcement. So be careful. Let's talk about this. So I'll come back to this, right? But then I was thinking the implications for GameStop, but also clearly the COVID situation is going to impact store traffic to a degree. The question is how much it would impact the GameStop type, but also how much it might impact GameStop relative to the other brick and mortar retailers too, right? And this is why it was so important, as CU was mentioned on the stream too. We're all talking about this, how important it was to get that omni-channel experience up and running, get that e-commerce cranking. I got some stuff here that Rod's been posting about too. We talked about that in the last stream, how it seems as though, based on his detective level analysis, that at least based on some of that order stuff, it looks like their e-commerce continues to crank. But and so that's critical for going into these known consoles because of this risk that everyone has been talking about. And but now my question is it going to have? But it's all relative, right? It's not all relative, right? There's some degree of absolution here, of course, because if no one's going to the stores, right, then that would be obviously a risk. That's not going to be the case. But the case is GameStop. I know that first day, but is like Best Buy not going to sell them at all this year? Is that the deal? Like I didn't see a Best Buy. Was there a Best Buy announcement? So I knew the day of type stuff, right? But I was like, whoa, that'd be something, because I mean, I think everything's going to be sold out everywhere already, right? But even still, if you know a place isn't going to have consoles, you think you might go somewhere else. But this is marginal analysis. That's how I'm thinking about this stuff. What I see here is just that COVID risk, right? And how GameStop has prepared itself. As we talked a number of times recently, how GameStop has set itself up for success here in light of this type of environment. But hey, right, Rod, nice analysis here. Rod had tracked down the fact that this is Micromania. The French, some of the French GameStop stores, but they've teamed up with, what is it, Criteo? Is it Criteo? Is that what it was pronounced? But I mean, we figured this was happening, right? But to actually find some data sources on here, and Micromania talking about the fact that it's been delivering Well, no, where's the figures? Oh, it's right here. The figures are, where is it? Can you see all that? This damn thing's in the way, huh? Where the hell was that? No, where the hell? Okay, I guess it's just this. Is this what for Micromania? 49% share of first-time online category buyers, 21%. I mean, I don't know exactly what that means, right? That's not the point. It's just the point where, hey, even they're showcasing the impact that they're having on GameStop's business. That was my take, Rod. If you had something more substantial, I'd be curious. But even still, I didn't see anything like this, so I thought that was good analysis, trying to track anything down on that front. And I saw how you would come across it, too. Props. Speaking of Rod, here we go. So, and Rod had taken a whole bunch of pictures of some new GameStop stores, huh? It's not an album, but you can see some of these. I can open them up like that, right? Nice and clean. He's got a whole bunch of them. So you can check out his Uber Kicks on StockTwits if you want to see all of the photos. Some of these look really slick, huh? And I agreed with a lot of Rod's takes on StockTwits, going through some of the stuff. I know COVID's impacting the use of some of these things. And I don't even think this one was complete, if I recall correctly what Rod had said. I personally, I like the floor. I saw people talking about, I saw the mentions of the ceiling too. I did see that. But just that layout is looking good, right? Nothing crazy in this store, but definitely like a cleaner look, like looking good. And this is the stuff they wanted to have ready to go for those new consoles. And they're next week. They're here. What's the countdown? It's days now, right? And this stuff's looking good, right? Okay, let me pick up. He's got a ton of them. So he said there was an entrance right there. Yeah, looks sick, huh? What else do I got? Nice work, Rod, huh? Some legit DD here, huh? Collectibles and stuff. Just nice and clean, right? The stuff that you'd expect retailers to be doing, right? You should have you want a place that people enjoy shopping at, right? Absolutely. What are some other stuff here? Pre-owned stuff out and about. Yep. Collectible stuff. Cool. Some of the walls, they got lots of walls and stuff. Some stuff in the cases too. Okay. Seeing a lot of items. PC stuff. Oh, sick. I missed this. Okay, he's got a photo of some of the PC stuff on the GameStop walls. Nice. Again, stuff they've been talking about, but now we're actually seeing it implemented. And again, new consoles next week. People going to be in the store. People going to be seeing this stuff even more than they currently are. More accessories. Boom. This stuff is higher margin stuff. And remember, GameStop is one of the best, has one of the best, I believe, attachment rates in the whole industry when it comes to attaching things like accessories and games and stuff to the new consoles. That's what I mean. It's important if other retailers aren't actually even selling the consoles, right? I think that might push people into some of GameStop stores, right? So that's sick. So you can check that out there. Also, you got to check Steve Stunk. Cheers, mate, huh? Steve Stunk absolutely crushing it on his GME vid memes. This is terrific. You got to check this out. He's got a new Matrix one, huh? Terrific. I told him Academy Awards, they need to create a new award for meme vids, and Steve Stunk's gonna win. You got to give it to him, Steve Stunk. I gotta up my movie poster game after this shit, huh? Terrific. Excellent work. Oh, you had fun making that one. All right, cheers. Oh, yeah, all right, Steve. I'm rolling when I'm... Because, like I say, how often are you dialed into... a lot of us are dialed into this position, right? Or dialed into the case. And so it's funny. We see tons of funny finance gifs all around, right? But when you're so dialed in, right? And then you include, like, some of the... what many people would consider esoteric information, like... There's one from last week, or a couple of days ago. Hey, Steve, you've been cranking them out, by the way. But it's was Moneyball on Wednesday. And it was something like, oh, we got the data. And they were like, data from what? Data on GameCubes? Oh, you know what I mean? Like, only people who really know the story get that. And that's why it's terrific to... it's one thing for it to be hilarious, which it is. But then when you're like getting the story, it's like you're... just like we're tweeting stuff out and trying to get the message out there, right? Like, that's like, it's just like you're sharing DD in a hilarious fashion. So I was rolling at that one. And then this one is terrific, too. It's just so fun. It's right up my alley, Steve. So not excellent work. I didn't see if SnowK88 had a new one. I didn't look. I just checked yours. I checked today. So I'm like, I got to go see. I got to go see if Steve got a new one today. And you did. I'm like, damn, he's doing work. Steve's eating. Okay, what else I got? What else I got? Well, let me see who else we got here. Let me just. I get some stuff that I liked on Seeking Alpha there too, but let me just see. I get some stuff on Twitter that I like too. There's a lot of stuff. I tried to open up most of my stuff. Here we go. Oh, we got a good crowd. 40 people, huh? Happy Friday, everyone. I hope you all had a nice week. And I hope you're amped up for new consoles. We got to see what's coming. Who else we got? Oh. Salaryman, Transient Bit, welcome. Oh, Izakazi, Markel, Marzenchi, John Realistic Bull, welcome back. I'm just drinking some beer, Jorge. I'm just drinking some brews, that's all. Oh, is it Roof? It could be, Hugo. It could be. How could I? Who knows? We'll see. Let's see how the hours progress. If I start like getting loopy and stuff, you could argue that, maybe it already is. It's already started, right? I mean, one could easily make that case. Oh, is there new short information out there? Oh, yeah. Sorry, I should have brought this up, too. Y'all talking about that short answer. So I did notice this, too, right? Oh, no, not that one. This one. So it was quite the drop down. I did notice that. It was 1 million down to 3. And that's, remember, I don't know if other people thought. They kind of seemed like it was such an aggressive sell-off that maybe some of those, at least marginal shorts may have closed. You know what I mean? So then that would have explained that, and then the rate decreasing. But look at that rate. That fee just keeps going down. So I didn't think too much about this. We say drop and borrow fee implies the shortage is being alleviated through. Yeah, but all gone. Yeah, I don't know. It's been low before. Just a reminder for folks, it's been super. Look at this. It was at 200 on November 3rd. Like, it's not just a heads up for folks to give it everything in context. Oh, from The Hangover. Yeah, here you go. Oh, shit. The other day. Okay. Cheers, Smash. Welcome, Smash. Happy Friday, mate, huh? What did the employee say when you walked around? Oh, stores look great. Okay. Actually, didn't say. Yeah. I know. Rod's like, can you move out of the way? I'm doing some serious DD here. You know what I mean? Oh, I didn't even see. Look at the Nintendo stuff in the case. Sick. Oh, nice. Yeah, that's nice. It just looks good. It'll be nice to see people playing in here too, right? And we know that they were building that social, cultural hub and stuff, and obviously COVID has caused them to pump the brakes there in a number of ways. But I think in time that'll come. So it'll be pretty cool to see people just having a fun time in the store all around, not just buying stuff. I think we get PR. Xenia, welcome, Xenia. Stuff could be huge. Can they be considered essential? So no, I know we were thinking about that. If you got the PC stuff, where's that line? You know, it was such a weird line to begin with. That who gets shut down, who doesn't? You know what I mean? So who knows? Oh, she had fun making that one, I bet. Yeah. Sick Steve. EO, welcome. I got more movie posters than Blockbuster. Oh, that's too perfect. I might have to integrate that somehow, huh? Yeah, Saucy dialed into GB. You know what I mean? That's why when you're dialed in, it's terrific when you see the GIF. I mean, I feel like the GIFs, they get like an order of magnitude funnier when you see that shit. Oh, it's so funny. Range is tight this week. Considering the range last week in console launch, was expecting more movement. Oh, I think so. I think. I mean, it was very low volume here too. What was today? Under 6. This is real low volume. Clearly, the market. People need to want to buy. You know what I mean? They need to have a reason to buy, because what usually that's what I mean. Stocks don't always just go boom, boom, boom up all the time, right? Usually they get to a new level and then people kind of just waiting for news. But this low volume is kind of indicating to me people just waiting for that next leg up or waiting for that next news item. Maybe some people thinking it sells off on the next news item, which I don't know about that. But it's just really low volume considering this adjusted float. How many shares are out there? And I think. That's why, I mean, if there's news next week, that'd be something. But without news, I continue to think that it will be low volume. I think what is it, 5 days of sub $8 million. You know what I mean? And this was around the election. There was quite a bit of volatility going around here in the market. I didn't check relative volume across a whole bunch of stocks. I didn't do that. I mean, I should have before I make statements like that. But this strikes me as super, super low. I mean, to EO's point, I mean, it is a tight range. Price-wise, it was really around that. It was real. I mean, I don't know what to say. It was right around that box area. You know what I mean? It just was. It just doesn't always work out that way, but it was right there. and it just wasn't doing much. I mean, even if it was down here, it would have been. This is the. I kind of agree with you, EO. This is a tight range, and I think people are just hanging steady into the new consoles, through the election, kind of just seeing. Let's see what happens, and yeah, I think the election was just front of mind for so many folks, right? Things like a GameStop story maybe is a bit more discounted in a week like this. I'm very curious. Like I thought last Friday, I said this week was going to be important, specifically because of the technicals, but also how it holds up through the election, right? The market, and once these marginal Momo folks and maybe technical analysts piling on to that short-term chart because everything was looking bullish, you know what I mean? Once they sell out, it was a good time for GameStop to get crushed. You know what I mean? Like if you're really bearish on GameStop and you think that a lot of this stuff is bullshit, the stock could have just kept on falling these past couple weeks. Instead, it about faced and went up through this week and never even took out those lows, right? I don't think it ever did because that was last week. Yeah, it never did. You know what I mean? Like it could have happened and it didn't happen. And now what are we at? 5 weeks in a row in double digits. Every passing week that we are in double digits, it strengthens the bullishness of the chart. That's not to say that's not a forecast. That's not a forecast as to what GameStop stock is going to do. That's not how this stuff works. It's just probabilities. In the probability in this case continues to remain bullish for my style, right? Like I say, if you have a different style and you're like a day trader type, which is not my style, you may have sold out. You may have sold out when it broke through this trend line. I mean, now the chart's getting cut off, but when sentiment started turning a bit, got oversold. You know what I mean? Maybe you cut quicker. That's not my style. This stuff is noise to me. But for my style, I see this shit and I think, damn, it's holding up. It continues to look. I feel like I'm being objective in that take. As far as my style of analysis goes, this chart continues to look good to me. Borderline great as far as a longer term, right? But not perfect, right? All else equal, you want it to be making new all-time highs, right? That stuff goes without saying. But and that's not to say what the stock price is going to do next week or hereafter, but just the backward-looking stuff, which is what this is, and it in itself is marginal analysis. As I always say, my thesis is largely based on the fundamentals, the robustness of GameStop's legacy business for the next couple of years, plus the substantial turnaround if it ever succeeds in turning this stuff around, if it kicks ass in the omni-channel front and they start leveraging that data, blah 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 blah. We all know that stuff. That's where my big thesis comes in. But this marginal stuff, this incremental stuff, I pay attention to this stuff because I'm curious about those shorter term moves and how other people are thinking about that. And I don't know what to say. If people disagree with this, let me know. But every person or analyst I come across who does disagree with me, it seems as though they are those very shorter term folks who maybe are more momentum tilt, you know what I mean? They have that style or a much shorter term time horizon. That's just not mine. And so when I see that, I think, oh, okay, well, we don't even disagree because I don't even have a strong opinion about that stuff necessarily. So I don't even know how I started down that rant. You know what I mean? I don't remember, but I just think, all right, this is holding up okay. Well, how did I go down there? Oh, the movement and stuff. All right, yeah. That line killed. Oh, which line killed? Ah, damn. Hey, Dusty, welcome back, Dusty. Nice to see you, Dusty. Oh, Rod, did you look into that? So, the question with the PR stuff, right, Rod? Okay, so Rod, did you look back to them announcing PR and stuff, right? We announced some stuff as Jordan was talking about in the last stream. What would that be? Would it just be some light stuff like, hey, the new consoles are here, we got new payment options, there's a GameStop credit card, become a part? Like, is it that type of stuff, Rod, or is there something more substantive, right? Because when we were talking about this on last stream with Jordan and Fox and you too, Rod, we were just talking through what would it consist of? Because unless it's something more than that, I don't expect something crazy. But that said, even just any PR, which I would agree with, that you'd expect something next week, that it still gets the chatter going. You know what I mean? I think we'd all agree with that. But I'd still remain. That's what I mean. The difference between $12 and $15 is like, for my style, my time horizon, blah, 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 is noise, right? And so I don't think you get anything above that 16, 17, which we've talked about a number of times, unless you get something more substantive. But that news next week itself could get to that $15, $16 range. That's not crazy to me. Yeah, okay, let me keep going. Hey, Henry, welcome. Happy Friday, Henry. Oh, shit. Okay. It popped on me, but I'm not that far behind. Sick. What time is it? 7:30? Who was it? Marzenchi was saying that. He's like, oh, who was? Yeah. Oh, no, Musical Felony was saying that. When I'm caught up within a half hour. Now, there's not as much chatter those days, right? It tends to be quieter. Yeah, I agree, Smash. Next week's going to be real interesting. Solid price action today leading into it. I mean, really, the past 2 weeks and next week. I mean, that goes for a lot of stocks, right? But specifically with GameStop, because that trend had been in track for so long, so how aggressively it got sold off, where it fell to, it only fell 30% for me. That's not that big of a deal for a stock like this. And then what it does today, does it follow through? Boom. And then what it does next week is key too, more so from that sentiment. And then if they drop news, then it's a different story, right? But more just that sentiment, that psychology aspect, right? Hey, Chris, all right. Cheers, cheers, cheers. Appreciate it. I remember I noticed. I don't think Trey was on the last stream, right? And there was way fewer likes, right? You can clearly see that stuff helps. Thank you, Chris. I appreciate that. Recapture of the 21 EMA. That was resistance all week. Nice. So, I don't even check out the EMA thing. Also, if y'all check other stuff, let me know on the technicals. Like I say, for my style of analysis, it's marginal type stuff. But I'm always curious what other people use. I'll pop it up. So I'll pop up the 21 EMA right now. For me, Rod, what I was interested in was that the $12. I wanted that. I wanted to get back in the green box, like very clearly. Sorry, not $12, just back in the box, and we're back in the box. So that was it for me. And I saw what I think someone had said. This was a Jordan. I wanted to get above this green box too, which was right at that 1180 range. It did seem like it was acting like a little bit resistance. Boom, boom. And then it went up and passed it for 115-minute period right down the next. And it never could get above it. And then it got above. Now, talk about marginal. Now, good. Oh, my, right? It's very little. But I was like, get over there. It did. We're 6 cents above it. Huh? But, 21 EMA. Let me see that. Well, let me just plot a new one. 21 EMA, huh? Wait a second. Exponential. Oh, yeah. All right. Okay. Oh, it's not that bad. Hey, for this one, it's not that bad. Look at that. Oh, okay, I like that. See what we were talking about with Joe on the channel, right? Joe on the channel was talking about how that 5-week moving average. So I tossed that in the chart, right? 5-week weekly moving average. I thought that was holding up okay. And then this one looks interesting. Yeah, I like that. Okay, cool. Let me boil that down to a couple of days actually. Let me just do a couple of months. Kind of curious. All right, I'm always trying to to just test out some new things. Oh, I didn't mean 3 years. I meant 3 months. Boom, boom, boom. All right, I'll buy that. All right, Rod, sick. Okay, cool. The live short interest data providers have been wonky this week. Tipping. Oh, was that its usual pattern? I don't even know Markel. So Markel saying Lisa didn't follow its usual pattern of rising throughout the week and dipping on Friday. Yeah, some people were talking about Thursdays too. Oh, shit. Okay. Okay. Oh, Kazuya says Tuesday is the double whammy, Xbox release and short interest updates. Oh, that's right. I expect the shorts to keep at it for the short interest percenter. Oh, that's right. Is it Tuesday? What's Tuesday? Oh, the 12th? Yeah, that sounds about right? Or it's either Monday night or Tuesday. I forget. But that's true. Now, remember, I'm of the opinion, I forget if anyone agreed with me, maybe not, but when you see the uptick in the short interest, first of all, it's hard to say one way or the other, but I lean toward a little bit more short-term stuff, right? When your thesis is grounded in the fundamentals, this stuff is like, yeah, whatever, okay, so that's what they're doing. Then like I said, when you see crazy short interest, if what it does is it just increases the chances modestly that something crazy could happen, right? Now, it's already so high, and these are only modest changes. But if we see it like 75, 80, I might be like, that's a little bit, that could be short-term bearish for them. But you know what I mean? Imagine layering on to that, but we'll have to see. I bet I wonder if Rod would agree with this. Y'all think it'll probably be in the ballpark of the same, right? If it's a couple million short or even a couple million more, I guess I'd be curious for the story. Do you know what I mean? If it's more, now that's what I'm in. Like we broke 70. I'm like, just for the story, that's pretty sick to see. And so now if we're a couple million below or a couple million above, I'd be curious about that. But I don't think the market like reacts in the same way that we're thinking about it. You know what I mean? We're the weirdos. we're the weirdos in how we might be perceiving that stuff. That's my point. Whereas other market participants may be viewing it differently than us. Just something to bear in mind. That's my opinion. Hey, Aqua. Welcome, Aqua. Welcome, Aqua Blade. Ooh, see, that's like a badass name, right? What's your name? Aqua Blade. Oh, shit. I don't know. Short float. Yeah, about 144%. Yeah. Yeah, the true float, right? I mean, the float of with all the volume you're seeing. Remember, there's, as we've talked about, right? Oh, I'll let you probably answer that. There's way more shares being traded out there, right? Because of those shares that are shorted. Oh, okay. Salaryman asking about VWAP. That's a good question. I do not do that very often. I don't even know how to do it. Is it here? Oh, there it is. Yeah, let's do it. Wait, do I need to set a parameter for that? I don't. Oh, no, right? Because it's just using WAP instead of the price? Is it? Oh, I don't think I've ever charted WAP on here on stock charts. Maybe I guess I need a parameter, huh? Hey, what's up, Cody? Welcome. Happy Friday. Johan? Yeah, super saucy. Well, lately we have been just sticking to GameStop, right? Hey, CU is back and back early. Welcome back, CU. I mentioned you earlier. We were talking about the COVID risks and stuff, talking about how you were talking about that quite a bit. Happy to have you back. Did someone say GME? Hey, you heard us yelling from across the internet. All right. Kenny Man, welcome. Happy Friday. Yeah, okay. So Kazuya says, with how limited the info that reviewers were able to talk about, okay, I like this. There's going to be non-stop gaming coverage on this on the 12th and 14th. I expect some serious volatility. Nice. And that's the thing. From our perspective, I would that's upward volatility. Right? I mean, because it's a bullish thing that's happening for a company like GameStop. And I know people would say, well, everyone's been saying this the whole time. Everyone knows the consoles are coming out. Everyone knows the consoles are coming out, right? That's true, but there's the question of whether or not it's adequately priced in for certain companies, most notably GameStop, and because of its heavy sentiment and so forth, I think not. And so something like that, even though people have known about it, they've just been discounting the business model for so long that if they catch up to it, I mean, I don't expect everyone to catch up to the story right off the bat. I don't mean that, but if you get a good chunk of people who finally realize, you know what I mean, what Steve Stonk's talking about in his GIFs in the vid memes, you know what I mean. At the same time, these new consoles are coming out. You know what I mean? You can expect maybe the price to bounce on that, right? Because everyone's always talking about like whether something's bullish and bearish, but it's always in the context of where the price is trading relative to the expected free cash flows. And I think a lot of folks spend a lot of time arguing about other stuff. You know what I mean? Where at the end of the day, that's the variable that matters most, whether it's trading at a legitimate discount to fair value. Y'all know this. Okay. But that's a good point, Kazuya. I didn't know that either. I didn't know how limited they were so far to be talking about that. I wasn't aware. So, I mean, yeah, just another thing, even more talking. I mean, is that the case with every console cycle, you'd think? But all the info from reviews is genuine, extreme positivity. All right, that's good to hear. That's sick. Yeah, as we all know, it's going to be the biggest console release ever for these two consoles. It's going to be huge. And that's what I mean. It's terrific that a company like GameStop, who thrives in these early quarters and early years, industry-leading attachment rates and so forth. Oh, let me pull it up, kid. I mean, I feel like it's been a couple streams since I brought this up. I'll bring this shit up again. I actually want to bring this one up. You see this one? Let me bring this shit down. Now, look at this. Look at this. Okay, so this is what I was going to show right here. More games sold per console than any other retailer. Market-leading share of games during AAA release windows and for all products across each route. 22 billion in the last cycle. You know what I mean? 22 billion. over the whole cycle, right? That's it's just huge. Preferred distributor for publishers and console makers, and some people will say, well, this is a bit backward looking, which is fine, but I just mean we're here, and a lot of this stuff I believe is still remains accurate in 2020. GameStop's accessory attach rate is significantly higher than the rest of the market. You know what I mean? Exclusive products and bundles, differentiated buy, sell, trade. Right, that's just their trade-in business, right? Market share leader in pre-orders. Distributed sales force, so you might you might have some folks who are trying to figure out which should they buy. I know a lot of people already have consoles, right? And if you're a hardcore gamer, this is ridiculous to even think about. But there are still people out there who be like, well, should I get the Xbox or should I get the PlayStation? In between of those, should I get the digital? Should I get the physical? You know what I mean? There's people to educate you on that stuff, and there are sales forces and other retailers as well, right? But GameStop is the go-to. That GameStop is the only one dedicated to gaming. I think a lot of folks might just naturally flock to a store like that, right? And we're here, and so GameStop is set up to succeed here. That's not to say it's all perfect roses, right? Like the announcement that they're not going to sell the consoles in store, or was that is that what, did I hear that right? They're not going to sell the consoles in store on the day it's released. That's not great news, right? For a GameStop, it's always better to have the foot traffic in the store, right? But that's not like game-changing bearish news, right? It would be game-changing bearish news if GameStop couldn't remain open or whatever, right? And that's not even to say that the thesis wouldn't still be intact, because I think maybe they've built out their online business so much that they still might do okay. That's you know what I mean? That's a bit hairier, but like if it's one day or something, or even if it's a week or something, it's just not as big of a deal. But it's still all else equal. They don't. But that's the thing. If GameStop's a relative beneficiary of that relative to other retailers, I'm not so sure. The analysis gets tough. Okay. See you. Can we mention MGI though? Oh boy. Here we go. See you. Okay, in the fives. We cannot see you. We cannot even mention it. Nope. So, oh, you were asking Super Saucy because he said that. Oh, my bad. Oh, damn. It's the Steve Stunk squeeze. That's right. Don't forget about the Steve Stunk squeeze. Yo, Steve Stunk. Yeah, that's right. You had that. You already had that going. Yeah, right. People have been gaming so long they forget kids keep being born. Yeah, exactly, right? Oh, okay, so thank you for that clarification. So Rod clarifies, saying the attach rate on games is 3 times general merchandisers and 2 times on accessories per Investor Relations a few weeks ago. And Rod had shared some of his communications, and that's huge. So no shit. So he's talking about this significant, right? Significantly higher. Publishers like to see this, console makers like to see this, and GameStop investors like to see that. You know what I mean? That's a big part of the appeal of the legacy business. Yeah. What else we got? Okay. Yep. And her family trying to figure out what to buy, right? I know some people just discount that because it's not a problem for many people who are maybe tracking some of the hardcore gaming news, but there are real people out there who do that, right? Maybe that goes without saying, but I think it's just important to remember for a company like GameStop. I mean, I imagine, that's what I mean. I included in one of my GameStop videos that mind share aspect. I imagine if you ask a lot of folks, what matters is where you end up shopping, right? It's not so much the mind share, but it can be an important indication as to what people are thinking about. I think a lot of people still default to GameStop as the gaming store that you might go to pick up stuff. That's not to say everybody. Lots of people buy their stuff elsewhere, Best Buy, Walmart, Amazon and stuff. I'm not saying that, but I think for a good chunk of folks, that was what I included in that video. It was something crazy, the mind share that GameStop still had. You know what I mean? It's crazy the mind share they still had, juxtaposed with the people kind of shitting on the business model and stuff. You know what I mean? But that's what I think. I always felt that the people who were loudest about GameStop's secular risks weren't the people. You know what I mean? Like, I think there was this. I continue to think there's a disconnect there. I'll keep going. I'm almost caught up. So you be sure to buy it for the yeah. And old gamers return as well. That's what we've been talking about. Multi-generational. This is multi-generational. We've reached that point. It's no longer just a certain. It's not a niche thing, right? Most folks know this now, but it's just in comparing it to past console cycles. Oh, I saw. That's right. Who was it? Daly was talking about this. Were more folks buying into GME? Let's see this, Daly. I assume it was not that big of a deal, though. That's what I'll say, because I think they were smaller positions. You know what I mean? Here's all the updated. So I just went to Whale Wisdom, and the updated right there. So this is as of November 6th. So you're going to see some funds who are reporting, but not many shares. Like this stuff is... Oh, BlackRock. Oh, BlackRock out 2.6. All right, that one wasn't nothing. There you go. Oh, shit. Okay. Hey, cheers, Daily, huh? Check this out. BlackRock, they're down to 8.6 million shares. Hey, Rod, check that out, huh? You see that? They closed out at 2.6 million. BlackRock owns 13% of the shares outstanding as of September 30th. Interesting. So there was an extra 2.6 going out there. Oh, thank you, Super Saucy, saying they're the largest ETF fund holder. All right, let me just check that for a sec. Oh, whoa. So Wells Fargo got some too. They got Wells Fargo got almost 600K. Not a huge amount, but 1% of the shares outstanding. Okay, the BlackRock one's interesting. I mean, that's a good chunk. I mean, I don't care to look. Oh yeah, no, I know it's passive, but more in the context of how the lendable shares and stuff, and any like float type calculations. And when one of the biggest shareholders, whether it's passive or active, in my mind. I mean, more so if it's active, right? Naturally. But even if you're a passive shareholder, if you owned over 10% of the company, right? And you close out, was it about 25% of the position? That's noteworthy for me, roughly. Wells Fargo. Not much else. Not much else. All right. Yeah, Wells Fargo. Yeah, but so Wells Fargo is such a huge bank. You know what I mean? Such a huge bank. That's like I discount it, right? I'm more curious about like strategic hedge funds if they were gonna do it, but like the big huge banks and type stuff, they don't even register with me. And that's the thing. So BlackRock sells out. That just mean it could be passively managed. It's 1%. It's not nothing, but Oh, Otter Driver. Welcome, Otter Driver. Stood in line outside of GameStop for the midnight release of Halo. All right. Cheers, Otter. This is sick. Cheers, mate, huh? When was that? I missed that. That's awesome. I know, Super Saucy. Thank you, Super Saucy. I'm keeping up with the chat tonight. Yes. I had some help, Super Saucy, by way of a quiet price action week, right? No one's paying attention. Shh, that allows me to stay caught up. You know what I mean? Next week, let's hope that I can't. You know what I mean? Because that would probably be good news, right? Yeah, 1% though. But like I said, I think they're kind of. I'm pretty sure BlackRock is IJR. Oh, the ETF. Oh, is that the ETF? The ETF IJR, yeah. Okay. The small cap ETF, yeah, okay. Which is interesting because if that's the case, if let's say it's a good chunk, Super Saucy, how come they would be? Because if they're rebalancing and it's eating up a bigger chunk, right? So it comes down to what their methodology is, and I forget what it is. I don't even remember if I looked it up. Maybe I didn't. Oh, IGR got crushed. Well. Oh, right here. Oh, okay. Plus, but GameStop stock price was up. Who knows what their rebalancing methodology is? 33% of its value. Well, Super Saucy, that was as of September 30th. GameStop didn't lose 33% of its value in September. GameStop was up in September. Right? Oh, wait. Wait, when was this? Oh, wait, when was this of? Oh, it's November. No, it's November 30th. Yeah, it's November 30th. Yeah, buying on the, you know what I mean? So that's what I mean. Some of these buy more on the way up. And some might buy down. That's why that methodology matters. It doesn't matter too much to me. I don't, that's the first thing I think of. I say, oh, well, based on what the price action was doing, do they buy more, buy less? It just depends. Evening, David. Welcome. Happy Friday. Happy weekend is upon us. Oh, that was like 20 years. Oh, the original Halo. Oh my God, Auto Driver. Oh, that's embarrassing. Oh, did you say the original release, the midnight release of Halo? I thought there was a new Halo game. I'm like, what? I didn't know there was a new Halo game. It's coming out the week before new consoles. My bad, Otter. My bad. Hugo, I blame this. Hugo, right? I blame this. Okay. Halo, I know, right? Back in the day. Yeah, oh, that's the other thing we get next week too, right, Rod? That's right. We're gonna get all the updated 13Fs. Excuse me, 13. Yeah, 13Fs. 13Fs, right? Yeah. It's just it's handled differently for mutual funds and funds like Scion. That's right. We'll get that next week too. That's right. But the risk is to the downside. With specifically with Scion, I would argue the risk is to the downside because he didn't if he added, unless he added this week, which he could have. You know what I mean? That would have been a strategic add, but I doubt that. But otherwise, he probably would have gone from, what would he have, 2.75 million shares. He would have only sold because if he added, then he would have triggered an update. He would have triggered a new 13D or new 13G filing. So unless he just did it last week or this week, which, yeah. I see Scion as a holder, slight sell. That's what I think, Super Saucy. He's a pretty astute trader, so I bet he trimmed. I wouldn't be surprised if he trimmed 20% up in this. Not so much nailing the top, although knowing him, maybe he did. But I wouldn't be surprised to see a 20% haircut. Maybe more. And then the question is, how does the market perceive that? But quite frankly, at this point, the way that sentiment has remained so bearish, I wonder how if the market will care. But that said, the headline would be Barry trims GameStop stake. That would be the headline. So something to consider. Same thing, we'll get updated from Senvest, which will only be a week or something, right? No, we won't have an update from Senvest. Because when was that, October? Yeah, was it October 13th? Is that Senvest? Yeah, so we won't get an updated one from Senvest because it won't even be on their 13F. It will only be, we'll see Scion, we'll see, not even Hestia. Oh, we'll see, no, that's it. Anyone else? Just the funds, just FMR. Oh, well, through the 30th, we'll see FMR, we'll see Vanguard, we'll see Dimensional, the passive. Well, I'm not so sure how much of the we were talking about how some of Fidelity we think was actively managed, but even still, it would only be through the 30th, and then we won't get one from Foss, we won't get one from Must. I suppose we'd get one from Melvin. That's really, and then State Street, Paradise, like those types, right? But not as big. So it's Scion. Scion's the big one. I kind of forgot that. Yeah, Barry's in the day taking profits. That's right. So that's the thing, Super Saucy. So that Super Saucy, I was talking about that a while ago. How Barry was a buyer. Barry was a buyer at the at a higher market cap than what it was trading at, and he was a buyer, and like I believe I looked this up, and now I forget again. Either late 2018, definitely early 2019. He owned it at the end of Q1. Then he sold. He owned it at the end of Q1, definitely. Then he sold it He sold out of it by June 30th of 2019. I don't know if it was before or after they cut the dividend. Who knows? He was probably waiting for the stock to bottom. He might have got caught. He might have got caught in it, and then he had to wait for the stock to bottom. That was my guess at the time. I think as soon as that happened, it's possible he sold before then. What happened? There was a new CEO. No, you know what could have happened was no, because he owned it March 31st. He owned it March 31st. I'm pretty sure, and that was after the buyout rumors. It was after we knew Sherman was gonna join. So I figured that he had got caught here and then just cut. Maybe he had a stop loss or whatever. Just cut it. You know what I mean? That's such a huge sell-off. You need to just get out and then just reassess. And then he didn't own it June 30th. Right there. He didn't own it in the $5 range. And then it went boom, 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 boom. Then he bought back in. But that's the thing. I agree, Super Sauce. You know what I mean? If I wasn't talking about it, were other people talking about this? Maybe we talk about it on the stream. Him and other folks were buyers well above what that market cap was. That's why we're talking about how the market cap is barely above. It's below where it was when Sherman took over. When Sherman took over back here, this was a higher market cap than it is right now. It's like kind of ridiculous. For my thesis that's the case. But again, if you have a super bearish outlook because secular risk and blah blah blah, okay. But as far as I'm concerned, they've done such hard work to turn their shit around since 2019, and now the new consoles are here. It's kind of it's a little bit surprising to me. It was crazy surprising to me that we were in August or July rather. Even in August, I could have sworn we were low 4. We were. I was like, what the hell? But and even this is surprising. I know it's up 3x, but as far as my analysis goes, that ain't shit. So he saw value above that at the time. That's right, Super Saucy. He did. He saw value at that at the time. But maybe he's reassessed. Also, relative opportunities. It could be relative to what's out there now, but maybe it's not as attractive. That said, the thing about Scion was GameStop was their top stock position, and I always thought that was a little bit of a tell in the conviction to a degree, especially in Q2 2020. You know what I mean? In Q2 of all stocks, that's because of the downside protection. It's as simple as that. That was why GameStop was his top stock position. You know what I mean? Like, this speaks to his confidence in it. That's why I always thought I don't think he was going to get a quick sell out after $8 or $9. But a big reason for this was not so much the moonshot opportunity, was more how strongly he felt that we were very close to a bottom and he wasn't going to lose the capital. But it also, I felt, spoke to some of his upside conviction. You know what I mean? So we'll see. But I thanks for bringing that up again, Super Sassy. It's a great point that he was buying above this current market cap. So was Hestia. So was those are the two prominent ones at this point. And now we know Senvest was a buyer into 9, Ryan Cohen a buyer into 8. That was the other thing with these charts. Is I see technical support for my style, right? I see quite a bit. I mean, it broke that trend line there, right? But if it recaptures it, that would be good. And you get the support of the technical support, right? There's just these price levels right around. I mean, look at it. It's kind of working out that way, right? I don't split hairs. I don't split hairs between this area, right? But you also have support from buyers by way of Senvest in the 9s, Ryan Cohen in the 8s. Like, the market, technical analysts maybe don't, but like the market will remember that type of stuff. So you have quite a bit of support. That was why I was saying last week, and that's not a recommendation, right? This channel's educational in nature, but that was why I was saying last week and even earlier this week, when that price is at that $10 range, generally speaking, right? Don't even just think about GameStop. Think about this being any stock. Think about this being any stock with a chart that looks like this. You would be potentially adding to the position when you pull back down to this lower side of the box, when you pull back to those trend lines, when it maybe falls back to that 50 RSI. Maybe in theory, you sell some puts. You know what I mean? Those are the times to do that type of the stuff, because not always, these are all probabilities, but you have a little bit more support. That downside risk is a little bit more stronger than when we were trading at 15. That's like objective analysis. We can disagree on the styles that you may implement. Like, if you're a day trader, you're going to view this differently than I do. But that's what Barry does. You know what I mean? You're opportunistically adding to a position, trimming a position. This is how I feel technical analysis can help, because on the value front, it's really hard on sheer value, it was really tough for me to do that, and I feel as though the charts help a bit. And I'm still testing them. You know what I mean? I'm like, let's see if this actually works. You know what I mean? But if it works out from here, if like 1050 is the low, this is another proof that it has kind of worked out again. And also something to bear in mind, as many folks here know, the chart gets even, like I think I already said this, the chart gets even more bullish, not just as time passes, as you remain in double digits, as you remain at this elevated range, because now the market is like accepting this is the new level, but also you retesting, you pull back to these support levels, and then when you bounce, if you're at 15 again and you're at 16 again, it's more meaningful to market participants looking at the charts. I feel like I spent a lot of time talking about the charts when my real thesis is the fundamentals, but I guess there's not much else to talk about, right? Oh, you see that the TikTok thing I posted is like I'm running out of stuff to talk about, but this is the type of marginal analysis I do at this time, especially if I don't know. All right, I'm going on a rant now. I just have as time passes, I have more rounded out thinking when it comes to the chart. So I like to share them too, because call me out if you disagree or if I'm viewing something differently. I don't even know if this is. It's becoming more a hill that I might be willing to die on, but not yet. It always comes down to the fundamentals for me. But when people disagree, like Rod wasn't disagreeing. Rod just said, hey, the 21 EMA. I'm like, oh yeah, let me check that out. I don't usually use stuff like that, but maybe I'll test it out later. That 5-week weekly moving average too, that looked kind of interesting. Oh, I fell a little bit behind. Okay. Oh, yeah, okay, so this was probably answered, so I'm going to keep skipping. Yeah, maybe they sold out, started a short, right? Here you go. Doubtful, right? But waiting for guidance for the next quarter during December ER. You might not get it, David. I don't think that my guess is that they don't provide it for what that's worth. If they do, it could be super bullish. If they do, it could be crazy bullish. You know what I mean? Like if it's a strong forecast. I think it was August 16th, 2019 that he added. Wait, where you coming from, Rod? Are you thinking of his letter? You're thinking of his letter. That wasn't necessarily when he added. Or reinitiated, sorry. Maybe you mean added. Because we did see, there, if I recall correctly, between a couple of letters, there was an increase in the number of shares Scion held. I was thinking reinitiation, because he was out June 30th. Wait, 30% profit? We don't know what his cost basis is quite a bit lower than that. Yeah, I doubt it too, Super Saucy. I doubt that it would be a complete outright sale too. If you do a Google search of Michael Burry and I think it was Bloomberg. It was either the Bloomberg article or another one. Look up those GameStop articles from August and September of 2019. I believe the language he used, or was it in his letter? He said something that there's like tremendous or significant upside, or that shares deserve to trade significantly higher or something. And at the time, when he first wrote his letters, it was sub 4, right, which was crazy. But at the time the article came out, no, because it may have been in August, but Google that, I kind of forget. But he used language that suggested that the price could be quite a bit higher. Now, one could say, well, 15 is quite a bit higher than 5. Okay. We don't know exactly what he meant, but that's fair. We can talk about that. Oh, thanks. So Rod clarifies Cohen's last buy, 160,000 shares, which was a small percentage of his position. But nonetheless, we were talking on the stream how it could have just been that, like it was like a sending a message like I'm willing to buy up to $8. I don't know enough about that to, you know what I mean? Like because he came in, I thought maybe it also could be he was waiting for earnings, you know what I mean? But it was such a small ad. But 867. Oh, I don't remember. I can 13D amended. $863. Do we give it to Rod? What do you say? Oh, Rod. Sorry, can't give it to you. Can't give it to you, bud. No dice. Jorge gonna press me on every stream. Jorge, I don't have a Monday price target. Oh, I fell a little bit behind. Okay. Okay. Treating. Yeah. Talking about, okay. Looking for 30, yeah. So Super thinks they're gonna blow out Q4. Interesting. Which of course we're away. So when would Q4 be? Maybe late March, early April, likely. Well, that's the thing, Super Saucy. It could be. The question will be the question will be what will the price level be? Where will GameStop be at by the time they announce Q4? It could be that a blowout is priced in. You know, as I know Super Saucy knows that, but like that's the big question. Like I agree. I don't know about blowout, but I agree. I think they're. I'm not even specifically care about Q4. But I guess it starts with Q4. But I think they're going to outperform. Right now, they're going to outperform current expectations. I feel strongly about that. What's priced in right now? I mean, that's what I mean. My thesis is I am wrong. If they don't outperform the expectations that are currently baked into the stock price, my thesis is broken. But that's the only way to break my thesis right now. It's not going to be the chart. It's not going to be breaking below 10. That's I just have to accept we're at a new level per se. That's shorter term outlook type stuff. But at this point, now that the new consoles are upon us, they did a good job getting enough cash, having enough capital to get there, to play, to have their e-commerce revamped and everything like that. Now, the only way I can be broken is by underperforming Q4, Q1, Q2, and I don't think that's the case. Like I feel strongly that it's going to outperform what's priced in right now. But maybe the stock price rises by the time we get to that point. In which case, now it's a little bit tougher to analyze what is priced in. But so I think I'm with you at a high level, Super Saucy, that right now I think they're gonna outperform. But we'll see what the stock price does in the meantime. You know what I mean? Yeah, Q3. I mean, a lot of people ask about Q3, right? I gotta see what the chart's looking like and the price action right now at the current. What's the current market cap? 772. Oh, remember weren't we just at 700? So like there was a nothing week with no volume, and we're at $12. You know what I mean? But like we were talking about 10, now we're at 12, and nothing happened, and there's no volume. That's that range. It'd be at 14, 15, and like there's no reason to take victory laps in my mind. We were just there a couple weeks ago, but we're at 8. Where did it close? After hours. Oh, 12. Hold. Oh. What? How many? What's the volume? $30,000 shares. Nada. Steve's got good feelings about Q3. I think Rod does too. Rod's been talking about that. Just from e-commerce. Yeah, that's the thing. So we expect e-commerce to continue to crank. Right, some pre-order stuff. Yep. And that's the thing is that, so some stuff might be impacting that, but it's fine. I think the top line will be good, but totally unsure about bottom line. That's the thing. So one additional thing for everyone to bear in mind is, I suppose it has already begun to kick in, but perhaps Q3 is where it starts because this is when pre-orders kick off and gaming is front of mind for folks again. Maybe people picking up stuff in anticipation of the console being released. But what I'm going to get at is this. I've said this many times. I apologize, but all the cost-cutting initiatives that they did, that very unsexy stuff that they've been working on for the past 12 months, and did not impress the market whatsoever, for somewhat justified reasons, right? Because the bearish folks are betting on secular decline, and them doing cost-cutting stuff doesn't change that. It maybe extends their life a bit, but it doesn't change that. And now it's important to remember that it just flows right through. You know what I mean? Like they're going to have outsized gains. I think this is part of the reason I think they're going to outperform expectations, is because those cost cutting that the market kind of stuck its nose up at all this whole time, it's going to come. You're going to see the impact of it. Perhaps it starts with Q3, but Q4, Q1, and I think the market is going to be surprised by that, especially on this free cash flow front. We'll see. That we're even where we are, still a little bit surprised. More time passes and we're still in that $700 million range. I'm like, wow, all right, market still hasn't really bought into this, not yet. And it may take quarters for it to buy in, make no mistake. But yeah, we'll see. So that cost-cutting stuff, why did I just think about that? Oh, the bottom line type stuff. So something to bear in mind, Super Saucy, is just that, excuse me, I mean, I don't know either, but I think we're going to reap the benefits of all that stuff, and we're actually going to see it. I mean, it's been helping along the way. I don't mean that, but I just mean now it's going to be right in people's faces, because that top line is going to be inflated relative to where it was earlier in the year. Q3 a bit above. Q4 we blow through. That's the thing. If they come out Q3 and they offer guidance, I can't imagine them doing it. You know what I mean? Based on what I've seen this whole year, like that would. I talk about stuff that a management team will do that kind of surprises me. Like that's not as crazy as buybacks, but that would surprise me, right? They seem like, of course, we're not giving you guidance. Get out of here. And you can't even blame them, right? It's just such a crazy. It's just such a crazy quarter going on here. Unless maybe they do, right? If they expect like a really gangbusters quarter, right? I doubt it. Oh, so yeah. So sorry, you just reminded me of James Wang posted model of a break-even scenario. Oh, I didn't see that, but I did have some stuff. Oh, this is where I got raw. Oh, I got some stuff like, did I open anything up? I didn't open it up. Let me close out some shit. Sorry. Even I got my limits as to how many tabs I can have open. I got that link. I got Rod stuff. I got, oh yeah, that was funny. Oh shit, that was funny. Hey, how's the research coming along? Jordan. Oh shit, that was funny. Oh, this was from James. Oh, this is what I liked. Didn't I have what I tweeted? I retweeted something. Well, let me just keep going. Okay, so CVC was picking up too. We were talking about kind of the stuff that Rod was uncovering on some of the customer data targeted ads, right? That's big. Like that's the thing. Now I'm like, maybe there's no announcement. There could be. I don't know how this industry works, but maybe it's going to be talked about in the quarterly earnings release. CVC was talking about that stuff. What the hell? Yeah, oh, that's what am I doing? I tweeted it. I tweeted it. Nintendo. This is me talking about, I think the market was discounting the Nintendo impact. What the hell was it? Didn't I just... Oh, yeah. Did you see that GameStop song? That was sick. Okay. No, where's James Wang? Did I not read? I could have sworn I just retweeted this. Oh, I said I was gonna, and I didn't do it. I meant to. Damn, I forgot. I retweeted this stuff out. I retweeted that. Oh, you can't even see it. I retweeted this stuff out. Okay. But you mentioned James Wang. That reminded me of it. We were talking about this in September. The impact that. Oh, wait, can I track that down? I want to bring this up. Let me get this. So we talked about this back in September 15th. And I just brought this up last stream. That's right. I already brought this up last stream. But James Wade was talking about this just to tag along this affiliate marketing type stuff. And James Wade was saying, if done right, it should account for 10 to 25% of an e-commerce site's total revenues. What does this mean for GME? If done right, it should account for 10 to 20. It's right for an uptick of 10 to 25% long term. Also, this note from Jeffries is telling that GME is scalable. So stuff's happening this quarter. Why the hell did I go down this path? Just because you mentioned James Wang? All right, so I guess that's what you were going with that, Steve. But worth bringing up again, even though that thing's blocking it. That's the thing for large institutions to get involved. Well, I don't know. I mean, I don't know who you mean, but like for like I talk about major institutions to get involved. You know what I mean? With a company like GameStop, I mean, they got some. As long as they still have that debt, that kind of hinders things. Not too much, but maybe more. And then the market cap and stuff. But most importantly, is those secular risks and stuff. I think I'm talking about major institutions here. Things like endowments and stuff, and major asset managers, gigantic firms. They need to be convinced that GameStop is actually they're going to replace some of those declining software sales. That they need to be like, that takes time, I think, I don't know. It's not to say that's whether what happens with the stock price in the short term. I just think to get the nod of approval from like gigantic firms, they need to see more from GameStop. Right now, I keep on talking about what management's talking about, but they might need not even just see results. They might need more like Microsoft type news type partnership type stuff, because if you're those firms, you haven't seen enough yet. That's understandable. Really strict criteria, conservative type criteria. That's what I'm getting at. The completely consumer-facing business, they will have a very accurate read on sales via alternative data. All right, I could see that. That's right. I agree with Rod. Talking to Steve. Oh, welcome, Steve Mazzini, huh? Steve Mazzini. Just cheers. Happy Friday, mate, huh? Most of the conclusions seem to be the simplest. They are fully convicted that GameStop is being digitally disintermediated and cannot survive. Boom. That's it. I agree with Rod. That's the only way you get to that level of short. And the only other thing that I would tag along, and I know Rod would agree with this, I'm sure we've even talked about it, is they have a tell. And the tell is the stock price got we've talked about this already, sorry. The stock price got to 3, got to below 4, then it got to below 3, and it has been a heavy short, 50 million plus short interest this whole time. Then they didn't close. And they didn't close. Why? Because of what Rod just said. They were betting on a 0. And that's it. So because you know they're betting on a 0, you know what Rod is saying. It very likely has to be true. They're fully, or if not 100% convinced, they're 90% convinced that GameStop is being digitally disintermediated, right? That is definitely going to happen. Maybe there's a little bit question on the timing and stuff, and it cannot survive. I agree with that. Maybe, and I just mean, again, maybe not 100%, not that Rod's saying that, but they're not 100% sure enough, but they're very, very high conviction that that's the case. And a big part of that for me is that they didn't close out on this, on these major sell. I mean, the stock price was down. Look at this. We had that historical short interest. Can I pull that up quick? Oh, can I track that down quickly? I don't know. What did I do? Did I like it? I liked it. Come on. Oh, I don't think it goes back that far, though. Shit. That's it. How far back that go? Oh, you got it. Thank you, Rod. You the man, Rod. Here we go. Look at this. Oh, we got the stock price right there? Or is that market cap? Share pricing. Sick. So I wanted to say... Okay, so the short interest got scaled back a bit in early 2017. You can see it fall to about just over 20. It never got below 20 million, which was about 1/5 of GameStop's shares outstanding roughly in 2017. About. But then they look at the major short interest, 30 million plus 50 million plus this whole time, ever since they announced the dividend cut. 50 million plus, 50 million plus, right? And then look what the stock price did. Boom, in the gutter, in the gutter, in the gutter. Never closed, never closed, never even trimmed significantly. They trimmed a bit in April, right? Because of what was going on, the vote and everything like that, but it never got crazy. And now I, you know what I mean? Like, I know, I mean, I know y'all know, but what am I trying to, I think the thesis is, I think it's wrong. I mean, I think, and I think that they'll have to close. Because that thesis, I feel confident that they felt confident of what Rod just said. And because of that, I think they'll have to close because that thesis is broken. The question is, how much do they have? That's why people betting on short squeeze, you're betting on that they suddenly have to close overnight. And I think that's a risky proposition. It could be that this game, that the stock price is only rising gradually as fundamentals gradually perform. GameStop gradually mentions digital partnerships. You know what I mean? That maybe it's not an overnight thing, that it gradually unfolds over quarters, over years, in which case they can close out over time. And then nothing crazy happens. You know what I mean? But my thing is, they're going to have to close because I feel as though that bet that wasn't closed is wrong. And I think that it has to be closed at some point. The question is just at what price, at what speed. But I think the base case has to be a gradual unwind. It has to be the base case. If you disagree with that, you got to let me know why. Why? Because I think, you know what I mean? Because Rod, and I think Rod would agree with this, because of what you just said is true. How does that change overnight? How does that change in a couple of days? How does that change in 1 week? You need more than a Microsoft type thing to drop. Not for you and I thesis. You and I have already talked about how terminal value is very likely like quite a bit higher than zero because of just the Microsoft partnership. But you got to put yourself in their shoes, and they think, yeah, okay. Well, it's not. We don't even have the figures. We've already seen this argument, right? We don't have the figures. We don't know the specifics. How is it really to perpetuity? Blah blah blah. They'll keep on viewing it that way. And so it's just going to take more, or maybe it's either more material. I don't want to keep saying partnerships, but other types of announcements that suggest that they are here to stay. But otherwise, it's just fundamental performance, and that just takes time. All right, now I'm going to be behind, but if y'all have thoughts on that, I'm very curious to see. Okay, so Rod, you may have already. So Rod added, until proven otherwise, they, like the perm bears among the sell side, will remain short. That's I tend to agree with that, unless they have a reason. Publishers and hardware earnings beats. I find it hard to believe GME is the only loser in the gaming sector. Well, stock price wise, for gaming, gaming has been a big winner for the past 2 quarters. 2 quarters? 2 quarters. And GameStop sold off after every one. I don't know what the other companies did, though, so to be fair. That's true. So David and we've said this on the stream too, how he wanted to stay below that 10% threshold, didn't want to telegraph future moves. That's the thing. I don't think that these things should be base cases, especially with like a Scion taking more than 5%. I think most of us would agree, unlikely. But like a Cohen, we still don't, he hasn't talked about the position, and we don't know his full intent. I know everyone runs with that Amazon thing that was in Bloomberg. I don't fully buy that angle. I want to hear what he has to say about this shit. And where I'm going with this is maybe he intends to take 20% of the company. You know what I mean? And if he does, to your point, David, maybe it makes sense to play it quiet, and then or just see what the stock price does, or maybe watch another quarterly earnings and see what happens. Who knows? But I don't think that was his. He won't want to. It might be part of his reason. I don't think it was necessarily his main reason. You know what I mean? I think base case would be he doesn't go above the 10% level. Personally, that's my take. If you think he is going to go above, you'd have to make your case. You know what I mean? Not that you're saying that, David. I agree with what you said about staying below the 10%, blah, blah, blah. But I say, if you think that if one thought that he was going to go above 10%, you need to make your case. And I don't think anyone has a particularly compelling one at this time. I'd be curious to hear it, though. Absolutely. Like they were asleep at the wheel when they could close. Yeah, so I agree, Steve. It kind of feels like they kind of got, to a degree, got a little bit caught off sides. That's how I feel. It happened so quick. This is the 5-week moving average. That's the 5-week moving average that you see there. Boom, 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 boom. And it never really settled down. And That's not to say, again, if they're grounded in the fundamentals, maybe they don't care as much what the price is doing. I think that's not totally true. If this price is at 30, 40, 50 bucks, I think that that's what I mean. I feel strongly that if that price starts running, even if it's not completely, totally clear that and that's not necessarily the base case that that's going to happen. I'm not saying that, but I think people can get shaken out of positions no matter how strong your longer term conviction is. I think at some point, just from a risk management standpoint, they have to. But yeah, so maybe they just didn't. And I don't even know if that. So Steve, I was thinking that too. Maybe they just the level of short interest, right? It blows my. I can't understand it. Given my fundamental analysis of the situation, but it might be that they kind of are what Rod was talking about. They continue to believe that even though we're at 12 and not 4, that their thesis is still fully intact, and they're not all that nervous. To not close out went up 80% plus on a multi. Well, that's the thing. Were they the same shorts the whole time? I don't know, but that's the thing. If to not close out at that time when you're at 2s and 3s, it's a tell. It's a tell. You know what? They kind of gave away. They kind of gave away their hand a little bit. Not that that's, you know what I mean. Like, we're betting on the fundamentals. I mean, we joke about the robots and stuff, right? I mean, how beep beep boop 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 beep. But it's like as the fundamentals play out, then that's the case. But as far as I think about people on the other side of the trade, because I'm trying to question my own position, and I think, I kind of know, I kind of feel confident about what was going through their mind. I think it could also be different shorts this whole time. I don't know. It's just largely guesswork on my. I have no choice but to guess. No, I think it would be. It had this is a $1 billion short position at this point. Even if across a couple of firms, you'd have to think that they're bigger firms. It has to be. I think. I can't say has to be. My guesswork is that it has to be, but I don't know. All right, Rod. Well, we'll be keeping an eye out for that. A case study? Sick! Yeah, Sam Burry's short. Yeah, I ain't short. I remain bullish, and I keep on saying the setup is as bullish as it's ever been. Arguably even more so after the pullback. You know what I mean? From a sheer discount level, obviously it's not as cheap as it used to be. But what you have in lieu of that is a bullish chart, which maybe for some people they don't give a shit about that. I understand that. You have the consoles here. It's next week. We have the strength of GameStop's balance sheet going into that. Like, we know GameStop is, but like, we have more information than we did. We know Ryan Cohen got involved. We know Senvest got like a new long up through the 9s. You know what I mean? Like, there's a trade-off. It's not quite as cheap as it used to be, but you have other characteristics that there's stuff to like. You know what I mean? It gets tough to compare the two, but I just mean setup remains bullish. Oh no, they have an effect? Oh no, they have an effect on me, Hugo? Oh no. Jimmy's doing that 1-2 step. I love you when you 1-2 step. I know See You knows that song, no doubt. I love you when you 1-2 step. Hey, See You. But if you know it, let's see if you say the artist. Maybe I'm behind right now, but I know See You knows. Ah, crap. How far behind? Uh-oh. Uh-oh. Okay, not too bad. Definitely a little bit behind. Let me go. Musical, yeah. That's another case study of to make a movie. Hey, and cameos from Roaring Kitty. Yeah, cameos from all of us, huh? We'll get the Roaring Kitty chat in there, you know? Yeah, I don't know about that. Yeah. Hey, well, that's the thing. If something goes crazy, wouldn't that be a riot, huh? And we've all been talking about this stuff. That would be crazy if something happened. Again, not the base case, but if there was ever, well, if you saw my my Alien movie poster, the Infinity Squeeze type thing. Again, not the base case, but you got to have some fun with that shit, right? But if any of that shit happened, then I mean, we would talk about case study. Then it's like solidified that this is a crazy case study, and even I don't even understand it right now in real time, right? But hopefully, if someone does write about it, I hope they can educate me on what the hell is going on with some of this stuff. That could be Hugo. It could be smaller funds, but I think the sheer size of it, there would just be so many funds. Could be though, Hugo. You're right. First of all, that I don't know that it's big funds. I just think this $1 billion. And for so many funds to have that level of conviction in a thesis that I think is wrong, it totally could be, Hugo, but I lean the other way. Okay, good point, Super Saucy. My point is Super Saucy clarifying the point about not knowing the 3Q bottom line is the company is 100% gearing for the console release. As a result, the numbers may look bad from an accounting perspective as they spend money early. Fair point. I wouldn't disagree with that, right? I don't even have strong opinions on Q3. I know we have some certain things that may look kind of good, but to your point, Superstar, we've been seeing this throughout the past couple quarters where cash flow has been holding up there okay, but large losses on the earnings front, and so I'm more trying to, which is difficult analysis. How is the market going to react to whatever news we receive? That's what I try to think. To prep and ensure a good Q4. Yeah, I don't disagree with that. Like, I think they have their money on the long term. You know what I mean? I think they're, I think they were okay with the stock price doing this. I think they just didn't give a shit. And the truth is, with the best management teams, that tends to be how they act. Think like Buffett style, right? Because it's so difficult to try to play the short stuff and blah blah blah. And they got ridiculed this whole time, and even right now they kind of continue to be. But I think that's why I said in my tweet, that long ass tweet shit that I did. One of the last couple tweets was about management, because I think the management. I think we're going to learn. I don't know this, but I think in 12 months' time, I'm literally betting that the market will appreciate and realize that not only is this not just the management team, but also the board of directors and the the investor base, that they're not just competent, but they're outstanding. Perhaps I'll be wrong about that. I've withheld judgment now for about almost 18 months. Is it 18? No, not. We're all going up on 18 months now. And at the very least, for the early couple of quarters, I'm like, all right, competent. And you know why I say competent? Because they're not blowing it. Are you going to blow it? No, they didn't blow it. All right, competent. But now as I'm seeing it unfold, especially if we get a bit more news, right? Like I keep on saying, I even want a bit more for me to raise my conviction in that longer term stuff. Cohen getting involved kind of helped me with that. But now I'm kind of like, whoa, they could not only be competent, but they could be outstanding turnaround specialists. You know what I mean? Like realizing what needs to be done. I think it may only take 12 months to get there for people to realize, but it would really take 2 years, 3 years for that full turnaround to take effect. And so that's like, there's a whole bunch of things the market is really slow to pick up on. That's right. No one cares. I mean, it's possible I'm wrong. I don't think so, but the effectiveness of management is a big part of it. You know what I mean? Like how many times on the chat have we been talking about execution? I pull up PowerPoints and all this stuff. It comes down to execution.
I'm back. I got a shower though, so
that are still largely
enjoy
untapped.
Bitcoin world.
So I think through that education, through some more innovation, I think there's a lot more work for us to be done.
Yeah. So Andrew, can you talk a little bit more about, we have different securities now. Strategy has different securities across different spectrum of volatility and risk reward. So how does that play into addressing different types of
right. I'll be
people,
back.
and what are the challenges in kind of expanding the size of those instruments?
So I think I alluded to it in sort of our fixed income universe, right? Like there's just today a pretty distinct disconnect between how investors and rating agencies think about our underlying credit. Once that potential gets clarified, I think there's going to be a tremendous amount of interest. I think hopefully it'll pave the way for others as well. And so, there's just a core, fundamental principle of this new asset class, this new commodity that exists that we are educating on. So that's one way, right? Just inherently educating and expanding the understanding of how people can view our balance sheet relative to our capital structure. And we're significantly undervalued in that perspective today. I think about, another area we've been highly successful is also in the convertible bond market, as Semler has as well. That is a much smaller market, and last year, Strategy was the largest issuer of convertible bonds in that entire ecosystem. I think what we recognize there is a lot of appetite, but there's more investors that could get interested in that type of instrument as well. So it's addressing the existing sort of system, but bringing more Bitcoin focus, people that want Bitcoin exposure into the already existing instruments out there that I think will continue to help us expand. So, education on credit fundamentals and expanding investor bases however we can.
Makes sense. And so from Eric and Simon, your perspective, how do you view fixed income in your strategy? And how do you see that, how we are working on it. And the great thing is when Strategy launched each of these initiatives, we had to go through a lot of first-time hurdles in terms of working with always like in the traditional finance world, the bankers, the lawyers, and to come up with innovative ways to find ways to be able to launch a new security, new product. So how do you see that applying directly in your context? And do you just adopt it easily, or like any challenges that you come across with respect to your own companies?
I think, you'd be a fool not to kind of try to follow what you guys have done. So I think that you've kind of laid for all of us, we're so fortunate that you've kind of laid that out. And I kind of described Michael yesterday as this guy who's leading a Peloton bicycling team. He's braving the elements, he's setting the pace, and we're in the back just, fueling up behind him and supporting him, but he's really the groundbreaker. And so I think that it's much easier for us once you guys have broken into those markets. Doing our convertible, for example, was so much easier because of the work you had done in that area and the success you had, that when we met with convertible investors, it was like very quick and easy type meetings, a lot of interest, substantial over subscription to the offering. So, and I think a lot of that has to do with what you guys have had, the success you've done. So I think that our like the holy grail for us is to tap into the fixed income markets. I think those are incredibly accretive and attractive to us. And I think it just takes time. I think you have to, grow and get bigger, grow your Bitcoin holdings, and reach a level of scale where you can just do what you guys have done. So I think it's there. It's just a question of time and scale.
And Simon, how about you? Operating in Japan, what are the specific considerations if somebody were to enter the Japanese market, or cross-country, like if you were launching something in the US market? How do you get through those hurdles?
I mean, Japan is an incredibly regulated market, but when compared to the US, I think it's probably no worse. Every market has its own unique attributes. So I think anyone in the room who's looking to execute the same strategy just needs to understand what the local regulatory environment is. The one thing that we did in Japan to kick off our capital raising last year was a rights issue, which in the traditional concept is only done by companies that are desperate in need of cash, and a negative thing. But in retrospect for us, we think it was probably the number one best thing that we could have done. We had roughly 15,000 shareholders fill out 50 pages of documents to to subscribe, and they sent in their check, and at the end of that, they all became shareholders, and because they gave us the money themselves to buy Bitcoin as opposed to buying shares in the market, that created a connection, which is rather incredible. We're looking at doing a preferred issuance at some point, but the hurdle there is you have to convene a shareholder meeting first, which has a whole host of headaches and time considerations. You have to update your articles of association to allow for a new class of shares, and once you do that, then you can move forward and do that. So these are all things that we have kind of in our mind going forward. But for us, I think right now it's really executing the equivalent of our ATM. The Japanese regulator now has become incredibly friendly. So the first time we proposed issuing shares to buy Bitcoin, the response from the regulator was, why would you sell shares to buy Bitcoin? It's not your core business. Is this dilution good or bad? And so it's a process of education. Being able to say that there's a huge US public company that has done this and has a track record of executing has been really helpful. So I think, around the world, as people come up with creative structures to raise money to buy Bitcoin, we can all borrow from those experiences.
Yeah, so I think one of the ideas here could be that like Strategy initially put out our playbook and open source the playbook for others to follow, and a lot of companies are adopting that. It may be very interesting to have country by country playbooks as well, because you guys are all the first companies of those countries adopting Bitcoin Treasury company strategy. While it's all public, but then it's not very obvious to the companies maybe in the country or other countries if they are looking to enter any other country's broader market, to tap the capital. So I think it could be really interesting to develop country by country playbooks. That's a call to everyone in their respective countries, and I think that would be very useful for other companies to look at. So switching gears to more operation, non-treasury side of the business, how do you see the balancing of your non-treasury, but non-Bitcoin operations versus your regular like software, tech, healthcare operations? So starting with Andrew, you can provide your views.
We have our non-treasury operations, our software business, and in fact, many of us are here adjacent to this conference to also be here for our software business. It's been around for a long time. It's been an extremely successful business over the years. It actually carries the weight of our employees, that contribute to the entire enterprise. I would say that we've maintained a core focus on that business. We are relentlessly trying to innovate in that as well. Hopefully some of you heard some of the AI innovations we're building into our BI product at this conference. If you're able to, I know we talked a little bit about it at the main keynote. Still full force ahead on that side of the business. I think one important piece in our journey is in the past year, we have really come together as an enterprise. And what I mean by that is, historically, we sort of kept the two businesses and the mindsets somewhat separate. Like, if you're on the software side, focus on that. If you're on the Bitcoin side, focus on that. And there was some crossover that we had to address, but primarily it was, two sort of separate runways. In the past year, I think we realized there was a lot of importance in aligning the mindset and the culture around our business. And so late last year, I like to put it as we decided to orange pill the entire company. So it didn't matter if you focused on Bitcoin, it didn't matter if you focused on the BI business. If you wanted to be at Strategy, you needed to be aligned with the core principle of what we do with our balance sheet and the value that we're generating for our shareholders and our employees. So we, set out training courses, right? So every single employee at Strategy has to do Bitcoin training. And we've had, I think, 4 of them so far. And every training gets a little bit more technical. We dive into financial concepts. We started with the core principles of Bitcoin and the why. And so, for me, it's almost like, a transformation that we've undergone in the past year where, it's not just enough to be at Strategy and work on one side. You have to be at Strategy and work for the greater good of the whole. And I think one of the big culminations of that was our rebrand from MicroStrategy to Strategy. That is like a biggest signal of we're not an old software business with a treasury business. We are one strategy under a new brand, and our brand color is orange now. I think it's awesome. I've been walking through the halls and I see all of our software people wearing orange. And to me, that's just a reflection of one team, one alignment, and I think at the end of the day, that helps the greater good of the entire company.
And Simon?
I think the blessing in disguise for us is we had a core business that wasn't doing very well. And so we're not really focusing much energy into hotel development going forward. We still have one hotel remaining, and this is the hotel which we're in the process of converting into the Bitcoin hotel. And we think that's a really good strategic decision for us in our goal to onboard 1 million Japanese people into Bitcoin. As great as Bitcoin is, it's kind of up there in the ether, right? It's something you can't sometimes touch and feel, which is required for some individuals to get comfortable with Bitcoin as something to own. So the Bitcoin Hotel will be a place that has a Bitcoin museum, there'll be a Bitcoin art gallery, but really just a space for our shareholders and those who are curious about Bitcoin to come and spend time and learn and meet others. We also have the license for Bitcoin Magazine in Japan, and we think that's a wonderful way to also onboard people through education. But everything we do now is very much focused on Bitcoin. We think of ourselves as the Bitcoin-only company. We will accumulate as much Bitcoin as we can over time, and everything that we do around that core purpose is also Bitcoin.
Yeah, the question of balance is an interesting one because I'd say maybe more than the rest of us here, we're still very committed to healthcare and saving lives and building our medical business. But that business just moves at such a slower pace of development versus Bitcoin that Bitcoin has become, we're a Bitcoin first company because it's where most of our value resides. We were actually a medical version of MicroStrategy and Strategy and Metaplanet between 2016 and 2021. Our stock went up 136-fold. And when we had $1.2 billion valuation, we were, I think, 13,500%, probably the world's best stock in that time frame, based on one medical device that we still have that we're now applying to some new vascular diseases. They just take time to develop. There's obviously the potential that we're addressing even larger TAMs than we were before. So, but it's just going to take time. But as that's happening, Bitcoin just becomes bigger and bigger for us. And maybe, we hope the healthcare business can move the needle if it really takes off like it has in the past. But that balance is really being threatened by Bitcoin.
Makes sense. An observation on the pace of raising capital is that if any other companies, non-Bitcoin standard companies, when they were raising capital,
rising uncertainty
they raised a couple $1 billion. It's not the issue of raising this capital, it's more about the deployment of the capital, which is more challenging for these companies. And
at least the market didn't react. I'd say that's positive.
If any traditional companies acquiring any financing and raising some capital, they take 2 years to deploy the capital and multiple years to earn return on those capital. So it's a 5-year cycle. With Bitcoin, that deployment cycle has now gone down from 5 years to like 5 days with respect to Strategy. You deploy it in a week and you're ready again to raise more capital. So question for Andrew is then, is there a limitation of the size that you can grow, and how much Bitcoin can you acquire, and how does that play into the relative size of the operation business versus the Bitcoin treasury?
No limitation to how big we can grow.
That's a question that people think about. So,
no, I think our strategy really is, in terms of the two components, I think we have a lot of room to grow both. I think to your point, the Bitcoin strategy is one that is, on hyper speed, so to speak. And, we've done certain things to bring that speed forward in terms of faster earnings cycles, and what I mean by that is, weekly 8Ks, and that was a bit of a transformation for us at the beginning of the year. I think our transparency allows us to grow faster and adjust to that pace. We have our website up now that many of you have seen that gives 15-second updates on our metrics and our results. And so from the Bitcoin side, I think the pace and scale and the speed is reflected on how we've innovated on transparency and investor relations. I don't think there is a limit to how fast we can do that or how much we can grow. As I mentioned earlier on the software business, it's something that I would say we have every aspiration to grow that as big as we can. It's been a very steady business for the last 30 years. I'd like for that software business to be just as big as the Bitcoin business over a period of time. And Eric, to your point, right, that doesn't happen as fast in that operating function. But we're here innovating, and I'd love for the software business to be 10 times the size it is today. So short answer is no limitations. We're pushing on all fronts.
Yeah. And we talked about the Bitcoin standard KPIs, and Strategy devised the KPIs, and then we talked more about it, and Phong gave an elaborate presentation about it. So from other companies' perspective, how do you see the importance of those KPIs in your investor communication, and how that has changed the perception of your investors in your communication? Do they find it more useful? Do you have to educate them a lot? How does it go?
I mean, education is critical. As we get larger, the types of investors that one needs to approach are institutional of larger scale. I think the metrics that they have to value companies are using the traditional tools. And so Strategy has come up with wonderful KPIs that we've now adopted as well. And in all the communication that we have with our investors, we talk and educate about how these KPIs work. The brilliant thing about these KPIs and being transparent on your website, we have a similar dashboard now on our website, is that we can share on a real-time basis all the metrics that are important to investors. Having come from the traditional world, you trust, if you invest in a hedge fund, you trust the statement that you receive from the prime broker. Prime broker says, yes, I have $150 million of shares of this and that, but you have to trust that person providing the document to you is being honest. If you have it in a public dashboard, the things that might be buried in a financial statement are now front and center. And so I think it's imperative, it's critical that we continue to build on these KPIs. There's so many new KPIs from your earnings announcements, so I need to spend some time going through them all.
It will take some time.
Yes. We need a bit of time to adopt them one by one. But I think there's no other way than to come up with a new framework for the traditional investment community to understand companies like ours.
Yeah, I agree with all of that. I think that we're doing the live dashboard too, but we also have this kind of real-time feedback on social media from our shareholders. So we kind of get a real good feel for what they think of these KPIs. And I think people are particularly focused on yield. And that, I think, has been embedded as a really critical metric to focus on for all investors, institutional and retail. But I think these metrics are incredibly valuable and pertinent. But I think that they just need time to kind of, to marinate so that they can be proven out. I think there's still kind of a little bit of skepticism about how sustainable some of these concepts are, because they're working now. Why are they going to work in the future? And earnings multiples are really based on kind of this constant, consistent compounding concept. And the longer that we can continue to show good metrics, the more I think they become credible and the Overton window shifts and they become more mainstream.
I would just add that I think the financial framework and the metrics and the KPIs is, we're really early in that. And, we constantly think about how we can communicate better and more transparently. To me, it is a tool for our existing investors and our shareholders to have better transparency. I do think it's an amazing tool that is becoming bigger and more front and center in terms of how other companies can also evaluate their decision of whether or not to adopt a Bitcoin standard or not. Before it was a bit opaque. It's like, oh, we can buy some Bitcoin and it's all reflective on Bitcoin price, and maybe there was a bit of a vacuum in terms of how you could forecast valuation and accretion and gain and earnings off of it. I think that the tool is dual-fold. One is it allows your current investors to have a better understanding, but hopefully through conferences like this and discussions like this, it allows corporations, CFOs, treasurers and finance departments to say, okay, if I applied this to not having a Bitcoin standard today, but if I apply these concepts to potentially adopting a Bitcoin standard, it could help push people to do that as well. So I think there's a dual benefit there.
Yeah, and from a legal perspective, and lawyers may say they are all not the KPIs, so there are some KPIs and there are some metrics, so I want to put the disclaimer out. But then other than that, I think it's interesting to see more and more companies adopting those KPIs and seeing the importance of those KPIs in communicating their story. I think it will be also interesting if these companies start asking their bankers when they bring a new transaction to them, like calculate all these KPIs, and then they can compare all the options. So I think it will be a good exercise for all the bankers and lawyers to get familiar with this, and then we'll see broader education and the application of the importance of these KPIs. And now, so getting to a final question here, what advice would you have for other companies, either in your sectors or cross sectors or your country, other countries? Like, what advice do you have for other companies to learn from your strategies, to follow your footprint, and like, how do you see this evolving and playing out over the next 2 to 4 years? Eric?
I'd say listen to Mike. He's got the goods and he knows better than all of us. So I would listen to him closely. I think that's how I converted my board. I had them listen to a lot of Michael Saylor's preachings about zombies, and that was very convincing and persuasive to them. I spend a lot of my time when I'm not doing this and meeting with public companies. I'm an investor in mostly technology and media companies, and when I'm not here, I'm meeting or on a call with a lot of public companies, and there are so many that I will ask, what are you doing with all that cash on your balance sheet? And it's easier when they're not doing well. Obviously, if you ask Duolingo or why are you not taking your $800 million of cash and buying Bitcoin, they're like, what are you talking about? Where business is on fire, But if you ask maybe a Zoom Communications, which is not growing much, facing tons of competition and has, more than a third of their market cap in cash, and they're making $2 billion of free cash flow a year. I think that those types of companies need to be pressed. I think guys like me who have access to them through my own investing as a portfolio manager should do that. And that's what I do. I actually, on X, I have this thing called the zombie zone, where we call out companies that should adopt.
That's great analysis.
Yeah, we call out companies who we think should adopt the Bitcoin Treasury standard. And because I do this on a daily basis in my regular job, I see so many opportunities.
Simon?
I've got a few points. The first is to have courage and conviction. And so if the company doesn't have a leader that believes in Bitcoin and believes that it can be transformational for one's balance sheet, then it's not going to work. The second is don't listen to your lawyers or your consultants. Ask ChatGPT. I was inspired yesterday by that. It can do a much better job of telling you what you can and can't do. And then I think finally, you want to surround yourself with a board and advisors that believe in the common vision. If they don't, then ask them to step down. Stack your board with people that believe in the vision, that you need to have a push and a pull there, but if you have people that are always standing in the way of you wanting to move things forward, then it's just not going to work. But I'm feeling more optimistic than ever that this is the tipping point, and as we just said, by the end of the year, maybe twice as many public companies or 4 times as many public companies around the world adopting the same.
I think my advice is very consistent, right? We started this conversation around, the progress that is made in the past year. I think the examples are clear, right? Like if you adopt a Bitcoin treasury strategy, you can generate a tremendous amount of shareholder value. Bitcoin today continues to become more mainstream. We now have a more friendly regulatory environment. We have a lot of support from the government here in the U.S. I think there's a lot of tailwinds. There's a lot of underlying reasons why Bitcoin today is perceived in a much more favorable light than it was before. So don't be afraid of it. Learn about that core principle first, and then learn from our examples, right? You've seen charts of our performance, our collective performance over the course of the past couple of days. And it's tremendous. And at some point, we talked earlier about more companies adopting this. Then you're going to have more examples of companies that are going to have that type of success. And so, my call to, maybe it's an advice, but maybe it's my call to action would be to, have teams, CFOs, CEOs, boards think about at any size too, right? Not just the zombie companies, not just the small corporates, but the Microsofts of the world. Think about how you can, bring more value to your shareholders, how you can create performance and success through Bitcoin that our examples have provided, and don't ignore them, right? Think about it, go do the homework, apply our Bitcoin corporate finance framework, and really understand it in a way that I think will, be pretty obvious at the end of the day.
Yeah, we saw the Microsoft case study in action yesterday, very elaborately laid out by Michael. And we see more and more bankers also participating in the ecosystem now. And one thing that is common in all the bankers is they always carry a pitch book. And they're always talking about different options and proposing different things to different companies. I think it would be great if they should just start presenting the case studies of all these Bitcoin treasury companies and show this performance. Look at our website, strategy.com, if you want to download the performance charts, and start building the case studies on all these companies, on the performance across any different time periods and what these companies have done, and have that section as a section at the back for all the companies they're presenting to. That will be really fantastic, and I think that will also generate a lot of prospects for those bankers, and we are here to educate those companies. So with that, I would like to thank our panelists and everybody else for joining here. It's clear that going all in on Bitcoin Standard, it's not just about hype, it's about courage, conviction, and vision. And the playbook for Bitcoin Standard companies is still being written, and you all are holding the pen. So thank you very much.
Thank you. Thank you.
God damn.
Treasury company. So we're about to learn a little bit more about that because they pretty much went radio silent right after that post. So we're going to be introducing Matt Cole, the CEO and CIO of Strive Asset Management, which was co-founded by Vivek Ramaswamy. He leads the firm with a focus on establishing its Bitcoin treasury, both by accumulating Bitcoin and building a long-term investment approach designed to outperform it, using Bitcoin as the hurdle rate for capital deployment across the firm. A longtime Bitcoin advocate, Matt previously managed more than $70 billion in fixed income portfolios at CalPERS, consistently delivering benchmark-beating performance. He helped drive the shareholders' first movement against ESG and DEI mandates, and now the focus, of course, is maximizing Bitcoin exposure. Before we hear from Matt, a short video.
We want to be a part of taking Bitcoin to the masses in a really well thought out way. When we talk about Bitcoin, we view Bitcoin and investing in Bitcoin as an asset class, not just an asset.
If your company's sitting on a stockpile of cash, you're going to hold a lot of it. A lot of them do today in the form of US Treasuries. Very few of them are holding those in the form of Bitcoin today. I believe that is likely to change.
Strive is all about capitalism, maximizing value for shareholders, period. Bitcoin is the most pro-capitalism, pro-freedom in the history of financial markets. And so our view is that corporate America needs to adopt Bitcoin in a major way, and that's why we're here. As a long-run investor in your company, in the future, if you've deployed capital and you've underperformed Bitcoin, then my view is that you should be fired.
Wow, well, I don't want to be fired. I'll just start with that. But just to take a step back, my background is actually traditional finance, not Bitcoin as the video laid out. I was a $70 billion portfolio manager at CalPERS. They're the largest pension in America. And so I was doing a couple different things there. One, I was one of the larger buyers of structured securities. And so Michael Saylor has given a masterclass over the last few days from the earnings release to yesterday's presentation on why these innovative fixed income approaches are so important for a Bitcoin treasury company, because it's not just about buying Bitcoin, diluting shareholders. You actually need to do it in a way that accretes value, and structured securities is so important for that. So anyways, that was part of my background. The other was I was one of the larger buyers of US treasuries in the United States. And so for many years, I was sitting there staring at the debt crisis of the United States and buying the debt, because that was my job. Sitting there watching the Fed print money time and time again, and then we would meet with the Fed and I would say, "You're printing money." And they say, "No, it's not printing money." I'm like, "No, it's printing money," which somehow they still think that it's not that monetary easing has not been printing money. And staring at the problem, and then it became very clear for me in about 2016 that Bitcoin was the answer to every single macro problem I was seeing as a fixed income investor, managing a pension that was underfunded, trying to meet its liabilities for those that served California at CalPERS. So I went all in on Bitcoin, and my last few years at CalPERS, I tried to help them look at it from an asset allocation perspective. When Strive was founded in 2022, they brought a refreshing mission around financial freedom. And the first part of that mission was really about pushing back against constraints in the capital markets. Those constraints were ESG constraints that we were initially focused on. And what we showed the world in just a couple short years is that corporate governance and activism and advocacy can drive major change in corporate America. And so just in a couple years, the ESG movement is pretty much behind us. It's not popular anymore. And we're entering what I believe still to be the golden age in America of innovation. I think AI is going to drive that in a major way. A world of abundance. And in that world of abundance, there is going to be a massive, massive premium on what is scarce. And Bitcoin is the most scarce asset ever known to man, the most perfect form of money. And so our focus now in our advocacy efforts, our number one focus, we're still fighting back against ESG overreach when it's there, but our top focus is Bitcoin corporate adoption across corporate America. And it really is staggering how early that we are in this movement. Less than 1% of companies, public companies, have adopted a Bitcoin treasury. We just had a panel of innovators. We're the newest now Bitcoin treasury company, and we're going to accelerate in every single way that you could possibly imagine. Our board is designed to accelerate. We have a couple different independent board members that we've announced today. Jeff Walton, Ben Workman, kind of the hurdle rate pod crew, and then Ovik Roy. I see you right there. And that's key, because one of the first things I've noticed as we've advocated for large corporations to adopt a Bitcoin treasury is the stakeholder management. You can't have a board of directors that's going to slow you down. Innovation and acceleration is key to deploy a Bitcoin treasury strategy and deploy it in a way that's going to be accretive to shareholders, to common equity shareholders, because it's not just about, doing a Mickey Mouse, do a bunch of ATMs, which is great. You use the ATMs when it's accretive to common equity shareholders, but you need an approach that's going to be much, much more sophisticated. And I want to lay out some of the innovations that we're going to bring to the table because, yes, Strive, like probably every other Bitcoin treasury company, is going to lean into the playbook that Michael Saylor has innovated and continues to innovate. I mean, I think it's unreal, the innovation, the new securities that he's laid out, the attractiveness of them. I mean, I'm a huge fan just from a fixed income perspective of the convertible notes and the better risk-adjusted return that they can provide for people that want a little bit of downside protection. But man, this place is so early. And so my background being, coming from CalPERS, institutional fixed income portfolio manager, we're gonna bring some new things to the table. And so I want to lay out a couple different things because this space is fastly evolving. So the first new thing that we're bringing together is actually part of our initial transaction, where we leveraged learnings from the asset management industry to structure this transaction in a way that allows for a tax-free exchange of Bitcoin for shares of our Bitcoin treasury company. And that is an unlock. And it's an unlock in a few different ways because we all know Bitcoin goes to the moon very quickly. So what that means is that all these OG Bitcoin holders, they have a lot of gains. And so as Bitcoin treasury companies are evolving, a lot of them want to buy them, but they have to realize a tax gain, pay the IRS, and then obviously have less money to go buy an investment. We're able to do that in a tax-free manner as part of the close of this transaction because of the way it's structured. And I think that's really an innovative way to start a Bitcoin accumulation strategy and to start one in a way that will be accretive to the common equity shareholders on a couple different dimensions. But I'll just give you one that's really a 1 + 1 = 3 kind of movement between the Bitcoin holders and Strive as a Bitcoin treasury company. And that's that because those gains come over, those Bitcoin holders are likely to be longtime shareholders of the company. You're actually getting a more stable capital base versus having a bunch of hedge funds. So that's the first part of the innovation that we're bringing as part of this transaction. The second is one that I'll keep it more high level because it's hard to almost believe unless you see it. So I want people to see it, but I want to explain the high level of it. So there's an interesting issue in capital markets where many publicly traded companies are actually trading below the net cash that they hold. So even after you take out the liabilities of these companies, the net cash, the companies are valued at less than the net cash. And so Strive sees an opportunity here, multi-billion opportunity, to actually merge those companies into our Bitcoin treasury company and to basically acquire $1 for 90 cents on the dollar or less and use that money to buy Bitcoin in a way that is accretive to the common equity shareholders, right? Because to me, there's not much of a better way that you can accrete value to common equity shareholders than to buy a Bitcoin for 90 cents on the dollar or less. And so that's something that we're actively engaged in right now. Our hope is that we can announce something before the close of our transaction or shortly thereafter, but I think it's a very innovative, repeatable strategy that is a multi-billion-dollar type of opportunity that we're bringing to the table. And again, it's leaning into the finance experience for us as a financial services company, things that we see. The third interesting innovation that we're bringing to the space is actually going off of my background as a structured securities portfolio manager, options strategies, derivative strategies. And what it is, and I'm not going to go into the full details because you'll see it when we actually do it, but the high level is there is opportunities to increase leverage beyond what you've even seen to date in Bitcoin treasury companies. Because the clear thing that you have to look out for is what is the downside? How do you break these things? Because you can always break anything, and I'm of the belief that the Bitcoin treasury companies that exist today are almost unbreakable. But I think that we can even level up another place by actually having a hedge strategy that provides explicit downside protection. And by doing that, we can increase leverage. And as everybody in this room knows that is watching Bitcoin treasury companies closely, if you watch the Q1 earnings presentation for Michael Saylor and the layout of Torque and how leveraging intelligent leverage through fixed income strategies can accrue value to the common equity shareholders and actually justify a very high multiple to the NAV of the Bitcoin in ways that just using common equity strategies can't. And so that's something that we're looking to do in another innovative approach. The last thing is less of an innovation, but it's actually part of the structure of our transaction. And so there's many ways to take a Bitcoin treasury company public. And the way we did it was actually reverse merging into a company that's already public. That company's asset entities. And just briefly on them, I mean, man, they're actually going to be very accretive to our actual operating business. These guys are absolute shippers, tell stories really well. And as everybody knows in this room, education around Bitcoin is so important, and they're going to help us take that education to the next level. But their company, as we reverse merge into them, allows us to have immediate access after close to a shelf. And as you know, Strategy uses a shelf, and Bitcoin treasury companies use a shelf for equity offerings and fixed income offerings. So we want to accelerate in manners that obviously accrue value, maximize value for common equity shareholders. If you don't, as you heard, my view is, as a CEO, if you underperform Bitcoin over the long run, you should be fired. I hold that standard to myself as well. That's the standard. It's a hard standard, but why are we at that standard? We're at that standard because there has been a misallocation of funds in corporate America and the world for the last several years. Stock buybacks that shouldn't have happened, dividends that shouldn't have happened, capital expenditures that shouldn't have happened. We've had an era of easy money, and that era of easy money is over. And where are we right now? We're in an era in this conference which I think in a couple of years this conference is going to be at sports stadiums. It's going to continue to grow. And Strategy is, in my view, and I don't think this is even controversial, but it's probably controversial to people outside of this room, the most well-capitalized firm in the world. And we're going to build on that. We're going to do it in novel, innovative ways. And our hope is that we can be a leader in the next wave of Bitcoin treasury companies, and that there's just so much room for innovation in this space. And I think what you're going to see is you're going to continue to see the people that are focused, that have a board that's focused, that has a management that's focused, that's dedicated to the success of a Bitcoin treasury company, be the ones that are actually going to be able to take this stuff to the next level. And that's what we're going to do. Strive, I'm happy to say, is a Bitcoin treasury company. We're here to stay, and thank you for your support.
All right, next up, we're going to be talking about turning volatility into value with Javier Rodriguez from XBTO. Javier Rodriguez Alarcón is the head of asset management and chief investment officer at XBTO, a quantitative crypto investment firm. He'll share how corporate treasuries can benefit from Bitcoin volatility as an effective tool to accumulate BTC and simultaneously produce income. Drawing from his extensive experience in quantitative investing at Goldman Sachs and Barclays Global Investors, he will elaborate on the uses of derivative strategies in the context of Bitcoin. Please welcome Javier. Nice hat.
There we go. So this is to move this thing. Okay, so just to start with the dress code, I mean, when I actually decided to leave Tri-5, I promised to myself that I would never wear a tie. So I know that a lot of people is wearing, ties. I mean, orange ties. So I decided to go for the socks, and I actually having the hat. So anyway, I'm gonna leave it here. But so yeah, I mean, I think very important. I'm gonna probably use a lot of the terminology that you actually have seen in this conference. Great people, great content, and actually, amazing venue. But it's going to be a lot of messages that probably have resonated with you already. But there's one very specifically that I wanted to leave with you, and it's the fact that volatility is an opportunity. Okay, so I know that a lot of people have been talking about volatility to be risk, but it's actually, let's kind of go through how we can do something about it and how we can utilize that. So there we go. So, just to kind of set the scenes. And, we have been talking about all the strategic use cases of, basically BTC for treasurers. But I will actually kind of summarize this into 4 things. The first one is a hedge. I mean, we talk about hedge as an inflation hedge, and a monetary policy is a diversification. We know pretty much that the profile of Bitcoin is actually very different to what you have perceived in equities or fixed income. And very important as well is that it has a very asymmetric distribution of returns. And we have seen that, but it's actually something that we can use to our advantage. And lastly, and very important, is a very mature infrastructure. And I think a lot of you guys have been here in this space for quite a long time. I mean, I've been investing in BTC, Bitcoin since probably 2016, seen all the rides, and the infrastructure has been incredibly different to what we have in terms of microstructure of the market, in terms of how we can do custody and different things. But let's talk about this in a second. So how do we actually think BTC having a strategic edge? And I think a lot of you guys have been hearing from people putting this into the treasury of their companies. And it's mainly because we call it, and I love to call it, digital gold with wings. But it's actually for 3 different reasons. Scarcity, I mean, we heard from the previous speaker, 21 million coins. Liquidity, 24/7 days a week. I'm a quant investor all my life, and I can't believe of something, finally we have an asset that I can actually put risk or reduce risk on Saturdays, Sundays, when we actually have a news, when we can't do anything about it. This is actually incredible. And very important, actually we trade what? We trade between 50 to 100 billion in a day, if you count the derivatives market. Well, think about it. We talk about a lot of the stocks that we love to trade that we see in the sticker, like a microseller mentioned, that goes in CNBC and all the time passing by, is Apple, Microsoft. Well, actually, Bitcoin trade the same sort of volume of those stocks, okay? And, if you can compare to any G12 currency, particularly the small ones, I mean, pretty reasonable as well volume. So there is a lot of interesting characteristics of this asset. And lastly, and not the least, what I think is incredibly important, is a borderless. It's probably the more secure network that exists, completely decentralized, and that's actually a feature that all the assets that I mentioned to you before can't offer. No fixed income, no equities, none of those companies. So this is actually an incredible advantage that we can do. But everyone talks about the biggest problem. Talk about the issue about volatility. Is it volatile? Yeah, it is volatile. And I think, there was a very interesting quote from Chris from Fidelity, who said that volatility is not risk. Risk is capital destruction. And I agree completely with that. That's exactly what we're actually talking here. But what is volatility, and what terms are we talking about volatility? So you see the graph there. The orange line is the daily, basically changes in terms of daily returns for BTC. Yeah, it's significantly more volatile. But as well, I compare that with the S&P 500, daily changes in their returns. But let's focus on something. Let's talk about the fat tails, or the tails of that distribution. So if you think about it, okay, well, you can see that if I give you a little more of those numbers, BTC, Bitcoin, in a bad day, in the 5% worst days, it actually loses around 5.6%, versus the S&P 500 around 1.7%. Now, if you go to the other side of that distribution and you go to the 95 percentile, so the 5 best days, well, you actually see that, BTC perceived, delivery something around 6.2%. So minus 5.7% versus 6.2%. So in a quantitative jargon, that actually means is that the distribution is skewed to the positive side. And I think I don't have to say to anyone here, everyone believes that the prior is that BTC will actually go higher. Well, it's actually showing in the distribution of returns, okay? It's there. Now, but if you compare that with the S&P 500, well, you lose minus 1.7%. But if you actually look at the 5 best, performance, it's going to be 1.6%. Well, that's no positive skew. But actually, we love equities. We think equities is a reasonable sort of, trade-off in terms of risk and return. Now, BTC is significantly better. Now, so how can we actually take advantage of that? And I remember I saw the presentation from the gentleman from the CEO of MetaPlanet, which I think is kind of quite interesting, the analogy that he does, that he has in this slide, that he has a reactor, where you actually have BTC, a reactor, and it has a lot of energy coming out. But that energy, I kind of perceive it to be volatility. Now, the question is, how do you harvest that volatility to your advantage, and which is kind of quite important. Now, the problem is that everyone thinks about one thing. Everyone thinks about holding BTC, a passive asset. Now, oops, do we just kind of go back? Let's see if we can. I think I moved the slide too fast. Is it possible? Yeah, there we go. So basically what actually happens is that everyone focuses about getting the entry points, and the entry points is holding a passive representation. It goes back into, but I will skip that slide. So it's a passive holding, but you actually can't, you tell me who or you actually suddenly hold assets, and it said it's either a house that you don't use, it's either cash, it's either equities, it's either fixed income that you don't do something about it with those assets. All right, so why do maintaining those assets and not thinking about getting those assets to work? If you have a house, you kind of rent that house. If you want to actually have an equity, more likely if you're a treasurer of a company, you will lend that equity, and you potentially can do something about it. So, but the question always is that how do you measure about the custody? And we hear a lot of people talking about custody. How do you assess the risk, which is very important, and how do you actively manage that risk? So, with that in mind, it is a trade that is actually quite important. So we're going to harvest the volatility. However, you think about this graph that I have here, as soon as we can have more people adopting Bitcoin, volatility is going to continue down. And that graph showed you that the realized volatility of Bitcoin is actually going down over time, as just kind of a completely orthogonal with the fact that you are adopting, you're increasing adoption. Now, if you look at the purple line, it shows you the ratio between retail investors and institutional clients. And you can see that the last year, that line is not growing, it's getting flat. What that means? There's more institutional comments into this. And volatility will continue to go down, because a lot of what I'm saying to you, we do it for clients, and they are mainly institutional clients that are actually harvesting volatility. Now, the important thing is that, okay, well, volatility is coming down. That's true. But actually, it's still pretty high. So if you see what actually happened recently in terms of the events that we have with the tariff, we go the VIX going out to 50%. Well, that's the standard sort of level that we see with Bitcoin. All right, Bitcoin usually volatility trades around, depends if they're 60, 65, 70%. And we want to talk about how the surface looks like. But it's still pretty structurally high. Now, why you would actually sell volatility? What is the benefit of selling volatility? Now, first of all, the structural issue that I mentioned to you is volatility high. So people want to kind of try to harvest that energy that is coming out. But how can you use it to your advantage? I do multiple different strategies that we can cover, and probably if you're interested in another time, for example, carry, for example, arbitrage between futures markets and different exchanges, all this different fancy stuff that is actually very quantitated, but there is something very simple, okay? Which is, if you want to set, I want to accumulate more coins, for example, I can actually sell put options with a particular set of strikes. If I tell you, for example, that you get compensated at the moment in time, we actually go $97,000, let's call it price now, and I said that you can actually sell put options at 85 or 82 for 2 weeks, and people is going to compensate you for that. Would you actually do that? And that will give you the ability to buy at that particular level. So the payoff would be at the end of the 2 weeks or 1 week, if your Bitcoin is trading to that particular level, you will actually receive BTC. Would you be keen to do that as opposed to paying the 97? What is the risk? Well, the risk is actually there is an 105 and never go to that level, but you actually receive premium for that at what we actually to be described to be a high volatility. So what actually a lot of institutional clients use this is as a way to enter and decide where I want to buy those assets and what I'm going to buy that Bitcoin. It's a particular level. So you have a bit of that discretion to do. Two, that premium that you're receiving, you can actually generate yield. You can express it as a yield of that particular investment. So going back to the point that I mentioned before about you want to make sure that those coins are working for you, well, here is a way that instead of actually leave the coins idle, you will say, oh, I'm going to actually generate some yield for that, and I want to express it in that way. That premium is reflected as a way to that. And lastly, a lot of the institutional treasurers and people that are holding BTC, they want to do something that diversifies them from lending the coins. And I know that probably a lot of you have experience of that. You maintain your treasury of BTC, but you need to kind of do something with that in some portion. So what is the initial thought that you have? Okay, well, I'm going to take some credit risk. Let me actually lend those coins to someone. Well, we know that it's a market that is actually very one-way. It's either too many people with too many coins or some people with too many dollars, and that's actually very difficult to kind of measure, and there's the credit exposure that you have there. But here, if you actually have the ability to take advantage of that mature infrastructure, those volumes that I talked to you about, open interest in terms of a derivatives market that you have currently in the option market for Bitcoin, you could actually diversify that source by basically doing yield. Now, I'm going to move on quickly. So pretty much, this is something that we do systematically for people. And just kind of illustrate a bit. So someone wants to sell puts to a particular level. They basically sell the puts. The strike get exercised. Let's assume actually falls. Okay, you get exercised. You receive a perpetual. You technically get a high exposure. There's a couple of things that you can do. You can actually sell calls to get rid of that excess exposure if you don't want to maintain more BTC, or just simply you keep the exposure and then you can accumulate more of that. So now the question, and it's very interesting, is that you need to kind of put more capital. You put your capital, which is basically the original Bitcoin that you have in your strategy, and you put that to work.
Crazy to think
okay?
about.
So
Very,
very important.
Selling
now,
call options.
Going back to what I said about the distribution, the symmetric distribution of returns of BTC, it is very important to understand that, yes, the coins, BTC, move on price. Okay, today we actually have a 2% change. Well, 2% change, as I show it to you, is now the 5% best returns that you can actually have in BTC, because we said that the average or the mean is around 6.2%. But 2% is actually a tail event in the equity market, as we said for the S&P 500. It's on the 5 best percent, it's actually below, but the 5% best daily returns is actually significantly lower than the 2%. So again, what I'm saying to you here is that, yes, BTC can be more volatile, can be more risky, but in the sense of movement, not in the sense of capital destruction. So how can you take advantage of that is super important. So I want to show you some interesting numbers here. By taking a very small amount of risk here, you basically have the ability to accumulate more coins. So here is actually something that is a live performance that we have done. The returns go from 59 to 70% in the dollar terms, and the volatility actually go from 67% to 69%. So if you are actually holding BTC and Bitcoin, I mean, the volatility is 68% versus 69.5% is actually not going to make a difference in terms of what you see. But you actually can see how you improve all your risk and return profile, which is super key and important. But the bad news is that it's not straightforward. Okay, it's a multi-dimensional problem. When you're actually going to sell volatility, I mentioned to you, you want to know when the volatility is in the right market, what the market environment is actually appropriate, what sort of deltas or basically strikes are you going to actually do that. For example, you're not going to sell volatility when the market is tanking and you are in a period of the downtrend. So there is ways that we assess it, for example, by looking at trend following signals to assess where we are in the market, making sure that we don't sell risk, that you size the risk, It means that basically volatility versus the delta. So there is a lot of different sort of tools that are actually available because we know that that infrastructure is now currently mature and you can take advantage of that. The only thing that you need is make sure that you educate yourself, you understand the risk, or you actually get the help of someone who can actively manage that risk for you. But it is a very interesting way to take advantage of that volatility that is structurally high. And that's the important, going back to the point about the reactor, you get all that energy. Let's make sure that we harvest that energy in a way that you can accumulate more coins and actually generate better returns. So I'm going to stop here, and great to have the opportunity to be with you here. Okay? Thank you.
Here, 1 BTC equals 1 BTC hat. I was excited about that. All right, next up, we're going to be listening to Peter Carl, the Managing Director and Head of Crypto Investment Banking at Cantor Fitzgerald, where he leads the firm's digital asset capital markets strategy. With extensive experience in investment banking, Peter has been instrumental in structuring and executing significant capital raises for leading Bitcoin companies. Please welcome Peter Carl.
Hello, everybody. Thank you for joining us today, and thank you. Started in the crypto sector in 2021. We grew the team, and in 2022 we had our first crypto conference in Miami in November of 22, and FTX had declared Chapter 11 the day before our conference. So that made for a very fun event. Felt more like a funeral than a conference. And this past year at our event in Miami, it was our most well-attended event. Michael was one of the keynotes, and a little bit different sentiment at that point. It was mostly people watching on Polymarket how the current administration's cabinet was going to shake out. But Peter Carl, Managing Director, I lead our crypto and digital asset coverage on the investment banking side of the house, joined by some of my colleagues here in the crowd. And what I want to talk to you about today is who is Cantor Fitzgerald, demonstrate our commitment to the digital asset sector, and also, and most relevant to the audience, introduce our new Bitcoin lending facility that we think is really going to reshape the market. So who is Cantor? Cantor is an 80-year-old institution formed by some of the world's leading companies. We have Cantor, which is our investment bank, BGC, which is a brokerage and financial technology company, and Newmark, which are partners on the commercial real estate side that have worked with us extensively building out projects, especially within the Bitcoin mining and digital infrastructure sector. So Cantor is focusing on Cantor specifically. We are a full-service investment bank, and we've been a leader in the crypto and digital asset sector for a few years now. We have full-service investment banking across equity capital markets, debt capital markets, M&A, private capital raising. We have one of the largest equity distribution forces across Wall Street, and we are one of the last remaining private partnerships across Wall Street. And that allows us to be very nimble. If you take one thing away from this presentation, it should be that Cantor is foundational, and we will be here for the tenure as this sector continues to grow. We're not opportunistic, and we've seen a lot of people, as you all have, come in and out of the sector. We are committed from our chairman level down, and while we've made incredible progress, and Michael said to us at dinner last night, how could you ever sell Bitcoin now? We have the institutional adoption. It's also still early. We have a lot of growth to go, and we're building our platform around that. So we're about 14,000 employees globally, New York, Chicago, San Francisco, London, and regional offices across the globe. So getting to the important slide here, this is kind of demonstrating our commitment to crypto. So as I mentioned, we built out the team starting in 2021. A lot of companies were going public through SPAC mergers at the time, and in the public world, a lot of the public companies were Bitcoin mining companies. We hired the only dedicated crypto research team across the street. You can find them walking around. I won't say much more. Compliance is always watching. But we have a great crypto team that covers the entire sector and dedicated research to the sector. They're not repurposed fintech analysts. And the same thing goes with our coverage group. So we have about 10 bankers dedicated to the sector, not repurposed fintech bankers, not digital infrastructure bankers, not repurposed coverage bankers. We are focused on the sector across the spectrum. And a lot of what we've done has been in the Bitcoin mining industry in terms of capital raising, because that's where the public companies were. So we raised about $10 billion in convertible bonds last year. It was an incredible whirlwind, and starting really after the BTC Nashville conference, who puts on an incredible event every year. But starting after that conference, you saw miners start to tap the convertible debt market. And this was a natural progression. We lead most of the ATM programs in the market, which has been the lifeblood of this sector. But eventually ATMs get dilutive. And by introducing additional shares into the market, increasing the technicals and the borrow of these companies, we were able to raise over $10 billion in convertible debt. And in total, we raised over $30 billion across 35 transactions. And the strategy numbers, of course, always help with the amount of capital that they've been raising. This year, as I said, we hosted our crypto conference again. And I think all of this in summation, and what was evident at that conference and what's been really helpful is we found unique investor interest in the sector. So as you're working with institutions, there are the marquee names, blue chip mutual funds that everybody can introduce you to. But where we really pride ourselves is with our large sales force, with our research team, with investment banking, finding unique pockets of capital that are interesting. And a great example of that is we launched a $650 million convertible bond for CleanSpark in Q4 of last year. And it was after MicroStrategy had tapped the market, Mara had tapped the market, Core Scientific, all of the miners. And the market fell out, and investors finally said, we've had enough. We leveraged our relationships, we structured the deal appropriately, and we raised them $650 million at a 0% coupon with an effective 100% premium with the use of a capped call. And it changed that company for the foreseeable future, and they remain one of the last pure play miners. But we're excited about where we're going from here. So we see a pipeline of IPOs outside of Bitcoin mining, a little bit of volatility, some news on tariffs apparently, but we expect the IPO market, which will just diversify the public company portfolio, which just makes the digital asset ecosystem more solidified and will allow all of you to be able to access the market with less risk here. So this brings me to really the crux of the conversation, and I'd love to have follow-ups with anybody interested in this. I have a few of my colleagues here. We can get more into the details. I'm going to keep it relatively high level, but there hasn't been an institution with Cantor's track record. Cantor has an 80-year track record. We're an investment grade rated company. We're a primary broker. But there hasn't been that type of counterparty that was willing to lend to the Bitcoin ecosystem. So with our partners, we launched this initial $2 billion program, which we initially announced last summer. And we have had an incredible amount of demand here. This is a non-recourse, non-mark-to-market facility, meaning we're not going to hit you with a margin call if things swing 5 to 10%. This is a volatile market we live in, and we're trying to provide flexibility to you. The rates are SOFR, think high single digits and a very competitive loan to value, making this a product that makes a Bitcoin treasury strategy even more feasible, because if you don't want to sell your Bitcoin and you want to gain yield, you have a trusted counterparty that you can borrow with in scale, with flexibility, and with trust. And that's incredibly important as well. We've announced that we're partnering with Anchorage and Copper as our custody partners. The same teams that are working with BlackRock. And our goal is just to give more comfort to our corporate partners. And also, we view this holistically. So we are not a fund that's looking to make a quick dollar here. We want to build a comprehensive partnership to work with you, again, across your equity capital markets need, across debt advisory, across M&A. And this is just another piece of the puzzle. And we're constantly looking for additional offerings that we can provide from a large global investment bank, because we just haven't seen that yet. Another thing to hit on, and another testament to our depth in the sector, and something that I think everyone's excited about. We launched 21, which is our Bitcoin acquisition vehicle. We announced that candidly when we started. We were a little nervous how Michael and the team were going to react, but could have been more supportive. The white paper is public, and we built that, and imitation is the purest form of flattery. We did that in partnership with Tether, which is publicly available, that they've been an incredible partner to us across a lot of different initiatives. They contributed $1.5 billion of Bitcoin. And we brought SoftBank back into the digital asset ecosystem. They have not played recently. There was a lot of work that was done, but between Tether and SoftBank on that announcement, I think I saw Bitcoin jump $7,000. But we plan to replicate the same strategy, and we're incredibly excited for that transaction. I can't speak too much more on it as it's still to close. And then, today we saw a few more announcements, and a few people came up to me and said, thank you for announcing 21. That helped me get my deal closed. And that's what we want to see. This is an ecosystem that success creates success, and we're very excited for that to play out. So what I'd like to do, and again, I don't want to get into the terms specifically up here. We'll be outside with the full team. We can follow up. But we are lending in scale. So I think for this initial $2 billion, we probably are not looking at $10 million loans, but we can go as big as you need. So 50, 100, multiple $100 million. We have that scale. It's easy. We have the program in place. And the initial $2 billion, which if we hit all the demand that came in, would be spoken for. We have additional tranches of $2 billion that are going to come out. So we're excited to talk with you guys, and it's just, again, I just want to emphasize, it's a piece of the puzzle here. It's a piece of the puzzle to help this ecosystem grow, and while thinking through Bitcoin as treasury and what that looks like, whether you're a miner or an exchange or a staking player, or just a corporation that believes that Bitcoin should be part of your balance sheet, we want to talk to you. We've had interest from all the different categories, and we're excited to get this program off the ground and continue to scale. So with that, I ask that everybody, if anybody's interested, please meet us outside. We'll talk in more detail. We can get you in touch with our Bitcoin lending team, which is based in New York. And if anybody has any other questions or wants to talk capital markets, M&A, we have our full team here today. And that's really why we're a Titanium sponsor of this conference. We want to be viewed as a trusted partner and appreciate everybody's support in this ecosystem, which is just going to continue to grow. So with that, thank you again to the strategy team, and we'll be outside. Thank you all so much.
You know what's crazy? Fucking GameStop got their convertible bond from U.S. Bank. Just something to think about, I guess. I don't know if it really matters, honestly, but kind of interesting.
Roundtable about shaping digital assets. We're going to be hearing from Dax Hansen, Connor Brown, Brittany Ruiz, and Neil Matra. And the moderator is Ming Shao, who has served as the Executive Vice President and General Counsel at Strategy. I welcome all of them to the stage. Ming, take it away. We got to get the chairs back up here. I hope that everyone is really enjoying the conference. We do, again, really want to thank the sponsors, because these conferences, they're very difficult to put together. There are so many people working behind the scenes, and it couldn't be done without your generous support. I hope that everyone's had the chance to network and meet one another. I mentioned this earlier before, but again, this is a conference which has so much professionalism, so much true signal, but it's not just these massive corporations coming here. There are so many small business owners. I'm one of them. I have a Bitcoin corporate treasury strategy for my media company, and so I hope you get a chance to get to know people, because any business can really make use of Bitcoin and embrace it as a technology. I hope that you will all join us this evening for more of the festivities. We've got a great afternoon. We're going to be capping off.
Wouldn't it be wild if if banks are just giving all these convertible bonds out and shit, and then they just rug the fuck out of it? I don't think that'll happen, but you know how funny that would be? That'd be pretty funny. That would be pretty funny.
Connor Brown, Brittany Ruiz, and Neil Matra, who Ming will be introducing further.
you hear me? My name is Ming Xia. I'm the General Counsel at Strategy. Welcome to the Regulatory Roundtable. I am not as good as Oz the Mentalist, but I think I know what many of you are thinking. Middle of the afternoon, regulatory matters, nap time. But that could not be further from the truth as to what's going on in the digital assets regulatory area. It is the most exciting time that I've ever experienced so far in a positive way. And what a difference a year makes. I still remember at last year's panel, Neil Matra, who's up here again with us today, predicted two things. He predicted first that Coinbase was going to lose its lawsuit with the SEC. And then he also predicted that the various spot Ether ETF applications were all going to be denied. Both of those turned out to be totally wrong. And as I think about it, this is a terrible advertisement for this panel and maybe for Neil, but it really wasn't his fault. Because what really happened was that the regulatory landscape changed so dramatically and unexpectedly, largely due to politics, that change is going to continue. Even Congress looks like it may be poised to adopt major digital asset legislation at some point, maybe later this year. Fortunately, we've got a panel, 4 distinguished experts who are going to help us understand what is happening in the regulatory arena and what it means especially for companies that are interested in pursuing a Bitcoin Treasury Reserve strategy, or if you're a company that is working or servicing in that ecosystem. Before we get started, I do want to introduce our panelists. And first, I'm going to start off with Dax. If there were ever an OG crypto attorney, he would be it. He's a partner at Perkins Coie. He founded the firm's fintech industry group many years ago. He's advised on various industry firsts, including the first Bitcoin exchanges and tokenized assets, as well as the first public company adoption of Bitcoin as a reserve asset. That would be our company. Really appreciate the pioneering partnership over the last 4 to 5 years, Dax.
Thank you.
Then there's Neil Matra, whom I mentioned earlier. He's a partner in the financial services practice at Deckert. He advises on securities issues, especially those relating to blockchain, crypto, and fintech. And he previously served as a crypto and fintech specialist in the Division of Trading and Markets at the SEC. Welcome back, Neil. Then there's Brittany Ruiz. She's a capital markets partner at Latham & Watkins. She advised Strategy's novel preferred stock offering, Strike, STRK. Thank you so much for that collaboration, Brittany. She routinely represents companies across the digital assets space in debt and equity capital market transactions, including advising on the 2021 Coinbase direct listing. Very pioneering. And then finally, Connor Brown, counsel to Senator Lummis, who is chair of the Senate Banking Subcommittee on Digital Assets. He advises the senator on Bitcoin, digital assets, and AI policy. Before joining her team, he practiced law at a well-known corporate law firm in their fintech
Yeah, they
and
got it from
blockchain
US Bank.
group. So welcome,
I believe.
Connor.
That's what it says on.
With that, we're going to go ahead and get started, and I want to start off with the first topic being the SEC. And Neil, maybe this is a moment of redemption for you. You used to work at the SEC, and you're currently, I guess, a roundtable participant with their crypto task force. Can you describe to us the magnitude of the change that is going on at that agency, and tell us what this crypto task force is, and how is it relevant to Bitcoin?
Thank you, Ming. It's great to be back at MicroStrategy World. And I see what you're doing here, putting me in the middle and asking me about my mistakes. But there is a story here, and it is a very interesting story, I think. When did it all change, and why are we in the promised land? Because I think we are. But it's because the easy answer is obviously to say President Trump won the election. He'd made promises to the crypto industry. And that is true, but that is not where the story begins, I think. The story really begins about a year ago, shortly after this conference, when the Financial Innovation and Technology for the 21st Century Act passes in Congress. Sorry, passes in the House. It wasn't introduced in the Senate, but it passes in the House. Not only does it passes with a thumping majority, including 70 Democrats. And that gives you a sense that the political winds are significantly shifting around crypto. And I think the SEC got that message. And that is partly why the Ether exchange-traded products were allowed to get through. But that's kind of all that really happened. All the other changes are after President Trump takes office. And boy, do those happen quickly. And they're happening at 3 levels. They're happening at the executive level with the president, with the SEC as well, and they're also happening in the courts and Congress. We'll get to that very quickly. But the president takes office, within a couple of days, he signs this executive order, which creates this crypto and AI task force, appoints a crypto czar, and says, this task force, which is across the agencies, is going to look at all the crypto regulations out there, tell us which ones are working, which ones aren't, tell us why the ones that aren't working, and suggest alternatives or suggest modifications. So that's a big deal right there. Around the same time, the SEC, under then acting chair Ueda, who's now back to being Commissioner Ueda, creates a crypto task force under Commissioner Peirce, who's actually known as Crypto Mama by the industry for her crypto-friendly disposition, I guess. And she says, she issues this tremendously powerful statement, which says, we kind of got it wrong. We relied on enforcement to sort of regulate crypto. That's not the way. We should be looking at giving guidance. And she identifies a bunch of different sort of areas which have been roadblocks in crypto, such as custody, for example, such as exchange-traded products, such as the offering process, and says, we're going to invite comment from the industry to address these. And they've been having a bunch of meetings, dozens of meetings. They've been having roundtables. They're issuing statements. They've issued statements around meme coins, around Bitcoin mining, around stable coins, sort of saying these are not securities. And that's been, that sort of indicates the changes that have gone on. 2 more changes before I stop rambling. The first one is the SEC withdraws its cases against Coinbase and against Kraken and against a bunch of other crypto platforms. And Ming, you're going to be saying, well, you got this wrong. Not quite. Because when the SEC withdraws its case against Coinbase, it says, we're not withdrawing this case because we think we were wrong. We're withdrawing this case because we think it would help regulation and help the regulatory structure if we withdrew this case. And just to make that point, they do not withdraw the case against Binance. They instead ask for a 60-day hold on the case. And so the case is sort of paused, and that's because they feel that there are other allegations that are beyond securities registration against Binance.
Trolls,
and that is important because what the SEC is saying through those cases is you do not get a pass for bad conduct even in this time. We can give you, we can look at you differently if all you're doing is asking questions about how the securities laws apply to you, and maybe you have a difference of opinion with us. That's one situation. But if you're engaging in what we consider bad conduct, fraud, manipulation, something else, we're going to come after you. And the SEC has rebranded its enforcement division, not its enforcement division, but its enforcement crypto force to call it a cybersecurity and emerging technologies force. And it's focusing far more on crypto fraud than on footfalls or registration failures and things like that. So that, in a nutshell, I think is kind of just encapsulates the changes that have occurred. And just to bring this full circle, we started with a legislative change. FIT 21 passing in the House about a year ago. That didn't make it to the Senate. But just about a week ago, the House released, or prominent congressman within the House released a discussion draft of a crypto market structure bill, which is really far-reaching and sort of would create a completely new crypto market structure. It actually it actually builds on a lot of elements of FIT 21, but it goes beyond. It looks into DeFi and other things as well. And I think there's a lot there to sort of encourage the crypto industry. So that, in a nutshell, is why we got to where we are today, and perhaps an indicator of where we can go.
So it sounds like very significant change occurring very quickly at the SEC, and we'll get to Congress eventually in this panel. But I think it's worth talking a little bit more about some of the other specific guidance that has come out from the SEC, because I think it demonstrates a very telling willingness to embrace digital asset right off the blocks. Dax, could you talk about some of the more noteworthy ones?
Sure, absolutely. So maybe the first one just to note is that the Trump administration released an executive order that framed its approach to digital assets, which included, by the way, a focus on dollar-backed, dollar-denominated stablecoins and trying to promote the dominance of the U.S. dollar. The Division of Corporation Finance at the SEC released a number of different statements, as Neil alluded to, and maybe two that I'll focus on are the statement on stablecoins, where the SEC goes through both the Howey test and the Reeves test to look at stablecoins, and they describe the type of stablecoin that they're focused on, which is really one that is intended to be used not for investment purposes, but to be used in payments for international remittances. But they find that under the case law, that there isn't an offer or sale of securities because there really isn't an expectation of profit for the purchase of these stablecoins. But also give us a discussion of what stablecoins should be to be outside of the investment box, and that includes maintaining a stable value where the issuer is helping it stay pegged to the dollar, for instance, having a one-to-one backing, having a reserve, being over-collateralized, for instance. But that gives us now really a lot of validity for stablecoins, really that have been an on-ramp into Bitcoin, maybe so relevant to this crowd, to provide liquidity, easy access in the exchanges and the markets to get access to other digital assets, including Bitcoin. The second one I would focus on would really just be the statement on proof of work mining, where the division took a similar approach and looked at how we, under the investment contract, to consider whether either self-mining or mining pools were securities based on the efforts and the expectation. And there had been some question about whether pooling with other parties could make that a security. And maybe to no surprise, the division found that there isn't any sort of expectation of profit based on others' efforts here in mining, and so those are not securities, which I think relevant to this crowd just further bolsters the conclusion that Bitcoin is not a security. There have been comments to that effect in Bill Hinman's speech, for instance, but this is one more indicator of that status.
Well, it sounds to me like the SEC is acting quickly to lay groundwork, if you will, for implementing regulations that are consistent with the new administration's vision. But the changes that are occurring very swiftly are not just limited to the SEC. And I want to turn to Brittany. You work a lot with banks and the capital markets. A real big problem in the last administration was that crypto businesses were largely debanked. But there are changes occurring very quickly. I'm wondering if you could talk about recent regulatory changes that are also affecting banks in a positive way when it comes to crypto.
Yeah, as Ming said, the Biden administration choked off, or at the very least, highly discouraged banks from participating in crypto-related activities. And the Trump administration has taken a different tone. I think, as we all know, they want to put traditional crypto activities, or not traditional, but crypto-related activities on the same basis and on the same footing and treated the same way as traditional finance activities. So I think that what you've seen from various regulatory agencies over the last few months is movement towards that goal, which is that crypto banks that participate in crypto-related activities, they will be supervised and regulated as they have always been with respect to any of their traditional finance activities. So in March, the OCC released guidance that said that banks are permitted to engage in crypto-related activities, including custody, stablecoin activities, and so forth. And they rescinded a requirement that you needed to get OCC-supervised institutions needed to get approval. The FDIC followed suit. Then the Federal Reserve came out and said, hey, you don't need to give us notice and get permission anymore in order to participate in crypto-related activities. What does this mean for you who potentially are the consumers of these crypto-related activities? Well, it means there's potentially going to be more competition in the marketplace. And I think that you've already seen some of the banks enter the stage, including the bank that was on the stage right before our panel. And that may mean better services, better product, lower cost of services, which of course is better for the end user of those banking services. So far it's a good thing. We'll see if some of the bigger players come in over the next coming months.
Well, clearly there's change that's occurring, very positive change, I think, across a number of different agencies. But there's still a lot of uncertainty, right? So very positive movement, but still a lot of uncertainty. Dax, you're a longtime digital assets lawyer. You advise a lot of different companies. How are you advising them, given the rapid change that's occurring, but still having so much uncertainty about what that end state is going to look like?
Yeah, very interesting. I mean, we have a bit of an unlock. I mean, there was like a sigh of relief recently that some of the areas that have been bottlenecking the industry and have been removed, but then we are facing legislative and maybe some judicial change, which is going to raise the bar in some ways and maybe remove the bar in others. But I would make 3 points really to companies that are considering innovating in the Bitcoin area. One is that even though like we've got some additional clarity on the federal securities law side, there's still a lot of other areas of law that are relevant to Bitcoin activities. Interestingly, not so many if you are adopting just a pretty straightforward Bitcoin treasury reserve strategy. I mean, there are very few laws that actually would apply to you if you're going to be maintaining a treasury. But if you're going to be engaging in other activities, I'll call it like more Bitcoin development type activities or product launches where you're custodying assets or creating wallets or you're doing lending or you're doing some sort of derivatives, some sort of hedging activity, then you have federal and state money transmission laws, lending laws, commodities laws, sanctions laws, all of which come into play. And now I think also, perhaps we'll talk about this later, but focus on state securities laws as well. So there's established laws that are also being rapidly modified as the industry gets bigger. The second topic really is as I think about the changes that are happening right now, we're getting clarity about what is and is not a security. And we're creating an unlock on bank regulators' guidance to banks. So banks can custody digital assets, they can loan, they can actually interact with these assets with the current permission of their regulators, which has been withheld for a while. And then lastly, I would just say that for companies that are adopting a treasury strategy, that most of the laws are going to be relevant to their custodians or their brokers. So like you will actually find different prudential regulators that have different standards. You will have more states adopting, for instance, trust laws and models. There may be federal imposition of requirements on custodians. And so this is an opportunity, if you're going to be getting in the space, to consider the differences in regulatory profile and compliance of your vendors and to develop a program for ongoing monitoring as well as the laws change and those risk profiles change.
A lot still to think through, and I want to zoom out and start getting Connor involved here. He's a lawyer on the Hill, and you consider policy implications probably every day in your job. And with so many agencies removing barriers and the like, but still a lot of hard work left to do, how are you viewing the impact that this could have on the broader digital asset market, and especially as it relates to Bitcoin?
Yeah, it's such a breath of fresh air for the industry writ large to move from an industry that was just sort of, treated as, someone who is just a bunch of criminals or people who are up to no good, and suddenly to have a really strong, legitimate voice, an administration that understands the potential of the technology. I think that the big, interesting thing that's come out of the administration is no one is really sure what being pro-crypto or pro-digital asset meant for the Trump administration until you actually see the policies they're enacting. And I think so far it's been a resoundingly pro-Bitcoin stance that they've taken. And that I think that ultimately a lot of these different agency actions and the executive orders that are coming out are demonstrating that the Trump administration understands Bitcoin at a deep and fundamental level. And I know Senator Lummis especially is very excited about that. She felt like she was a voice in the wilderness for a long time because of her Bitcoin focus. And that's ultimately why I joined the team, was to sort of help her fulfill that mission. And seeing the Trump administration come in and within the first 2 months set up a strategic Bitcoin reserve and start to delineate Bitcoin from digital assets and from crypto and sort of flesh out what really strong forward-thinking policy looks like has been just such a relief. We're really looking forward to what the next 4 years entail.
I want to continue with Congress because there's so much activity going on there that could be very significant going forward. Yeah. We've talked a lot about change in the executive branch agencies, and that's all very positive, significant in and of itself. But I think a lot of people think that if you really need or want lasting change, Congress is going to have to act. And that's really where the work that you and Senator Lummis and her office are doing can make a really big impact. And I want to start with the Strategic Bitcoin Reserve, because I know you and the Senator have been working a lot on that. Can you explain precisely what that is and what's the plan for getting that through Congress, if that's needed?
Sure. So just the high-level concept is that Senator Lummis fundamentally views Bitcoin as a tool that can be used by the individual, the corporation, as Strategy knows well, at the state level, and at the federal level. That fundamentally Bitcoin is a savings technology that provides incredible benefits for storing and communicating value across time. And the idea with the Strategic Bitcoin Reserve is to say, well, the federal government has plenty of tools at its disposal, and that Bitcoin should be one of the tools in the toolkit. So just like we have other reserve assets, we have reserves of gold, of critical minerals. We even have a strategic cheese reserve. I don't know if you know about that, but it exists. The idea was, well, Bitcoin is a tool that is increasingly important in a digital age, and that the nation that acts first and decisively will have a massive sort of asymmetric benefit. And part of the reason this appealed to Senator Lummis is she comes from a ranching background, comes from Wyoming, where they value hard assets like land, cattle, gold, and really likes thinking through the deeper monetary history here. And if you look at how the US set itself up in the 1930s, the Gold Reserve Act of 1934 was this critical piece of legislation that set in motion a lasting sort of economic dominance for the US, because the US acquired around 80% of all the gold in the world actually through that bill. And that was a critical turning point where the US had this very strong economic foundation for its economy, for its monetary system, and sort of set the stage for the Bretton Woods system and the proliferation of the US dollar. And so in that instance, we thought, okay, well, what is the modern analog there? Like, how do we take that concept and move it forward in the digital age? And Bitcoin neatly fits that. It is the modern form of digital capital that people are clearly adopting in droves at all different levels. And that our version of the Bitcoin Act is trying to acquire a Bitcoin reserve for the United States that would serve as this digital capital to support the US dollar as a reserve currency. So that's the high level. We are very excited about it. When we first put it out there, people definitely looked at us like we were crazy. That was around, about a year ago now, a little bit less. And it's been breathtaking to see how quickly the Overton window has shifted. It very quickly became a talking point on the campaign trail. It very quickly became something that went from, this seems ridiculous, to, well, actually, in an increasingly digitized world, maybe this does have some merit to it. And so the conversation shifted, and I think that further accelerated with the outcome of the elections. And then just this year, a couple months ago, we reintroduced it, but this time it was a very different introduction. The first time, it was just us. No one else wanted to stick their hand up for this concept. Now we're at a point where we have a bicameral product. We have great offices we're working with in the House. And we have, right now, 5 different co-sponsors for other senators. And we're really looking at moving the ball forward. So we're going to have public hearings on it this year. And we are going to sort of continue taking this topic and explaining the benefits of having Bitcoin added to the United States balance sheet.
So basically, the U.S. government might follow a strategy-like strategy.
Yeah, very similar. It's something that has proven time and time again at every different level. And just like gold has been that rock for the U.S., the past 100 years, digital gold will provide that for the next 100 years, is our view.
Just very quickly, do you think there's enough traction for you to guesstimate a timeline?
Guesstimate timeline, I think the public hearings later this year will really be a critical point where other members can get educated on it. And I think we're looking at sometime later this year where it will be picked up in a much more serious way. The reality is, you can only do so many things at once. And stablecoins and market structure, which we'll talk about, are really at the top of the priority list. They have a very long, timeline behind them. They've been worked on for years. And so those will probably need to get sorted out first, and then we can sort of move on to the Bitcoin side of things. But yeah, we're full speed ahead, and we see it as, with the trifecta that we have right now, it's a great time to get some of those legislative wins and really make our mark.
Well, you mentioned the 2 other very significant legislative initiatives that Congress is working on, right? Stablecoin legislation and the market structure legislation. You can read a lot about it in the news, but we have you here. Can you describe briefly what each is really intended to do? And if it passes, or if each passes, what effect do you think that's going to have on Bitcoin?
On Bitcoin, yeah, absolutely. So the 2 different pieces are stablecoins and market structure regulation. The general idea is that there are all of these new novel digital asset products that are coming to market, and our regulations and our statutory frameworks are simply outdated and unclear, in a sense that if you are one of America's great financial services companies, it's not entirely clear how you start operating here in the US. And so we've actually had a lot of companies go offshore, a lot of products offered outside the United States. And so the goal with each of these is to bring regulatory clarity for modern companies. America's capital markets are really the crown jewel of our economy in many ways. And this sort of helps bring those products to the American people. So the 2 different pieces, first is stablecoins. So a stablecoin is a digital asset that is tied to the value of the dollar. And the stablecoin legislation is basically clarifying what are the rules of the road for a company that wants to issue a stablecoin in the United States. How do they have to account for those stablecoins? What do they have to be reserved by? Who is able to custody them? What are all of the nuts and bolts of how you run a stablecoin business here in the US? That bill has been worked on for a long time. We currently are using the Genius Act in the Senate that passed out of the Banking Committee just a few weeks ago on a strong bipartisan vote. It is still being negotiated as we speak. This week has been very, very active in sort of final negotiations for that. And we are very optimistic that the bipartisan process can continue and we can get a product that both sides are happy with, and we can ultimately get a very positive, strong vote in the Senate floor and send it over to the House. So that's one piece of legislation. The other piece of legislation is market structure legislation. So market structure is the idea that we have securities laws that deal with securities, and we have commodities laws that deal with commodities. But digital assets are so far somewhere in between the two. And especially given the prior agency actions under the Biden administration, it's left a lot of uncertainty in the market. So market structure legislation clarifies, all right, how do you draw the line between a security and a commodity? What fits neatly in the security bucket? What is somewhere in the middle, and you need to have sort of a process of becoming a commodity? And then what is firmly in the commodity world? I think that, and so both of these pieces of legislation will be important. To your question for Bitcoin, I think that stable coins will be important in the sense that many of our great banking institutions, our financial services companies are going to maybe start with stable coins, get accustomed to what a digital asset is. What does it mean to store cryptographic keys? What does it mean to really get your feet in this market? But I think that ultimately the proliferation of stablecoins out of the US, around the globe, will really be a catalyst for Bitcoin adoption as well. Because we see it as Bitcoin as global reserve capital supports the dollar as the global reserve currency. And that they're really two sides of the same coin. And as US dollar stablecoins proliferate, people become more comfortable using them, companies become more comfortable issuing them, then the bridge between those people, those companies, and digital assets and Bitcoin, gets built. And that ultimately, the proliferation of these coins, the use of digital wallets, all of those things will be a huge benefit for the digital economy, a huge benefit for people storing and saving in Bitcoin. And I think also market structure will be important for clarifying, it's pretty well understood that Bitcoin is a commodity, but it is not well understood all of the different people that touch Bitcoin, exactly how should they operate, what are the rules of the road there. Right. And for public companies that are increasingly adopting Bitcoin treasury strategies, they want to know, Ming, I'm sure you appreciate this as GC, how difficult it can be knowing exactly who you're allowed to work with and who are the trustworthy custodians or brokers and sort of what are the rules there. And I think that market structure regulation will provide that sort of important clarity for the new corporate set of Bitcoin adopters, that they feel comfortable to operate and that they know exactly what the rules of the road are, so that if there is an attractive strategy for them, they can adopt it quickly.
This sounds like very much needed legislation, but it also sounds very complex. And I want to turn to Neil as a former SEC agency lawyer for just a quick minute on how you're viewing, a timeline or complexities around implementing things of this nature.
Well, I guess I'll be the panel pessimist, or as I like to think of it, the realist around this. No, I think legislation will get done, but we have some indications of how this has been done in the past. After the financial crisis, we had the Dodd-Frank bill, which is going to regulate banks and derivatives and some activities around funds, all of that stuff. It was an ambitious piece of legislation. It took 15 years to write the rules under Dodd-Frank.
I actually tossed those.
The SEC literally just finished like a few months ago. And so every time there is really ambitious market structure legislation,
I think Semlar is going to break
legislation is the beginning. It's a great beginning, but there's a lot after that. It's the tip of the iceberg.
Who knows?
There's going to be years and years of rulemaking by the commissions.
Pretty much just
and some of it will be contested. It'll get done.
But who cares?
It won't be done in a hurry.
Well, we could go on and on talking about this. Is very interesting, and I guess for those who are interested, maybe after the panel we can continue that discussion. And we've been focusing at the federal level, but whenever I work with Dax on some of our Bitcoin-related initiatives, he's always reminding me that there are also states out there. And I'm just interested, Dax, and I'm sure the audience is interested in sort of this interplay between sort of federal law and what the states do. Could you comment very briefly on that?
Sure, absolutely. I mean, the strength of our legal system in the United States is that we have state and federal laws. And many issues are reserved to the states because the states are closer to their citizens, and they also provide an opportunity for, I'll call it like forum shopping, to attract different types of customers to their states. But I guess I hit three things. One is that we have the dual banking system. And one of the things, at least that I'm focused on right now, is make sure that in the haste to do federal legislation to clarify stable coins and market structure, that we don't leave the states out. I mean, many of the players that are supporting this ecosystem today are state trust companies from various states or state money transmitter entities. And so we need to take their skills into account and leverage their background. The second thing I'd say is that now that we have a bit of a vacuum on the federal securities enforcement side, we're going to see more of a focus on state securities law enforcement. That just because the SEC may not be going after somebody doesn't mean that the plaintiff's bar will not go after somebody based on state securities law, or that the state's attorneys general will not enforce their securities laws. And I want to just read a quote from the Attorney General of Oregon, where he said, they filed a suit against Coinbase recently, and he said, states must fill the enforcement vacuum being left by federal regulators who are abandoning these cases under the Trump administration. So stay tuned on the state side. And then lastly, just on Bitcoin specific, we have a number of states that are adopting kiosk laws that are meant to protect elders and prevent abuse at Bitcoin ATMs, kiosks. And so in those situations, we really do need to balance consumer protection and innovation. And this gives an opportunity for states, some states to take a more liberal approach and some take a more conservative approach.
These ideas are not only significant and complex, but this interplay between federal and state is very interesting. I do wonder whether, to what extent preemption will occur on certain topics. But we don't have enough time to go deeper into that, but it is fascinating. I do want to spend sort of our last several minutes pivoting over to Wall Street. This is not a topic that this regulatory panel has addressed in the past, in large part because it just never got to a point where there was enough warming up, we'll call it, on Wall Street for crypto-related companies. But that's happening. It may be happening somewhat slowly still, but it's happening. And we have Brittany here, who works a lot with banks and capital markets. And I'm very interested, and I think the audience would be too, in hearing, Brittany, what you're seeing and hearing among companies, clients out there about doing something similar in the way of a strategy that we have, right? And if they're seeking to access, the capital markets under this changing environment, sort of how would you recommend them thinking about that?
Yeah, and I think this is anybody who's interested in following a strategy for your business, right? This is why you came to this panel, which is how do you access the capital markets and what's the regulatory environment like if you want to access the capital markets? And the short answer is it's never been better, right? The SEC is commenting less. Companies that I worked on the CoinCheck de-SPAC, it took 3 years to get that through the SEC with, getting back comment letters with 60 comments, 45 comments after 5-6 turns, right? That's a very clear signal from the SEC about what their position was on crypto-related companies, right? And now you've just seen it go back to a normal comment process with the SEC, which is great because the question I get asked the most and where I've been spending the most of my time, and in fact, an hour before coming onto this panel, I had 2 companies reach out, is they want to go public because they want to follow the strategy playbook. And how can they go public quickly? And the short answer is there is no quick way to go public. There's lots of options that we talk about, and there's pros and cons to each. There's an IPO, there's a direct listing, there's a reverse merger, there's a de-SPAC, right? But there is no shortcut to going public, and it's going to take some time. And everybody right now is in a race to become public to follow the strategy. And you generally see it kind of 3 flavors of companies, right? You see companies that are more like strategy where they started out with a non-core crypto business, a software business, a manufacturing business, and diversified and followed a strategy playbook. Then you see companies that are natively crypto that just see this as a continuation of their crypto strategy. And then you see companies that are natively crypto that want to kind of deviate on the strategy. So I'm loving the new name and the puns, but that want to deviate and that want to try to do it with other digital assets. Here's why it's hard. It goes back to what Connor said about the market structure legislation, and he talked a lot about crypto assets being commodities versus securities. Why do you care about that? Well, Bitcoin is very kind of more firmly in the not the commodity category. And what does that mean for you? One is you worry about becoming an investment company, or you should, if you're not following a Bitcoin playbook. And if you become an investment company and you aren't registered as an investment company and you aren't doing all the things you're supposed to do as an investment company, then all of your contracts with every counterparty that your company has become null and void. So that's a pretty significant ramification of that.
That's
because Bitcoin is firmly in the commodity category, you don't have that concern. I say firmly, but there's not as good guidance as we like. And the second reason why it matters is because when you go public and when you start to do capital markets offerings, counsel will have to issue an opinion saying that you're not an investment company to the banks, your underwriters. And the banks take that to the bank. It's incredibly important for them, again, because of the really significant consequences of being an investment company. So even if you're maybe considering an ETH play, which is probably not a security, there's not as good guidance on that on ETH, and so you're probably not going to be able to find a law firm to give you the opinion that you need in order to follow that playbook. Whereas for Bitcoin, there's a lot of law firms out there that will feel comfortable giving you that opinion, which is a prerequisite. You cannot access the capital markets if you don't give that opinion to the banks. So it is a prerequisite to that. A few other things to touch on. One is Michael mentioned in his keynote yesterday the concept of a seasoned issuer. Why does that matter? If you've been public for 12 months, you can essentially do deals without going through SEC review, which was really important when we advised Strategy on the Strike offering, right? We did Strike without SEC review because Strategy was a seasoned issuer. They're actually a well-known seasoned issuer, which is even a step above. But we won't get into those details right now. And Strike, again, is an iteration of the common stock playbook that they had been following, where Strike provides, upside protection, because if the common stock price increases, then you can convert your preferred into common stock. And if it decreases, you get an 8% annual dividend, which is why I bought Strike. So there's a lot of good reasons to be a seasoned issuer. And if you're looking at acquiring a public company, which, this is a topic that comes up regularly, a lot of these public companies that are cheap, they haven't been keeping current with their Exchange Act filings, which means if you buy them, you've got to wait 12 months until they correct that, and wait 12 months from when they correct it in order to access the capital markets. In my mind, whenever companies say, let's talk about a reverse merger, let's talk about a de-SPAC, I'm like, just go with a traditional IPO or a direct listing, because that's more tried and true. And I think we'll actually end up saving you time in the back end. But happy to talk more about that, after this panel.
Can I just comment just
briefly?
I
think she is just very
Bitcoin
loud.
moves in dog years.
Who knows?
And
though?
so I guess just to note, just the market dynamic, that because of that timing element, corporations that have Bitcoin or other crypto reserves are looking at the public company acquisition strategy, right? So there is a timing element there. Lots of hair on that. On that topic, but time is the one thing that this industry has never had enough of.
I see we're going to be running out of time soon, and I want to fit in at least one more question that relates to Wall Street, and that is that in our own experience working with banks, there is a lot of bank hesitation from the compliance and legal side. You made some reference to sort of the Investment Company Act opinion and things like that. What is it going to take for the really big banks, the bulge bracket banks, to embrace crypto? And that's, I guess, a question for Brittany.
Well, I spoke earlier about the changing regulatory environment, but the banks, they're gatekeepers. And they are essentially a proxy for the SEC and other regulatory agencies. When my partner Greg and I worked on the Spotify direct listing, one of the potential paths we were considering that we thought about was doing a deal, potentially without an underwriter. Right? And the SEC said, well, we don't really like that, because the underwriters, they, add value and help ensure that disclosure is accurate and, and informs investors. There's a meeting of the minds between the banks and the company in disclosure. And so because the banks, that's just an example of how the banks have a gatekeeping role. And so because of that, and the banks are also the first to get slapped with fines and penalties if something goes wrong. So the banks are hesitant and a little bit slow moving, especially the bulge bracket, to adopt something new. And I think that's a good thing. Overall, that is a good thing. You don't want, some of your biggest banks in the world taking risk. And I think, as long as there's predictability, and that goes back to legislation, right? Right now, what we have is a kind of ping pong. If there's a Democratic administration in place, you swing far to the left, and if there's a Republican administration, you swing far to the right. And it didn't used to be like such a huge pendulum shift. What you need is predictability. That's what legislation provides. That's what will help the banks get into the crypto business.
Well, thank you for that. I see we're out of time based on the clock down there. I want to thank our panelists. There are literally, we could go on for hours on these and other topics.
Like the smartest person
and so
up there,
if you
possibly.
do have any questions, find us after the panel. I'm sure all of us would be happy to speak to you. But thank you very much
that one wasn't
for your
that
time
good.
and your attention.
I don't know.
Thank you.
I don't know why they play that music, man. That shit is so annoying.
I think in the future, every company is going to have a director of Bitcoin advocacy and strategy. And you need a certain level of energy. You need a certain level of laser focus. And our next speaker has just that. I'm pleased to introduce Ed Julien, the Director of Bitcoin Advocacy at Strategy. He leads initiatives to advance Bitcoin adoption and education within corporate environments, and he's been a Bitcoin enthusiast since 2011, bringing over 25 years of experience in disruptive technologies to his role, focusing on bridging the gap between early adopters and the early majority in the technology adoption lifecycle. His mission is to find ways for Bitcoin to cross the chasm of the technology adoption curve from early adoption to the early majority. We're not there yet. Before joining Strategy, he was Director of Institutional Sales at the Bitcoin Conference, and he's also a contributor to Bitcoin Magazine, where he addresses challenges in Bitcoin's mainstream adoption, including marketing hurdles and ideological divides. Ed is a frequent speaker at conferences and industry events where he shares insights on integrating Bitcoin into corporate strategies, and his work emphasizes the importance of education and strategic communication in promoting Bitcoin's adoption across various sectors. Welcome, Ed Julien.
Don't go anywhere. Am I on? So that was an embarrassingly long intro. That was totally unnecessary, but thank you. Let's all thank Natalie for being our get back here, for being our host this weekend, or these couple days. Natalie's got her book coming out in August?
November.
No, November. Do not buy a copy. Buy 10 copies, okay? And give it to your aunt, your grandmother, your cousin. Does anybody in their neighborhood have those little boxes, take a book, leave a book? Stuff those full of her book. This is gonna outdo Bitcoin Standard. This is gonna be the best Bitcoin book out there. It's for the early majority. November, lots of copies, every Christmas gift, Natalie's book. Thank you very much, Natalie.
Thank you so much. Thank you, guys.
All right, well, I promised everyone who would come to my short talk, Bitcoin, free Bitcoin. I did a proximity zap on Orange Pill app. If you have Orange Pill app, you've been given 210 Satoshis. There's your free Bitcoin. So thank you all for coming to the conference. How did it go for everyone? Pretty good? I urge you to go into the app where we have a commentary rating section on all the sessions. Find the session on the Strategy Bitcoin Hub, 5 stars, 5 stars, wonderful presentation, but please comment on all the sessions. I did get the shoes for $300. My wife, who's watching, said I couldn't get them, so I do need to sell these. Before the end of the day, they're $500. I'll get them signed by Sailor, $2,100. So thank you very much. With that, I need the clicker. All right. So I joined Strategy 5 months ago. Like she said, after working at Mara, I got into Bitcoin pretty early, but then decided, hey, I need to give back to Bitcoin as well. And when I saw this job and got the call from Sharish, I was like, wow, this is like, going to play number 10 at Real Madrid. This is the best job available. So I'm going to talk about the Strategy Bitcoin Hub, which was the vision of the management team, the executive team at Strategy to say, how can we give back? There we go. Nope. Shoot. Which one are we on? Sorry. Can we flip it? There we go. And no. And there. Okay. So I'm talking about the Strategy Bitcoin Hub that we've established in Tysons, Virginia. Like everything we do, we said, well, this is going to be the Hub B. When you come to the Hub, there's the big stickers on the windows. We call it the Bitcoin Hub. It's a little different than the other Bitcoin Hubs you see maybe in Austin or in Nashville. It's in our corporate headquarters. We have a floor open on the building. It's about 140 desks. And so we said, let's give back to the Bitcoin community by offering this office space to Bitcoin developers, Bitcoin companies, Bitcoin entrepreneurs. So very traditional office space. We have our lounge. The beer tap's open at 5 o'clock. We've got this amazing gym, conference space. We have a pretty rigorous interview process that we go through to make sure that you're actually dedicated to Bitcoin and giving back to Bitcoin. But it's something we're very excited about. Why did we create it? Well, we wanted to position Strategy as a beacon for corporate adoption, create a physical place where Bitcoin builders and advocates and startups and companies can come and not have to worry about that expensive office space, but also anchor ourselves as a leader in corporate education, networking effects around Bitcoin, maybe not only in the DMV area, but also worldwide. We've had a couple, I call them kids, sorry, I can't do that. A couple young guys that actually moved from Austin. They packed up their car and they drove, and now they're going to be living in the Tysons area because they want to be part of this hub. The hub is enabling knowledge exchange. We have curated events, lunch and learns. We were able to have Joe Bryan of the Big Red Button. We had Alex Gladstein in. They're always excited to come to Strategy to do a lunch and learn, not only with our employees, but the members of the hub. We're trying to build community with not only the internal teams, external partners, the guests we have in. We're trying to activate the local ecosystem by supporting Bitcoin companies, builders, and enterprises, showing brand leadership through our Bitcoin first and only identity. And then it's what we call proof of commitment. It's more than just a press release. It's like, hey, this is really a place where you're going to have a commitment to Bitcoin in a corporate setting. So what would success look like for this hub? Education and advocacy. We want to host monthly events. We DC Bit Devs, which had kind of died off because they couldn't find a place to host it. We host in our lounge every month. We get about 50 people in there that go way over my head every time, and then you get about, it's like drinking from the fire hose with Bit Devs, and then every time you learn a little more. And we're also, as is mentioned in a couple other presentations, internally onboarding and continual learning for the Strategy employees. It serves as a front door for enterprise Bitcoin engagement through our strategic partnerships through different partners. And it attracts collaboration with whether they be custodians or fintechs or policy influencers. It's saying, hey, we want to partner with you. Let's do it through this hub environment. So our goal for the year is probably to select and support about 30 high-quality residents by year end. We currently have about 20. Some of them come in every day. Some of them are coming in once a week. We've got everything from a Bitcoin PR firm to some guys that are doing sustainable Bitcoin mining on a chicken farm, to the guys that moved up from Austin that are building a Bitcoin-based stablecoin. So it is the wide gamut of people that are saying, I build something in Bitcoin and
I don't think there's
this helps me out.
Just,
and we want to provide mentorship,
so you know.
networking, and visibility where applicable.
I don't think anyone's here.
We also want global visibility. We want to position the hub as the premier example of corporate Bitcoin stewardship. And of course, the media engagement. We had our kickoff party on April 29th where Saylor came and Fong and Saylor did this amazing motivational talk about why we're doing it. And 100 of our employees were there. And so it just shows our commitment to what we're doing at Strategy. So if you know anybody that is interested in joining our hub, we're going to be launching a second cohort probably end of July. You just go to our website, click up there on network and then hub, and you apply. If you are a $1 billion company, please do not apply to join our hub for free office space. If you are looking to get your work visa to come live in the US and you want to work at Strategy, that's not what this is. You don't even have to read the fine print, read the big print, right? This is very specific in what it is. So with that, I'm happy to talk to any of you about the hub if you have questions or want to know more before you apply. But the big announcement, I guess, which isn't too much of a secret, is our 2026 conference, Bitcoin for Corporations. This is the fifth one. The first two were online, but this will be the fourth. 2026 will be the fourth one in person. And February 23rd to 26th at the Wynn in Las Vegas. QR code, $795. I get 10% of every ticket that's sold in the next 20 minutes. No, I don't. Yes, I do. So feel free to go to our website, use the QR code. It's not hard to find on the website. $795 is a pretty cheap ticket. Get you signed up for February. We're excited to see you. We'll be doing this bigger and better, as you probably picked up over the last few days. This is not a subject that's going to stagnate here. I expect to see some much bigger names, much bigger companies. And so this morning, I thought, well, how can we represent what's going to happen in Vegas? And of course, you have to go to LaDozier and say, LaDozier, I need you to imagine. Is LaDozier in the room? Ah, bummer. Okay, so I said, LaDozier, I need you to imagine, what do you picture happening at our conference in 2026? And that's what he came up with. He had the Berkshire Hathaway motivation. He thought the true north. And so I'm not promising this. We can't get an arena, but this is where we're going, guys. This is going to be something that you're going to be able to say, I was in a tiny little room with round tables, and now there's 20,000 people in the room talking about corporate Bitcoin adoption and treasury. So with that, thank you very much. I don't recommend that you leave your seats because you won't get them back in about 15 minutes here. How are we doing on time? Yeah, in exactly 15 minutes. Please be back in the room because we're going to lower the lights and do fireworks and lasers, and no, it's not that big a deal. But we're going to have Fong and Michael and the guys from True North up on stage, and it is going to be fun. So got about 15 minutes. Don't lose your seats, but be back in the room. We want to get these doors closed so they're not clanking all the time. Thank you for coming to the conference. Please go into the app and comment on the sessions. And we look forward to seeing you in Vegas. And let's get fired up for 4:15. Thank you very much.
Exciting stuff. Exciting stuff. Exciting stuff. Oh, the market closed. The market closed. $26. You teach me and I'll teach you Pokemon. Gotta catch 'em all. Gotta catch 'em all. Chin Pokemon. Well, we got like 15 minutes. I guess let's see if there's any new. I mean, I'm not gonna read any news. But let's see if there's any news. GameStop grades 1 millionth card under PSA partnership. Let's go. Let's go. 1 million. They get a $1 million gift card for that? Or what? Okay, I want to read this one. I need to. Bro, I said in this chat over here that Strategy's software company is isn't profitable. And they like they're getting so upset about it. Dude, the crypto bros, bro. Crypto bros are so like ignorant to the stocks. It's kind of crazy. It's kind of crazy how ignorant they are to stocks or like businesses, I guess. All they see is crypto. Kind of wild. These guys going? No. Let's see. It's been less than 7 months since GameStop began its partnership with PSA to offer trading card submission. We'll read this tomorrow, actually. We'll read this tomorrow. This will probably be the title of tomorrow's. Oh, wait, no, I don't know. I don't know. I don't want to read it right now. We'll read it tomorrow. But pretty cool. 1 million cards in 7 months. It's pretty wild. I'm just typing to people in this chat over here. I'm not doing anything. I'm just chilling, waiting for this next presentation to start. This chat's more exciting. You guys don't talk. But you guys are busy, I get it. Bro. These people, I mean, bro, these people in this chat are just so interesting. I love how crypto bros view businesses because bro, it just makes me so bullish on GameStop. It's insane. These people in this chat make me so fucking bullish. It's actually insane. Like, it's actually crazy how bullish this chat over here makes me. They don't like GME. Well, right now we're talking about MSTR, and I'm trying to like explain to these people how MSTR is like their business is unprofitable, and the only reason they're alive is because of Bitcoin, and like they don't understand for some reason. They literally don't understand. For some reason, these people think that just because MicroStrategy bought Bitcoin, that there's not a fucking business attached to it. Like, it's so weird. It's so weird, dude. Like, they are just so blind. No, these are real people, bro. These are real people. Who knows? Yeah, I don't know. It seems like they're real people. Bullish feeling they give you about GameStop. The fact that they all think it's garbage, and they think that just because they haven't announced Bitcoin that, yeah, there's a lot of things. A lot of things. They have to have their little hands held to make an investment, and they don't know how to read 10Ks, so they think GameStop's a shitty retail business, and they think MSTR is just this great company, when in reality it's literally the opposite. It's literally the opposite. Oh, there's a lot.
We are back. Woo! We are on stage here with some of our favorite people, and we are excited to share an hour and ask a few questions and really dive into things a little bit more. So this is the first time we're actually on stage with Michael and Phong, and man, look at all the people in here. Wow, holy cow. All right, this is exciting. So maybe we'll just kick it off. A quick question over to Phong and Michael. So over the last couple of days, you've talked about this digital transformation of investor relations. And prior to what we're seeing today with this community, the investor relations page was the most boring page on a company's website, right? Nobody ever went to the investor relations page. Nobody went and scoured all the documents, but now people are. And people are because we're talking about it. We're talking about this evolution of an equity and how a company can be formed. So I'd love if you can expand on this concept of the digital transformation of investor relations and really kind of dive into that a little bit further.
I can start. You know, the funny thing, and I think Eric Semler talked about it yesterday, about being a zombie company and a company that nobody's interested in. I had mentioned yesterday we had 40 investors on our earnings calls, 10 of which were employees and board members. The other thing is we had no investor relations person. I was the CFO and I was investor relations. And I remember talking to investors and like, you should really hire an investor relations person. And I was like, to talk to 30 people, it didn't make a lot of sense. And Shirish Jodia we hired in 2022 to be our first head of investor relations. And I still remember we had 2 people who were our final candidates. And one person was really nice, super guy from Texas who'd done investor relations for like 15 years. And he had 0 knowledge about Bitcoin. And then we had Shirish, who hadn't done investor relations for very long. I think it was like 2 years or so for a local energy company. And he's like, I love Bitcoin. You know, I sought you guys out. I looked you up. I like, this is my job. And of course, Shirish got the job. And then we realized after that, you know, Mike went from like 50,000 X followers to 1 million to 2 million to 3 million, got a huge voice. And we realized that was really the next digital transformation of investor relations in 2023 or so, was to use our X handle. Because, you know, when you have a story that's extremely misunderstood by traditional finance, you need an amplifier outside of traditional finance. We need an amplifier beyond just sort of the way you would normally do things. And so the X handle was the next big sort of really digital transformation of investor relations. And then the biggest gift beyond that is everyone started producing content that we didn't even know we needed, right? Like charts were being created, videos were being created, you know, 10 p.m. sessions of people talking about strategy for 2 hours on end are getting created. And, you know, how else do you amplify an organization of 0 IR people to 1 IR people to 1,000 to 1 million? This is the way to do it. And it's just fantastic. And, you know, you realize that all of that is because we tapped into the zeitgeist of Bitcoin. And Bitcoin is what caused the digital transformation capital, but of investor relations. There's no better way to do investor relations than this way. And it makes so much more sense than sitting and talking to, you know, in a converted hotel room at a non-deal roadshow with 4 Harvard MBAs, you know, sorry, CJ, that asked you questions at the age of 27 about your business and want to steer you to go do something like they understand software. That's not investor relations. This is investor relations.
I think we benefited, we were catapulted into a digital transformation by COVID and by the crypto community. And I gotta say, we were taken there kicking and screaming. And maybe that's the only way you get there, but as Fong said, the 20th century way to do things is you go meet people face to face. I remember I've spent 1 month flying around the world, and like an entire month of my life, $1 million of travel fees in order to stand in front of 100 people in a room 20 times. And basically deliver a 1-hour message to 2,000 people cost $1 million. And that was quote unquote best practice in the year 2018. So something profound happened. You know, and when the lockdowns came, you don't get to travel. You don't get to meet face to face. And then you have to do remote, and then you have to embrace something like Zoom. And we used to have, I mean, Fong's being generous. I remember, okay, I'm going to tell him myself here. I went through a phase when I just decided I was kind of a little bit irked with the investor community, so I canceled conference calls and earnings reports for 10 years in a row. There's a period about, I don't know, like 40 quarters where we didn't do an earnings call. And then there was when we came out of that phase, we had a lot of goodwill with our investors, obviously not. And then the best practice was sit in a conference room with one of those like speaker phones, and we'd all look at each other and we'd punch the speaker phone and we'd dial in, and there were like 19 people. I remember 19 to 20 people being on the call and one of them being an investor. And the other 19 working for the company. That was my recollection. There might have been a couple. So we had that dark period, and then COVID came along and the lockdowns hit, and we went from speaker phones to 3 different video conferencing things, and then we landed on Zoom, and then we started to have Zoom meetings, and then we tried to have an employee meeting. We realized we had to have the employees join online with a webinar, and so we discovered webinars. Then we thought, well, if we're going to have 1,000, then we started trying to figure out how to sell things to customers, and we had to do that. And so we were forced to adopt technology for customer activity after 2020. And once you get there, it's a hop, skip, and a jump to, well, if we're going to do Zoom webinars for customers, then why don't we do a Zoom webinar as an earnings call and put the video on it? And we evolved from there eventually. And I would say we were catalyzed by COVID. We had to do that stuff. And then, of course, we needed Bitcoin. We found Bitcoin because of the war on currency that came with the war on COVID. And then after that, we were all of a sudden in the arms of the Bitcoin community. And I'm going to say crypto, too, although people don't always love when I use the word crypto. But, we're rehabilitating crypto. It's going to be a better word going forward. And the learning from that is this. Everybody in the crypto community was launching these tokens, and they were doing investor education on tokens, and they had to do them via YouTube and via Twitter. And so when I got involved with Bitcoin, I saw all these YouTube podcasts, and you would see all the Bitcoin podcasts, but you see every kind of podcast, and then you started seeing all these crypto influencers, and they're reporting on their favorite crypto token, just like it's CNBC in real time. And some of them have 500,000 followers or more. So I started looking at what they were doing, and then we realized that you have to go do podcasts, and we started doing some of these podcasts, and we started posting. I remember when I started posting, I was very clumsy. Everybody, when they first discover when they first discovered Twitter, used to be before it was X, everybody's very clumsy, and you do silly, stupid things. And I watch all the newbies come into space, and they don't tweet well, and I cringe, and I'm like, don't do it that way. And I remember Samson Mow, if anybody knows Samson Mow, great Bitcoin maximalist, he took me under his wing when I started tweeting, and he goes, Mike, you posted this, there's no social preview. And I'm like, well, Samson, what's a social preview? There's no image showing up on your URL. And I'm like, an image on the URL? He says it's an ugly string of letters. So I got on the phone to my marketing people, like, what's a social preview? Put a social preview on the URL. And so when we got into it, we just started getting educated by the community. This is how you share. This is how you post. I even sit with executives today, and I'll say, okay, first you're going to go on CNBC. Then you're not going to not tell anybody. You're going to go on CNBC. You're not going to wait 2 days and post an ugly URL that links to a partial extract of you on CNBC. You're going to go on CNBC. You're going to get your talking points right. You're going to extract the video. You're going to put it in an MP4 file. You're going to upload the MP4 file. You're going to write this, right? You're going to post that, right? That's going to be seen by 10 or 20 times as many people as saw you on CNBC. And if they agree with what you said, they're going to grab the handle and they're going to message it to their boss or investor or board of director or whatever best friend and say, you got to check this out. And that kind of was like a 4-year journey to realize that you have to articulate the message. You have to put it on the channel. I remember we got on YouTube, and I would do this interview on YouTube, or someone would interview me on YouTube. And first I didn't know what I was doing, and then I got lucky, and then I got things like the Lex Friedman podcast. And Lex interviewed me for 4 hours, and then he posted it, and it runs like 10,000 times a day. Like the residuals are 10,000 people a day spend 4 hours with me listening to what I have to say many years ago. So you watch that, and then you watch people, they'll post things, and I've seen them, they'll interview me on Bitcoin, and they'll post, world coming to shuttering end, COVID problem, yo-yo dying. And I'll call them, you know, that's going to run better if you put my full name in the title and something Bitcoin, because Bitcoin really works well with the algorithm, and my name will work well with the algorithm. And so I think I went from, I was never on YouTube, I was never on television, I didn't think to post, to stumbling around and making all the rookie mistakes, to starting to learn a bit, and then realizing that the real power is articulate your message, make it easy to consume, put it in different formats. Some people want 30 seconds, some people want 5 minutes, some people want 20 minutes, some people want an hour. And whatever it is, give them the handle, because what will happen is 9 months from now, they'll want to send it to 97 people. And if they can do that in a couple of seconds, your message will spread virally. And don't make it hard, make it easy. Make it like when you write a paragraph, think people will read the first sentence. When you write a sentence, think people might read the first 3 words. When you write 3 words, obsess over the punctuation of the 3 words, right? That's how I think now, right? And I didn't think at all like that before 2020.
When you think about your equity, and you guys really did something special when you embraced volatility in the market, but when you have a lot of investors, that's often scary for them. It used to always be equated with risk. And one of the big themes that we've seen from the retail community as we've been talking to everybody in the hallways here is that the constant education and the messaging that you guys do empowers the retail community to amplify it further and build conviction. So we've been playing around with the concept of retail being a partner in what we're calling conviction as a service, where you guys enable us with enough information that we can distill, and then we can find ways to communicate that out further to other investors who might be starting from different points in their journey and investing and understanding a type of equity like a Bitcoin treasury company like Strategy. What have you guys seen along the ride as your equity is taking these volatile swings? And I'm sure you guys are seeing all the noise on social media, but what I hope you also see is the people that are the calming voices out there trying to help the retail community understand why they're in this in the first place and what it is that makes this so special. How do you guys see that emerging as kind of a strategic advantage for what you guys have built with your retail community?
You know, it's not lost on us that we hold a 2 hours earning call, and 2 hours later, you know, Jeff gets on X and does an hour and 20-minute dissection of our earnings call and does a pretty darn good job. Because what actually happens in between that is we go and talk to all of our coverage analysts and we do callbacks, right? And we, you know, have a collaborative relationship where we share with them our message, distill it, and they go write reports. And a lot of those folks are here. We appreciate the coverage analysts, of which we used to have one, right? Literally one who had a sell rating on us when we started this journey. And now we have, I don't know, like 15, 12, 13, 14, 15 who all have a buy rating on us. And they do pretty good work, and they publish out these reports. And I would guess maybe 100 or 1,000 people read these reports the next morning. You go, don't talk to us, right? Do a dissection that is pretty darn awesome that evening. You know, you could probably, I don't know if you have a wife and kids, you could be doing something else, but you're so passionate about Bitcoin and about strategy. We don't pay you, we don't ask you, you don't ask us. And, you know, it's awesome work. And you get 10, 15, 20,000 people that watch it that night. And it's awesome. I mean, and so, yeah, like there is the structural relationship, and there is the unintended relationship. And the unintended relationship is 20 times better, 100 times better, 1,000 times better. And I do think it's a calming voice out there amongst FUD, but the FUD has decreased. And so, like, this is the way it should work, right? And more people who do this work, and you do it because you're passionate about the company, right? I think it's awesome. I think it's really cool.
I think I'm inspired, by, the early juggernaut in my career was Microsoft, and the late juggernaut in my career is Bitcoin. And if you're looking for a commonality, it was Microsoft made room for their partners, and Microsoft was successful because just about every techie company on the world, on Earth, could build something, build a product, build a service, and work with Microsoft. So they made space for the partnership, and they respected their partners. And I think with Bitcoin, right, the success is it's decentralized, and everybody can choose to engage with Bitcoin in whatever depth, technically or economically or intellectually they wish to. And I think that's informed us. So as we built our company, we wanted to make space for our partners and create a community. And it's very, very clear that we can't do everything. Like the best marketing isn't done by employees of our company. The best education is done by our customers on the product, by our investors on security. And you just see, endless examples of that. I used to tell our investors on the road shows, I said, our objective is to stay in our lane. We're not going to compete with you. We're not going to do it if you can do it. We're going to do the things you can't do. So our job is to create the security, buy the Bitcoin, hold the Bitcoin, and do that in a credible fashion. You could almost say the most valuable thing in the market is credible, durable, high-performance volatility. And a lot of people have figured out how to create non-durable volatility or non-credible volatility, credible maybe non-transparent volatility, or low-performance volatility. But creating high-performance, transparent, credible volatility is what makes us a success. And when you understand that, you realize that there's a lot of investors who are very long 30-day call options. And so they have a particular view. Their world ends in 30 days, and they want up. They're constituents of ours. There's another set of investors that are very short 30-day. They're looking down, and their universe ends in 30 days. There are the out-of-the-money long call option people. There are the long-dated equity people. There are convertible arbitrageurs, and on any given day, they're either buying our stock hard or they're selling our stock hard, but we're in business with them. There are big people that hate Bitcoin, and whenever something bad happens, they want to put a short on it. They short us. And let me tell you, if you gave me a choice, would I rather have them short my stock or short somebody else's stock when they're mad at Bitcoin? The answer is I'd rather have them short my stock. I never want them to lose faith in the fact that I am double long, and I want them to think that they got a 2-for-1 short. So you got all these people out there in the community, and there's someone that needs to be told why it's a good idea to short our stock when you're hating on Bitcoin. And there's someone else that needs to understand how to sell volatility, and somebody else wants to buy the volatility. And you have the long equity investors, and then you have preferred, and you have convertible bond investors, and And then you've got the options traders, and you can never forget, for everybody, you read a lot on X about people trading options. For them to trade the options, someone at Susquehanna or someone has to create that market. So there's a market maker creating that. And it turns out that, you know, there are incredibly powerful forces in the market. They're all doing their job, and they're very good at it, right? Like, you want to know how good they are at it? Just take a stock ticker out, take a Bloomberg or take a TradingView or anything, and then put on your screen Bitcoin, IBIT, MSTR, and track it minute by minute, second by second, and watch the correlation and ask yourself the question, who's making all those things hop, like in synchronicity, amplified in a certain way? And I think that the point really is, you think you know the investor, you don't know you think you understand how the market works. You don't, right? The point at which you understand when you realize you don't understand. Like the market's much bigger than any of us. And so the takeaway from that is humility, right? You have to allow for lots of participants. It's a highly decentralized market. There's so many conversations going on every day in every direction, in all polarities, right? In all languages, everywhere in the world. Yeah, you know, the company could never hope to be able to meet every need. And, you know, our bias, Fong and our bias is naturally going to be long the equity, you know, with a secondary objective of making sure all of the credit instruments are fairly valued, right? That's how we think. Fair to the credit counterparties, but our job is to make MSTR go to the moon. That's how we think. But, and here's the conundrum, for us to be successful, we actually need people in our ecosystem that don't believe any of that stuff and have the exact opposite point of view. They're the ones making the market on the other side of the trade. And what I learned early on in my career is the fate worse than death in the capital markets. It's not for them to hate you. It's for them to be disinterested in you.
So Bitcoin started as a peer-to-peer network. It is a peer-to-peer network, but it's also now becoming an ecosystem. It's an ecosystem full of Bitcoin treasury companies, lots of vendors and service providers, ETFs, other products. And the retail audience is definitely picking up on this and tracking it and amplifying it. How helpful is that, and where could it go over the next 3 to 5 years?
I think great ideas spread via word of mouth. And every retail investor, no matter how much or how little money they have, is no more than one step or maybe 2 steps removed from someone running a public company or someone running a multi-billion-dollar portfolio, or, you know, or someone running a state, or someone running the cabinet, or a country, or a cabinet department. You know, I walk into a hotel and, like, you know, a 20-something guy will walk up to me and say, "You have to talk to my father," and his father turns out to be a mega billionaire, right? And he's the retail investor, and his dad's not invested. But I have to tell you that all these retail investors, they're all indirectly or directly driving our culture, and of course, all it takes is maybe 2 iterations before you've gone from insignificant to being 20% of the market. And then once you're 20%, it's unstoppable. The entire world flips. So I think it's incredibly important, not to mention the fact that it's refreshing talking to retail investors because there's a certain honesty and candor and enthusiasm. So I guess asking, and they bring out your best performance. Take any rock star and ask them, would you rather play to a music festival full of 20-somethings, a third of which are jobless, or would you rather play in a nice, elegant tent of a billionaire at his charity ball for 300 of his rich, elite friends? And the answer is, they would do that one for free. And this one, you have to pay them quadruple. And they come in and they get off the stage, right? And so I think we do it for the people, the masses, right? You're not going to change the life of the institutional investor. You're like 2% of their portfolio allocation going to 200, up 20 basis points, and they've been trained to be very, very measured in their communication. But when someone walks up to you and says, hey, you changed my life, I retired, I bought a house, I got married, I had a kid, you meet someone, they say, yeah, I was able to move to the Caribbean and I lived there permanently because of you, right? That's much more motivational, I think. So if you're saying, like, why do you do it, right? Well, you do it in theory to make the world a better place, but, you like to make people money, but you really like to make retail investors money because it's their money. Whereas when you're making the institutional investor money, it's going through 3 layers before it eventually ripples to a nameless, faceless, institutional, whatever organization. It doesn't have the same emotional appeal.
I mean, I'm surprised more public companies haven't embraced social media generally, and X specifically. Right? It started with athletes and musicians, said, well, I want to get out to my fans, and rather than go through a publicist, I'm going to go direct to them. And technology provided a way for do that. Politicians, rather than going through a PR person, said, I'm going to reach out in a public town square, like they used to do, and go talk to their constituents. And what better way to do that than via social media? It's the same concept with investor relations and corporations who are really funded by the trust primarily of retail and institutions. Why wouldn't we get out to our retail shareholders via the same avenue and skip and bypass the middleman? And the answer, the reason why more aren't doing it is because of friction, concerns, risk, legal, because it makes total sense, right? And it's not even just in a Bitcoin community. I think if you want to access your shareholders, this is the way to do it. And Mike's right, it just feels so much better. Like, trust me, like none of our institutional, holders, and they're awesome, are coming up to you at an event with their wife or husband and saying, you changed my life. No one's saying, I was able to have more kids because I invested. Like, nobody on the institutional side, and that's just, yeah, it makes you feel good. It's inspiring. Why wouldn't you do that? And I'm sure that happens to athletes and marketers and influencers and politicians. It's such a great forum to get outreach to folks, and Bitcoin amplifies that. But you ask this question, like, I love what True North is doing, the digital transformation of investor relations. Like, yeah, our advice number 1 is buy Bitcoin and put it on your balance sheet to any corporation. But if you're not going to do that, at least use social media to get out to your investors. Like, why wouldn't you want to do that? And as a retail investor, why wouldn't you want to see the raw representation of the executive team that you're investing in versus the extremely filtered, curated, prepared remarks at, Mike's got some guts here, right? Like when I joined 2015, I still remember, right? Like I was CFO and IR guy, so I wrote the earnings script and I would read the script that said basically nothing. And Mike would just go ad-lib the thing, which people don't really do. And then I remember once we were like, hey, Mike, I'm gonna give you some bullet points. And he was like, okay, yeah, I'll take your bullet points. He went completely off script. And then after that, I was like, well, I'm gonna just write you something. And he didn't read any of it, right? But that's sort of how this should work. Like, you don't really want to hear the scripted, prepared remarks that were recorded 1 week in advance to the earnings call. That's not a investor relationship, right? You want to hear the raw remarks, the raw emotion, and that's what the retail investors want to hear from someone they're going to put their life savings into. I think it makes complete sense.
So you guys have created these new novel products that the market has never seen before, right? Strike and Strife, and people are beginning to see the value of these products. And we've been trying to track what's going on there and how these can potentially change the world of finance. And so I kind of got a two-part question.
Peace out, Moose.
What can we as True North do, and what can everybody else in this room as an audience that's kind of experiencing this do to help? Where can this potentially go? What do you see this looking like in 3 to 5 years? How does it change the world of finance so we can get there?
Yeah, well, I would say a lot of the energy in the Bitcoin community has always been about how do we fix the money and how do we explain to people why Bitcoin fixes the money. And I think that's been going on for 15 years, and there's an incredible amount of really good content there. What people, I think, misunderstand about our mission at Strategy is we're not here to fix the money because Bitcoin did fix the money. We're not even so much trying to convince you that Bitcoin works. I think we've crossed that inflection point. I think when the President of the United States created the Strategic Bitcoin Reserve, and when David Sachs says Bitcoin is digital gold, I think it became clear that the establishment has accepted the idea that Bitcoin works. We're here to fix the capital markets. And so here's the mission. The mission is $100 trillion worth of equity based on future expectations of currency derivatives, of broken companies operating broken currencies, or weak companies operating on weak currencies. And our suggestion is you can create new equity based on a sound money, and strong companies can actually grow those equities and compete against the Mag 7. That's hard to understand, right? So there's an entire world of equity analysis. How do you value a company based upon digital capital and based on sound money as opposed to based upon traditional 20th century business techniques? And then in the credit markets, we want to fix the credit markets, and that's $300 trillion of credit instruments, bonds, preferred stocks, convertible bonds, sovereign debt. They're all based upon future expectations of cash flow of weak to failing currencies that are issued, securities issued by weak companies. Companies without assets, with weak business. Which companies do you think are there, right? There are weak companies issuing credit securities valued on future expectations of cash flows that are coming to you in a currency which is collapsing in value. They're not good securities. They don't yield much. The credit's not great. They're not liquid. They're sold in an antiquated fashion. Most preferred stocks, most corporate bonds are sold over the counter, one and done, short duration. They don't have tickers. You probably can't name a ticker, name a ticker for a corporate bond issued by a major bank in the United States. Now, major banks in the United States have issued hundreds of billions of dollars of fixed income instruments. You ever wonder why is it that a major bank has never issued a fixed income security that you can trade? Right? They're sold through a sales force. How many things, they're sold through a sales force that's 50 years old. I mean, the idea is 50 years old. They're people. They have CUSIP numbers, right? There are numbers like something 199742. And then there's another issue, something 19743, and you can't get the quote unless you pay $25,000 a year to get the Bloomberg, and then you can get the quote, and then there's no market maker, and the spreads are 3%. And that's because why would you ever trade them? What? So that's the state of the credit market. And so we're not here to fix Bitcoin, we're here to fix the capital markets. Now, fixing the capital markets means going to people that buy preferred stocks that are illiquid, that they're holding, waiting to die, right? They're waiting for them to whatever expire, and going to those people, they don't even know they own the stuff, and they're getting 100 basis point spread above SOFR on garbage, and explaining to them how they could actually get paid 700 basis points above SOFR with a better credit instrument, right? And like, how is it that our converts can do 60% and the average convert index is 4 or 6, right? Go find, but the unlock is finding people that don't even know, that don't know converts exist. And then of course, the market, it's structured, you have the SEC 33 Act, the SEC 40 Act. You have so many rules, and when you decipher the rules basically just cripple the market. They cripple the market, they cripple the distribution channel, and traditional conservative or conventional actions cripple the securities. And so, what can you do? I think it's a educational campaign to the investors of the world to show them, there are more than 100 equities, or maybe you can consider more than the Magnificent Seven. Here's some new equities that can outperform the Magnificent Seven. Let me show you what they are. That's a renaissance in equity capital markets. And then there's a crusade. Well, here's some credit instruments that will give you yield for your retirement account, and they actually aren't risky. Not nearly as, you don't even know how to get them. You don't know they exist, but someone invented an electric flying car with a nuclear reactor in it. You don't have to refuel once in a lifetime. You can buy that. It's cheaper than the normal car. But someone told you that it's dangerous to have a car with a reactor in it, right? So I think that the rate at which the capital markets evolve, it's really a function of how rapidly ideas disseminate. And I think that's a function of just how adept and nimble and facile the educators are in the market. And I think there's an opportunity for everyone to get involved. And of course, the more people that get involved, and the more effective the education, the faster we transform the market. The question is, how fast can you grow? It's really a question of how fast can the capital markets absorb a new idea. And if there was one 60-minute podcast you could distribute that just solved it, then you would just let it run, but there isn't. There's a lot of work to be done in educating and helping people embrace new ideas.
As everybody knows, strategy issues equity at the market when it's proper to do so and accretive. Is a shelf necessary for success? I mean, we see Bitcoin companies, Bitcoin treasury companies coming to market in a fashion where they can't have a shelf for 12 months. Is a shelf necessary for success?
I think you can, if you gave me a public company that was a cash cow that couldn't issue equity, but it generated cash, it would have extraordinary success just sweeping its cash flows. Here's my list. I take a company, I take the cash on the balance sheet, I convert it to Bitcoin, that's a success. I take the cash flows, I convert them to Bitcoin, that's a success. I take the dividend, I convert it to Bitcoin, that would be a success. I take the buyback program, I turn it into a Bitcoin buyback program, that would be a success. I don't take the company private, but I do an LBO where I lever up the company, so I basically pledge the cash flows, raise private or public debt, buy Bitcoin, that's a success. I take a company that's got a slow growth business that's struggling, and they sell off that business or do an M&A transaction and take the proceeds and buy Bitcoin. You've swapped a zero growth business that you sell at 1x revenue for a 60% a year growth business that you buy at 1x revenue. Would you do that trade? Right? Yeah. You could sell this business, pay 30, 40% tax, and buy Bitcoin. You would still be better off by a factor of 100 over the course of a decade. So you can take a business that doesn't have access to equity, and you can do all sorts of capital markets transactions. If you're a private company, many of those things are also available to you. And of course, you can also work your way down the credit instrument ladder, where you could sell forward contracts of your products. You could sell a subscription to your product, roll that into Bitcoin. You could sell convertible preferred. You could sell straight fixed preferred. You could sell junk bonds. You sell convertible bonds. You could do bank financing. The world is full of people that found endless ways to do it. Warren Buffett, one of his secrets is he bought insurance companies, right? And insurance companies had investment portfolios, and then he was able to invest those portfolios in securities. Well, the trick is the operating company can't hold the security, but this insurance company, has like one layer, and they get like a waiver, and they get to invest in securities. So he found a very elegant way to grab a float, but the trick is not getting the float. The trick is being able to invest the float, right? And so what if you get control of one of those insurance companies and you reinvest the float in Bitcoin, right? And of course, there's a million compliance and regulatory issues you got to work through. But I can imagine 100 different strategies that you could pursue to sweep cash into Bitcoin, and a lot of product changes to the way you run a product business or definition of a product that would enhance the product. You could, for example, build an insurance policy where, you invest the premiums in Bitcoin and use it to increase the payout on the back end and grab market share, or you could cut the premiums in half because you're invested in Bitcoin and grab market share that way. And so what you can do is a function of what kind of company you are and what jurisdiction you're in and what kind of entity you're managing. But, again, Buffett showed you that where there's a will, there's a way. And, you have some people that kind of they want to do the simplest thing. They're like, well, I can only do this and this, and so that's what I'll do even though I'm going to fail. And there are some people that don't want to fail, and so they'll think a little bit more creatively. And, lest we forget, the greatest investor of the 20th century, his success story starts with buying Berkshire Hathaway, which is a failed textile mill. So it starts with a failure. And he just simply decided, even though it's a total abysmal failure, he's going to turn that into a shell company to become a great investor, and he did that. And I think that every single operating company in the public market is in the same situation now. Every private company is in a situation. It comes down to will. Do you have the will? And do you have the courage?
So I've got a really important question here. You guys did something very unique as a company, particularly at this conference, which is you took a bunch of people that streamed from their basements at midnight on a Wednesday, and somebody convinced you guys it was a good idea to let us have a room and host our own conference here. So first, whose idea was that? And then the second one, because you guys have become such fan favorites in the retail community, you might be the only person on earth with a personal digital artist around him. How weird is this for you?
I think it's definitely Fong's idea you're here, so you should.
We love you, Fong.
It was my idea to retweet you. But we work like that, which very often the way it works out is I see something which I think is amazing, beautiful, extraordinary, compelling, novel, and I amp it, and he sees it, and he operationalizes it in the business. So all of the execution is him, and occasionally I nudge him, and then occasionally he has a good idea too.
Look at the idea of Bitcoin. A lot of these ideas, they sort of, there's a lot of gut instinct to an idea. Like when we decided we were going to do Bitcoin for corporations 4 years ago, I was like, hey, Mike, should we do this? And it's like, yeah, of course. Like it's not like there was this long debate of is it a good idea. When somebody came and said, should we let True North host an event within an event within an event, it might seem crazy, but it was obviously a good idea, right? Those are the easy ones, right? Like when Mike told me we should do Strike. Well, when Mike told me we should do Bitcoin, that took a little bit of work. Strike took less work. Strife took even less work. By the way, back to your question about how you can help more than you already have. I don't think people understand Strife. And I don't mean how it benefits us, right? Which I think we've explained fairly well, and you've explained fairly well. I don't think the retail community understands the benefit of a 10% coupon bond that lives into eternity that you could buy in the NASDAQ, right? I have some neighbors down the street who are in their 60s or 70s. I haven't asked them, but they bought a house for $500,000 as an investment. And they, they cleaned it up, they redid the yard, we're pretty happy about that, and they rented out at something like $3,000 a month. And so you get $36,000 a month on a $500,000 investment. I'm sure they took out a mortgage, let's say it's about 3% or so. And almost every year, the tenants turn over. And when the tenants turn over, that house sits vacant for about 2 months. And when the plumbing doesn't work, the guy shows up and cleans, goes in there and fixes the toilet, right? And anyone who's ever fixed a toilet before, it's not fun, but that's what he does, gives him something to do. And that is the traditional way for people, who have some wealth to make money off of their wealth. The other way is to get 2.5% on a T-bill, or the other way is to buy some mix of something that you don't quite understand. Like, go tell people, you basically, instead of doing all that work, the hobby of buying a house, because that's the traditional way to make money off of your money, go online, put STRF in, put 500, whatever amount makes sense, and collect your 10% forever. And I don't think people realize how novel an idea that is versus all the alternatives out there. Like that buying a house is hard. Renting it out is even harder. Maintaining it is even harder. There are many better ways out there now. And if you can help explain that to folks, right, that's a great option, in addition to the equity. And other companies should be providing something similar.
Yeah, on that subject, normally if you want, if you look at that instrument, you're paying like 600 basis points more than SOFR. Normally you want super high yield. You either have to take massive credit risk, you're looking at distressed debt where you're in anxiety, or you have to take a lot of credit risk on a short duration instrument that will be called or repaid in a year. With Strife, you're getting something that you could hold for 20, 30, 40, 50 years. You could gift to your granddaughter, right? You can hold it for 100 years. And if SOFR comes in, if interest rates come in, when you have a very long duration instrument, a 10 duration instrument trades up 20% when the interest rates drop 2%, right? And if it becomes more creditworthy, it could trade up 20, 30, 40, 50% when it drops, right? So there's capital upside on one hand, but the other thing is is when you buy these other short duration things, when interest rates drop, the companies just refinance them, they pay them off, and you lose it. So it's very hard to find high fixed income yield in a credit-worthy package that's transparent. And we don't need to I don't think we need another Bitcoin educator group, because people have been working on educating for Bitcoin for 15 years.
How'd you get a
And I don't
ETB?
think we need...
That's crazy.
I mean,
Did you get a black and white?
maybe we can always do with some equity education, but the fact is $5 billion a day gets traded in MSTR. So it's pretty clear that it has massive awareness. The things we've done, I think, that you could feel it in Fong's voice, and me too. I think we're most proud of
dude.
are
Hopefully you pull
creating
a
Strife
sick-ass
and
card,
creating
like,
Strike.
Bro, if you pull a
Because
card from that, like,
we
you
use
should
the
consider selling
energy
it
in
immediately.
Bitcoin and the volatility in
'Cause
Bitcoin
a lot of those cards will
in
be
order
worth
to
a
create
lot
one
right
instrument,
when they come
Strife, which is just a much higher grade fixed income for people that want it. Just a better maybe
I don't know.
arguably
I guess it
it's the
depends what
best
card you get.
high yield products in the world. I don't know. I don't really think that there is another instrument that's a perpetual 10% plus floating listed preferred stock that's 5x over collateralized. I just don't think you'll find anything like that in the world. I've never heard of it. So we think we've created something which is akin to, the nuclear-powered hover car, right? And that's cool. And the world doesn't know it yet, but I think everybody's going to like the idea of something which has double the performance that lasts for 30 years on one can of fuel, right? And I think with Strike, what we wanted to do was create something that gave people Bitcoin
They're literally
upside
just talking about what they talked about on the earnings
with
call.
downside protection, principal protection, and a guaranteed coupon.
I'm sorry, I got really distracted in this chat
are
over
scared
here.
they don't
bro,
want
this
the
is why I
roller
don't have
coaster of
Twitter.
100 vol, but they're scared to death of 50
You can't
vol.
argue with stupid people,
And if
bro.
you say, if
can't
you go to the
argue with
average
stupid
person on the
This is
street,
why I deleted Twitter.
you go to them and you say, well,
can't
do you want to
convince
invest your
someone who has a
retirement
fucking
account
ego
in Bitcoin or IBIT?
anything.
It comes from a good
You
company,
literally just
BlackRock.
can't convince them of
They're
anything.
like, well, I just hear it's too volatile,
It's
right?
so
The talking
annoying.
heads on CNBC
But it's
think
so
it's
funny.
too volatile. And they're like, well, and I need money to live on. Well, what if you get an 8% dividend and you get principal protection and you get a conversion rate, which works out to be like 35, 40% of MSTR, which can work out to be 80%. It could be 80 to 100% of Bitcoin. What if you have the potential to get 80 to 100% of Bitcoin and you get the guarantee and you get the downside and it's over collateralized and it's liquid? Well, that's kind of like Bitcoin with guardrails. Actually, Bitcoin with guardrails with a living stipend, right? I'm going to give you the Bitcoin vehicle. I'm going to give you a stipend, right? I'm going to put rails around it, and I'm over collateralize it 5-to-1 or something. The creation of those instruments are to onboard a massive class of normal investors that would just like to live happily ever after, right? And I applaud anybody that's going to live happily ever after because they took the plunge on MSTR, but that took a lot of conviction. And the way that we grow this market is we provide the best credit instrument for the most skeptical fixed income investor in the world, and they come in. And then we find this great Bitcoin middle instrument for the normal investor that simply can't handle the G-shock of the fighter jet, when it pulls up, because we pull the stick hard sometimes, And in fact, of course, if you listen to us on our earnings call, right, the torque, or to your credit, fully torqued Bitcoin. The investment proposition of MSTR is we're going to make it double, triple, fully torqued Bitcoin, right? If it's a 2x Bitcoin, I'm sitting around trying to make it a 4x Bitcoin. And if someone walks in and said, and I have ways to get it, from here to here to here. And when I think about it, I get kind of excited. I'll say to Fong, if we do this and this and this, we could get to 3x Bitcoin volatility, maybe 4x, right? So and there's a group of people for which volatility is a beautiful word, and they get, the Jeff Parks of the world, and they get very excited. And there's another group of investors that for volatility is a dirty word, and most of them are sitting on CNBC, and they're conditioning the mainstream audience every day. And so I think the real key for us, and of course the great irony is the way that we're going to create, the way we're going to be able to pull 4 Gs on the MSTR jet is we create Strife and Strike, and they're brothers and sisters, and then we grow that business, and that is an educational campaign, because we have to introduce a new idea, a new security. No one's ever seen it before. 50 years in the capital market. Nobody wanted to hold preferred stocks because they were all garbage. So now you've got one that isn't garbage, the not garbage one. Yeah. Now we have the not garbage one, right?
I think Strife is a better name than not garbage.
Yeah, that's why we went with that. He keeps me honest. Sometimes I get too excited. Yeah.
So you've got an entire room here full of a lot of retail investors that are very excited about everything you're building, everything you're bringing to the markets, all the ways you guys have invested your time in educating them and really teaching new courses in what finance looks like even in people's personal lives with all the new products that can get integrated. What's the one thing you would want to say to the retail community that you would really like to stick with them?
All good things flow from Bitcoin.
Oh my God.
I don't think I can say it any better.
Wow. People clapped for that?
Yeah, we're on a new frontier of digital capital.
Man.
You guys are blazing the path. We're hanging on. It feels
I agree,
we're
but
hanging
you
on the
clapped
outside
for
of a
that?
rocket sometimes, right? I mean, holy moly, fully torqued is right. Yeah. So I guess I've got one more question, and part of my presentation a couple days ago was about the evolution of like the equity market, right? And it's primarily been a function of how fast data and communication can transmit between people, and we're now seeing this increase exponentially, right? We've seen some mania with the GME, and information is moving incredibly rapidly. And we're also seeing the advancement of intelligence, right? And a lot of this conference has been about the advancement of AI and intelligence. How do you see that changing in the next year or 2 years with communication flow increasing incredibly rapidly? Does that, what exactly does that look like?
The William Gibson quote is very apropos at this point. He's quite a brilliant writer, and he said, "The future is already with us. It's just not evenly distributed." The future's already here. It's just not evenly distributed. What you have is heterogeneous future shock. Ideas and technologies and protocols
We've been here for a while, dude.
Are rippling through the global economy.
Is there another one of these
everywhere, in every different way, but they're manifesting themselves differently on different organizations, different entities, different individuals. And there's a natural rate at which ideas can propagate, but they propagate through various fluids at different speeds, and they have a viral effect. I mean, think of it as any kind of virus. It infects some people and they shrug it off, and others become super spreaders of it. when I was as an engineer, the metaphor that is very powerful in my mind is a shock wave. And a shock wave forms when you have an airfoil moving faster than the rate at which the air can get out of the way. So the speed with which air molecules communicate to each other has a common term. We call it the speed of sound. But it's really the rate of communication of molecules of the air. When you're slower than the speed of sound, you have subsonic flow. It's very easy. It's pretty efficient. When you actually breach that speed, it's like you look that way and I slug you in the back of the head with a baseball bat. And if you're looking at me and I swing the bat, you duck. So if you're looking at me and I'm communicating fast enough, it's just a trivial joke. But if you're looking away from me, I take your head off. And so that's why you don't travel supersonic, right? That's why in 50 years we can't figure out how to create a supersonic passenger jet, because it's so much more obscenely expensive and turbulent to breach the speed of sound. I think you got to think about the idea of ideological shock waves, like this week a Bitcoin strategic reserve bill vetoed by a governor in Arizona. That's an example where it's going too fast and the governor sees no merit in the idea, shuts it down, and then a Bitcoin strategic reserve bill signed by a governor of New Hampshire, right? So what you're going to see is all these ideas, you're going to look at them and you're going to say, well, this is a great idea. It's pretty obvious every family, right, should adopt this. And it's going to be like, no, hell no, of course. I'm going to quit my job and tell the next 100,000 people this, right? That's how the idea will spread. And you'll say, well, why doesn't everybody react rationally? Well, you have a heterogeneous market. Everybody has a different attention span. They have a different set of prejudices and biases and a local set of information and political preferences. And the way you're succeeding, right? When the central banker of whatever country says, we've decided not to adopt Bitcoin as a strategic reserve asset, that means you're succeeding, right? When, in your video, when bankers that run large banks say, I hate it, that means you're succeeding. And the reason you're succeeding is because it's a new idea. It's a shock wave. It's propagating. Everybody's getting asked the question. They don't want to answer the question. They don't want to address the issue any more than the air doesn't want you to go faster than the speed of sound. And what happens when you break the speed of sound? You get a sonic boom, right? It's very loud. And so the screeching is indicative of the ideological velocity and the rate at which it's spreading. I think you're just going to hear lots of screeching. Lots and lots of screeching about all these things, and it would be a mistake to interpret the screeching as negative feedback. When you hear the sonic boom, that means you succeeded as an aeronautical engineer, right? That's a success. And when you get the sonic boom in the capital markets, that also means you're succeeding. That means that everybody in the world is forced to embrace, right, and react to a new idea, and there hadn't been one for 100 years.
Speaking of airplanes, 3, 4, 5 years ago, you often said Bitcoin adoption is going about as fast as it can go without breaking something. Do you still feel that way, or is there a chance that Bitcoin treasury companies can pull that future forward, nation-state adoption can pull that future forward?
Well, I still think it's going as fast as it can go, but I think that Bitcoin treasury companies are every Bitcoin treasury company is a motor on the network, right? Torquing the network, right? And so as they get bigger, they're going to get exponentially more powerful. Metaplanet is getting exponentially more powerful. Similar is getting exponentially more powerful. We are getting more powerful. Right, so I think that they're part of the dynamic that's going to drive the market. But My thought is it should be growing 30 to 60% a year for
How long did
the
it
next
take you
decade.
to get on the
My
website?
long-term forecast is 30%, 29% ARR over about 21 years. So I haven't changed my view on that, and I think that everyone that gets involved, you are a driver, right? Everybody in this room is a driver. Every company that adopts Bitcoin is a driver. Every time a politician advocates for it, they're driving it forward. But you know what? Every single time a politician blocks something or reacts negatively to, they're driving it forward. Right? You can't pay for the marketing we just got in Arizona. Right? That's going to catalyze millions and millions of people to say, well, what is this thing? Was that the right decision? Right? Should we reevaluate this? So I think that everything is good for Bitcoin.
So Strategy is the company whose phone is always going to be ringing as new companies start to enter into this market. What sense are you getting that this is really accelerating at a much faster pace than people are thinking?
I think a year ago, there was us, and then Semler and Metaplanet, which are companies with an operating strategy that adopted a Bitcoin strategy. And really, that was just a year ago, right? Came out and said that they were going to adopt a Bitcoin treasury company strategy. And now we're up to 70 companies. So if you extrapolate that out, that means that next year,
we'll see.
Right, we could be at 700.
I'm sure I'm not going to get in.
Right.
Apparently, I should have been waiting this whole time.
Success breeds interest.
I mean, I'm going to get prismatic this weekend.
We're at a time
anyway,
when there's
so
just
it's whatever.
A lot of uncertainty in the economic environment, which causes companies to ask themselves, how do we create value for our shareholders? And if they go out and they just say, let's look at the top 15 companies in the world last year, number one is Metaplanet. Semler follows somewhere in there, and I think we were number 14, right? Like, you would think that that would cause people to be interested. I think the other piece is a lot of folks talk about the Overton window and what's happening with the U.S. government and the embracement of a strategic Bitcoin reserve, digital asset framework, stablecoin bills. We have an administration who's very supportive of Bitcoin. It makes everybody wake up and say, hey, what is this Bitcoin thing? Right? So I think we're early, but I think the acceleration is real. And I think, from last year to this year, right? We held this conference last year in Las Vegas. I think there are about 50 to 100 attendees. This year we're at 300 attendees. And I think in this room, there's probably 400 interested folks, right? Next year, maybe we'll have 1,000. Right, so I think the acceleration is absolutely real. It's exciting.
Absolutely. Yeah, it's hard to beat Bitcoin, so join it. Or talk about the company that's buying as much Bitcoin as humanly possible, and hey, perhaps we become a Bitcoin treasury company, and maybe we go public and we start being one of those machines in the wheel. Yeah. So, I think we're at time. Should we wrap this up? Should we do final thoughts, pass it around, just like a True North call? Yeah, maybe we'll start with you.
Thank God this is almost over. I need to get out of this chat,
My final thoughts are just being at this event this entire week has just made me so hopeful for so many people, because the number of people out in the halls here talking about the impact that just a single equity and the entire ecosystem built around it has had on them, it shows that the information we share and the way that we share it makes a real difference for people in their lives. And it's one of those things that makes me very hopeful that more people are going to get on board with this mission, and they're going to push forward with telling all the people that they love about what it is they're discovering. This is life-changing stuff for a lot of people, and it's just been so amazing to meet so many of you. And all of our lives have been impacted by Mike and Fong, and this has just been a really amazing experience. So I'm really happy to be a part of this journey.
Maybe you, Tim?
Yeah, all of this reminds me of what you posted when we did our programming. We had, I think, at least a dozen, maybe 15 or 20 different countries in the room, and to have those conversations in the hallway with people coming up to you and saying, hey, I flew 16 or 20 or 30 hours to come see you, to come see Jeff. That really leaves an impact. So we really appreciate the support, and we're literally, right, the community power that we talked about on Monday, that's everybody in this room.
Yeah. Maybe over to you, Powell.
I want to thank you guys for what you've done, for not just strategy, but for Bitcoin. And I've expressed this sentiment before, but I feel it more now than usual, than ever. What's great about Bitcoin is because it represents freedom for a lot of people, it attracts some pretty cool, good people. Right, like, you can't say that about every technological revolution, every capital revolution, every digital revolution. I've met some amazing people here. I've met some amazing people over the last 4 or 5 years, and that's the sentiment that I don't think most people get, right? And being in the room here, you get it. Being around people, and but like, it's just, you guys are great dudes, right? The folks out here are good, cool people who care about their country, about the world, about the economy, and about freedom. And it's just an awesome feeling to be around people who are just good, honest people.
All right, Michael, I'll leave you for last. I'll go, and we'll let you close it out. So some of my final thoughts, I met a ton of incredible people being here. Some of my final thoughts are really trust your gut, right? I think a lot of people are probably feeling a gut feeling in their room, being around so much energy. This is the most innovative company in the planet right now, and I think it's very apparent being at this event for the last 3 days. So trust your gut and upgrade the world, right? If you see an opportunity, take it. I mean, I left my very comfortable traditional financial job and to take a bit of a risk and explore this. And I mean, here I am. I never would have guessed that I would be on stage with you guys. I mean, this is incredible. So thank you. And upgrade the world. So appreciate the time, everybody. So over to you, Michael. Final thoughts.
Well, I want to thank you guys for setting this up. For those who are listening to this on the live stream or future recording, I just want to say I'm sorry you can't be with us here because the energy at this conference is electric. I've been to a lot of conferences in my life.
Oh shit!
I can
I'm
say
in,
that
baby.
I've never seen the
I'm
electricity.
in. Which one do I get? Black Bolt or White Flare?
The enthusiasm
Which one?
that
Which
I
one?
see
Which one?
here at this conference, in this room, in this community, at this time. And so
you pre-order it?
It reminds us why we all come back together.
Can I get both?
Again, and the value of coming together.
Is there a limit? Can I just get one of each?
And then
or
I'll
what?
just end with the thought. I said all good things. They all spring from Bitcoin.
Is there a limit?
Bitcoin is hope, and the beauty of Bitcoin is that we're able to create better equities, better securities.
Are you sure?
Better products.
I feel like I'll be able to get one
better
of each.
services, better communities.
I'm gonna risk it because I want to get one of
governments,
each.
Better protocols, better plans, better
risk
strategies, better philosophies, better politics, better everything, right? It just injects a better spirituality and a sense of optimism into the world. And I think anybody that doesn't understand what I mean when I say that, I would encourage you to block out 100 hours of your life and go down the rabbit hole and try to figure out how this can be beneficial to you, your family, your company, your community, your institution, your country. I got to say, I'm just incredibly energized by the community, by each one of you. It's an extraordinary privilege to be on this journey with you. Thank you for your support.
Shit, son, I'm about to get me some black and white, son. Let's go. Let's go. I would buy more, but I think one of each is fine. Did it work? Let's go! I got me some black and white pre-ordered, baby! Let's go!
Thank you so much for joining us for Bitcoin for Corporations 2025. I'm pretty sure Michael Saylor made a great pitch for 2026, so encourage your friends, your family to get tickets for next year because there's something very special about being here in person. Thank you so much to all of you watching, streaming, and have a great evening. Thank you to our sponsors, and thank you, Strategy.
I'm just spamming this chat. GameStop, GameStop, GameStop. Oh, that was amazing, bro. That was amazing. Ah. Bro, everyone in that, like, there was a couple people who, like, agreed with me, but, bro, I was getting into some serious arguments in that chat, bro. People really don't believe in GameStop, bro. Like, it's crazy. It's crazy how nobody believes in GameStop, dude. It's actually fucking crazy. Holy shit, man. How are people so fucking ignorant, bro? They're in there talking about all these, like, shitty companies, like these shitty, like, 100, 500 million asset companies adopting Bitcoin, and they're like, GameStop's trash. They haven't announced anything. GameStop's trash. It's like, bro, you guys are so blind. You guys are so fucking blind, dude. You have to have your little fucking handheld. We're buying Bitcoin. We're buying Bitcoin. Okay, I'm gonna buy your company now, but I'm gonna ignore the best fucking company of getting Bitcoin. Oh my god, dude, I'm so bullish right now. I don't even care if the stock goes down, bro. That stream made me so fucking bullish. Holy shit. Holy shit. I am so bullish. I can't even tell you, dude. Holy shit. This moment right now, right here, right now, this is the most bullish I've ever been on GameStop, bro. This is actually the most bullish I've ever been. Holy shit. Holy shit, dude. Holy shit. Bro, I cannot believe that, dude. Oh my god, dude. I truly can't believe that, bro. I can't believe the ignorance. I cannot believe the ignorance, bro. Holy shit, man. That's fucking crazy, bro. That's actually insane. I can't believe how ignorant people are. Bro, what the shit, bro? That was crazy. That was crazy, dude. That was actually insane. That was the greatest GameStop social experiment for the crypto piece of GameStop I've ever seen in my life, bro. Bro. Holy shit. That was the greatest. That was the greatest social experiment ever. What the hell, dude? What? What? When does Black and White come out? How long am I gonna have to wait for these boxes? I can't believe I got boxes. That's crazy. That's crazy. I can't believe I got boxes, man. Now the website's not working, but whatever. Let's go! We got Pokemon! Oh, I'm so excited. I hope this is a good box. I hope it's not like Journey Together, where there's a bunch of like trash cards. Like, I hope this is a good box. I hope there's some decent cards in this. Holy shit, dude. I can't believe that chat, bro. That was crazy. That was crazy, man. That was actually crazy, bro. What the hell, dude? I can't get over that. And, like, bro, people in the chat were, like, talking so much shit on me. They're like, this guy's a fucking idiot. He doesn't know what he's talking about. GameStop's trash. They're, like, saying I'm fucking ignorant and stupid. And I'm like, dude, what? What? That was exciting. That was exciting, dude. Yeah, dude, no joke. No joke, bro. I was getting shit talked on in there. By, like, everyone. By everyone. Like, there was maybe, like, a couple, like, maybe, like, 3 or 4 people who, like, understood what I was talking about. Everyone else was shitting on me, bro. Straight shitting on me. Oh, man. I mean, I was talking a lot of shit. Don't get me wrong. I was in there. Like, I was fucking in there, bro. So, you know, don't get me wrong. I was talking a lot of shit, too, but... Damn, bro, being ganged up on like that? Being ganged up on like that? Whew. Damn, that's opportunity, bro. If I've ever seen opportunity before, that's opportunity. Holy shit. Holy shit, that's crazy, dude. That's crazy. I was shooting shots too. I couldn't see you in there. You were in there? I didn't see you in there. That was crazy, man. That was crazy. Unless you were on a different account or something. I didn't see you in there. Oh, I said that? I mean, I was, but I was just like... I was just trying to, like, say things that I think would, like, trigger them to get, like, more information, you know? I really, like, wanted to, like, understand why someone was, like, thinking the way they were. But nobody really gave me, like, nobody really gave me anything. They just really, like, it's wild, dude. That was wild. That was wild. And then they're all talking about these shitty companies, bro. They're talking about all these, like, 100 million asset companies that are adopting Bitcoin and, like, how excited they are. They're, like, trying to value them. And I'm just like, dude, what? Why are you talking about that? Why do you care about a shitty company that's about to go bankrupt just because they're buying Bitcoin? Like, why are you ignoring the good play? Why are you ignoring the only company adopting Bitcoin that's actually good? Like, it literally doesn't make sense, bro. And a lot of people are still focused on, like, the legacy business. A lot of people, like, think that GameStop the store is shit still for some reason. Like, they don't read balance sheets, bro. They don't read balance sheets. Like, I got in an argument with a bunch of people about financials of, like, MSTR and GameStop, and, like, bro, nobody researches, man. Nobody researches. Nobody researches, bro. This is crazy, man. God, I hope GameStop, like, drops, like, 50 or 60%. Like, straight up. I know it'll hurt in the short term, but God, dude, if GameStop dropped 50% in the next, like, month or two, holy shit, that would be a crazy opportunity. I don't think it'll happen, obviously, but that would be a fucking opportunity, dude. That would be a huge, massive opportunity. Like, holy shit, man. Crazy. Actually crazy. I mean, good thing the strategy thing was today, because there's really no news. There's really no news at all. That was crazy, man. That was crazy. I think MSTR investors are loaded. They ticker ran from like 12 to 300 or something. I mean, yeah, but a lot of those people, like, like, they're not just MSTR investors. A lot of those people in there are Bitcoin investors. Like, a lot of those people aren't, like, MSTR investors. Like, a lot of them were, obviously, but a good, solid majority of them were just Bitcoin investors. A good majority of them. Blind bets. Yeah. And then there was some dude talking about how he made a bunch of money shorting GameStop, and he was talking shit like he's like, this is why people lose money on GameStop. They blindly follow it like GME Corey. And I literally messaged him. I was like, am I blindly following it or are you blindly shorting it? And he didn't answer me. He just kept talking shit. Like, these people have such big egos, bro. These people, like, I don't get me wrong. Like, I'm pretty egotistical. Like, don't get me wrong. I know myself. I'm pretty self-aware. But some of these people are so egotistical, they can't even see past it, dude. And that's opportunity, dude. That's opportunity if I've ever seen it. That's fucking crazy, man. I cannot believe. That has me hyped. That has me so hyped that many people are that ignorant, dude. I am hyped as fuck on that. Man, that has me excited, bro. That has me excited. So excited about that. Crazy, man. Crazy. Oh yeah, I think Gary V released his V friend cards today. And bro, they talked about GameStop like multiple times in that stream, and people still just because Ryan Cohen hasn't said anything. Ryan Cohen hasn't said anything. These fucking idiots, bro. Little doofus is fucking #1, baby. Little doofus is #1. How can you not see it? How are you so blind, dude? Fucking insane. How are people so blind? Crypto, they ain't got no balance sheets. I mean, that's true, but MSTR investors should be looking at balance sheets. Like, someone was... Yeah, I got an argument about, like, how MSTR's business isn't profitable. Like, people don't... They don't look, dude. Even whether they're in crypto or stocks, they don't look at the numbers. They just listen to what comes out of Michael Saylor's mouth. Like, all those people, Bitcoin, or what is it? Everything flows from Bitcoin. And everyone just went nuts. It's like, what? That literally means fucking nothing. That meant fucking nothing. Man. I smell opportunity, bro. I smell opportunity. I smell it. I can almost taste it. Do you taste that? I think that's opportunity. I think that's opportunity. Oh, shit. Definitely sus. We got boxes. Value definitely not going to be high for this set. Probably not. I mean, they could have good cards. Who knows? It is very sus that we got boxes, but I don't care. I'm glad. I'm glad we got some boxes. I'm glad. cards come from China. It's a big push before tariffs hit. Maybe. They are English cards though. They're not Japanese cards. But I get what you're saying. But when does Black and White come out? When does it actually come out? Shit, I'm out here pressure washing for more shares and they're saying my investment's dog turds. Facts, dude. Isn't that just fuck? Doesn't that just make you excited? That makes me excited, you know? That makes me excited. That makes me want, like, oh man, that makes me want to go all in. I mean, I already am, but that makes me want to YOLO the rest. Oh man, that shit gets me excited, bro. Knowing there's that many people that just don't believe in it. And like there were some people who believed in GameStop in there, but they were saying like GameStop was like 1% of their position. Literally. Like that's, you know, a lot of those people were like mostly Bitcoin or mostly MSTR, and then GameStop was like 1%. Bro, that gets me so excited. That gets me so excited. I can't even tell you. That is just crazy, bro. That is crazy. Oh, shit. Man. He's number one. Short interest gone up since the Bitcoin news. The Market Watch one won't update for like another week. But yeah, short interest has gone up like 2% or something in the past few months. It used to be under 10, I think, and now it's like 12 something. He was number one. Short, let's see. I'll admit Sailor do sound like a genius. I mean, everything he's saying's legit, but like, you have to be really bullish on Bitcoin, you know? GameStop, I don't feel like you have to be that bullish on Bitcoin to like, you know? I really don't. MSTR, like, Bitcoin has to go up for MSTR. Bitcoin doesn't have to go up for GameStop. You know? If Bitcoin doesn't go up, MSTR's fucked. They're gonna have to sell most of their Bitcoin to pay off the bonds. GameStop, on the other hand, depending what they do, you know, I don't know if GameStop's gonna go all in or not, but if they don't go all in, that bond's paid for. And if they do go all in, the stock's gonna probably squeeze, and then they're gonna do an at the money and raise a bunch more cash. So, like, yeah, dude. These people, bro. It's crazy that they're ignoring. I'm glad. I'm, like, truly glad I was bullish on GameStop before the Bitcoin thing. Because I think a lot of people are only now looking at GameStop because they said they might buy you know? If debatable whether they already did it or not. I think they did, but I'm glad I was bullish before this. Because I couldn't imagine, like, sitting there. Have they announced it yet? Like, when they announce it, like, I don't know. Like, it's gonna be nuts, I feel like. It's gonna go up at least, like, 100, 200% in the short term. Maybe. Maybe not. Maybe I'm wrong, but I don't think I'm wrong, dude. I really don't. I think, I don't know, man. I don't know. I'm excited, though. I'm fucking excited. I'm so excited. MSTR nerds rotate to GameStop. They will, dude. They will. They fucking will, dude. 100%. Dude, a lot of people in there. That's a thing I kept saying. I kept saying I can't wait till you all FOMO into the stock. And people in there, I'm not gonna FOMO in. Like, I honestly just can't wait. I can't wait to see what happens when they do announce it. Or, yeah, it's It's so exciting. Heard 12%. I really think it'd be hilarious if MSTR buys GME. They wouldn't buy them if they think GME's bad. They probably heard or read that GME is struggling and trying to do the MSTR route. That's all they know. Yeah, I agree. They don't read the balance sheet. They read the news. All the shitty news that we read all the time. You know? There was like that 1 week, that week or two, where we had a couple bullish articles. It's always bearish. Every news article is bearish, except maybe that 1 week. It's crazy, man. But even you know, if that's like the story you got sold, why would you focus on these shitty companies? You know, why are you focusing on these companies that are about to go bankrupt? You know, all those companies are only raising Bitcoin because they're struggling. Like, why is everyone ignoring GameStop? It doesn't make sense. That's the only reason all those companies are buying Bitcoin, is because they're shit. So, like, even if that is the mindset, man, so much opportunity, bro. Crazy. And who knows, you know, maybe we go back to 15, 20, maybe we go back to 10. I don't give a shit at this point, dude. I am so fucking bullish. I don't care what happens to this stock in the short term. The fact there is this many ignorant people is, like, crazy. We've read, like, 2 bullish articles. Yeah, exactly. Because they can squeeze easily. I guess that's a good point. But a lot of those companies haven't squoze. You've had those, like, couple, like, you know, Metaplanet. You've had a couple that have done crazy numbers. What, MSTR and Metaplanet? Those are probably the only ones that have gone up, like, crazy significant. So, yeah, I guess we know what the volume. Low on GME, everyone's ducks on it, yeah. I mean, the volume's, you know, the volume, who knows, but people are overlooking it, man. They're overlooking it. Like, it just doesn't make sense to me how you can be bullish on Bitcoin, bullish on all these shitty companies that are acquiring Bitcoin, and then you look at GameStop, and just because they haven't announced that they bought yet, you think GameStop shit. Like, that mindset doesn't make sense to me. I don't know how you could be so bullish on this and then be like, nah, GameStop's trash. Like, it doesn't make sense. It doesn't make sense. It makes 0 sense to me. Wild, man. Fucking wild. I'm so excited, bro. I'm so excited. Oh, shit. I am so fucking excited. Market's undecided here. It's going to be interesting to see if we start to sell off or, you know, it was just a fake tariff tantrum or whatever the fuck you want to call it, and we just make our way back to all-time highs. Will be very interesting to see how it plays out. Oh man, I'm so excited, dude. I'm glad I like did what I did with that stream. Even though I was typing a lot and I was kind of being a dick, I'm glad I did what I did because it gave me everything I needed to, like, realize even further why GameStop is the best play. It has increased my conviction. I didn't think my conviction could get any higher, but it's higher somehow. My conviction is so much higher now, and it's actually crazy. I didn't think that was possible. I didn't think I could be any more bullish on GameStop, but somehow, somehow I became more bullish. Wow. Wild. Fucking wild, man. I saw they sold stores in Canada. How much did they sell them for? They haven't said yet. It said it was gonna take like several months, like 7 months or something for them to fully complete it. So I don't know exactly how much they got. But I was thinking about that, and I think they sold it for like $1 billion, over $1 billion. Like, I don't know. Just because of how much revenue it has, and it's like right there on the brink of profitability. Like, I really think they could have at least got $1 billion out of it. But who knows? Who knows? Even if they got nothing for it, it's still bullish, you know? If they got any amount of money for it, that's crazy. But I think they possibly got over $1 billion. I don't know. But like, it depends how they value the business. Like, some people value, 2, 3x, 5x revenue. It just depends, really. Like, that's hard to say. I don't know enough about like how people value companies when they sell them. I don't know enough to give like an estimate, But I think they did at least $1 billion. Was a great meeting so far. It feels like another gaming company buying. It shows it had its game value. Yeah. That guy is the co-owner of McFarlane Toys, which if you looked at the GameStop website like 2 weeks ago, last week or whenever that was, it was McFarlane Toy Week. So that's kind of interesting. Sup, Elvis? Trader Twin Dad, what's up? But yeah, we'll find out how much they sold Canada for eventually. And they still haven't even sold Europe. Like, I hope we get the announcement of how much they sold Canada for, because then that's going to give you a good idea of how much they can sell Europe for. King of Rockin' and Trollin'. Hey, much love, Elvis. Black and white or just one? I got both. I got one of each. Confirmation email? I'm not sure. I'll check. I got the thank you for ordering after I was done. What is that, homie? Hold up.
increasing with every passing quarter. And now I feel like my odds are way higher than what the market's pricing in, and that's why I think it still remains a really bullish setup. So that's another variable, right? That my willingness to bet on management has been increasing as well. Whereas when we were at $4 back then, I didn't even really think about it. I'm like, oh, maybe we'll see. I didn't think that back then. I didn't even think that. Well, I thought here maybe they were sure screwed. I thought maybe they were screwed and there was nothing even that anyone could do. And now as we're seeing it unfold and now we're here, and now I'm like, shit, are they really going to do this? Are they really going to pull it off, or it unfolds as you're kind of hoping it unfolds? They might pull this shit off. It's not guaranteed. My odds of it are much higher than what the market's pricing in. Nothing's guaranteed, but damn, it looks good. Yeah, yeah, right, Hugo. Hugo's portfolio with the long BYDD, short GME. Hey, Jen, welcome back, Jen. Cheers. Oh, Jen commented on Jen saw the alien one. Yeah, that's right. I was just talking about that one, Jen. Oh, maybe you were here. How far behind am I? Shit. Okay. Q3 will be more of a look through. Perhaps they show more details on the Microsoft deal and more forward-looking info on the consoles. Yeah, I curious what inventory will look like. Maybe sold through some. I kind of agree, Steve. I think we're going to get more on the advertising front, like some of the stuff Rod's been talking about. I think we're going to get more information on that stuff. And but I tend to agree at this point. Unless something crazy is announced next week. It shouldn't be the base case, though. But if they do, wow. Wow, if they do. Seriously. We're going beer number 2, baby. Definitely. No doubt about it tonight. What else we got? Yeah, I tend to agree, Steve. I mean, the only big things, and I think Jordan was talking about this in the last stream too, in the unlikely event that they actually did buybacks, that would be big. In the unlikely event that they actually provided guidance, that would be big. But other than that, I think it's mostly going to be what you're describing, Steve. It's kind of like just some updates. Like, just look at the past couple conference calls. I think it's going to be very similar to that. We're kind of just, they continue to tell the same story and saying, hey, we're making incremental progress. You don't care yet, but you need to know we're making that incremental progress. You see it on the conference calls. You see it in that ICR conference transcript. That's why I included that in that tweet storm as well, whatever you want to call it. And but maybe that's the thing, is that maybe this time around for this quarter, the market may care more. They may be buying into it, and it sounds stupid. But they may be buying into it because GameStop's in a bullish uptrend. Remember, not that much has changed this whole time. Ryan Cohen getting involved was a change, but it's just an investor. He's just a dude. Ryan Cohen is just a dude. Why? Like, you know what I mean? He's just a dude. And yeah, he bought 10%, but so what? Investors make mistakes all the time. So other than that, the Microsoft partnership, but they've been talking about that they've been saying they were practicing this shit since Q4 2019. I mean, to actually make the announcement, I guess that's meaningful, but you still see bears discounting it. So really, like, there's not melt shells, except that the price has gone up 3x. And it sounds crazy, but the market, that's what the market will kind of dial into. They're like, oh shit, this chart looks great. Let's go. Short interest? What? Like at that point, some folks might view it, but like that always depends who the market participants are, how they interpret certain variables. Steve, they'll probably get asked about the Microsoft deal, right? Hopefully they get asked about a lot of this. Hopefully they talk about a lot of this stuff, right? I'm very curious to see what the headline figures are. You got to figure again, it's going to be e-com. Okay. Where the hell is it? What? Oh, yeah, here. The question is, what will the headlines be? What will the 3 bullet point items be? There's a question for us. Let's see if we can figure that shit out. What will be the 3 items right there? You know what I mean? So GameStop reports third quarter results and strong progress towards strategy. Like, I imagine it could be the same title, but I wonder what the 3 bullet points will be. You know what I mean? Before I share what I think, I mean, I haven't really thought through it. Giving myself a little bit of time, you know what I mean? Yeah, inventory. Maybe sold through some more. They've already done such a good job of the inventory front. I'm like, Like, I'm already comfortable with what they've done so far. But yeah, I'd be curious. Maybe early console numbers. Might just be the pre-orders. Yeah, I don't even know. Hey, Blessed Spear. What up? What up, Blessed? Cheers. Welcome. Happy Friday, mate. David Farrell, likewise. Yeah, I don't know about that short stuff. I don't know. Hopefully other people. I don't weight that stuff too heavily, Dave, about the shares available and stuff. I keep on saying this. Maybe I'll look back and realize, you know what, that was meaningful. But I've kind of just seen a lot of stuff over the years where nothing really pans out from it, and so I just continue to discount that stuff. But so no real opinion, Dave. Okay, and so Rod has an opinion. That was okay, but Rod agrees it was weird. Okay, my take is a long testing the waters, selling covered calls weekly. Is a long testing the waters, selling covered weeklies. That's happened several times. Okay. $1K getting diamond handing since March, yeah. Large lendal supply into the market. Going white down. Yeah, I don't know. Like, definitely know. I mean, I know I'm a little bit behind here, but calling it like fishy and stuff, like, I don't agree with this stuff. You know what I mean? Like, and I feel like I've said this before too, but like, if something were like more longs would be talking about this, right? Like, there's lots of eyeballs on this stuff, and I like when people say like manipulation and stuff. I think it's just because people aren't really super dialed into certain complexities of the market, and then when they are, they're kind of like, hey, what's going on here? But in reality, it's just because we, myself included, don't really understand what exactly is happening. And with a stock like GameStop, I think you're going to see a lot of this. I mean, I'm not saying definitely. Just to be clear, I have no idea. But that's like my take with some of this stuff. Lots of traders leaving the stock. Right, as far as the price action goes, I agree with you, Superstar. That's what I keep saying. A lot of maybe some marginal buyers getting out and even potentially on a 30% drop, some marginal shorts closing. That's the thing, marginal shorts, but you wouldn't think that any long-term holders would be closing on a 30% drop. It's not enough. Okay, so y'all going back and forth about that. Shit, Super Saucy, you're talking hedge funds. I don't know. I don't remember what the hell I was talking about. So I forget. Okay. Try to scroll right through. Okay, so Supersonic says the same thing. The fact that they didn't close $3 a share is lunacy. Again, not in their minds, right? I mean, that they didn't. What's a little bit more odder to me, Supersonic, is that they didn't even trim. Don't you take profits along the way? I mean, maybe they did. Again, we don't know. It could have been a new short step again. We don't know, but just hypothetically, if it were the same, it's like what? But regardless, if I may put on my optimistic glasses here, Super Saucy, for me, it's lunacy, right? Not that what I'm going to say is disagree with what you said. I agree. It's in their mind, they're right, though. So it's going to zero. Maybe it just got delayed. You know what I mean? But now it's going to be delayed by a year or two. When were they betting on it? But now, as far as the bull thesis goes, we have a tell. We kind of know what they were betting on, and that's important for someone like me, because again, I've said this many times now, but when I see a super heavy short interest in a company, I mean, I usually look the other way because it's not for me. I'm like, oh, they shorts are onto something. There's something the longs are missing, right? And this time, I'm so dialed into long position. I'm like, yo, I feel very, very confident that the longs ain't missing anything. It's the longs who have the right story. And the shorts made a mistake by not closing out, and now I know. I can't say no, but because again, maybe the shorts have turned over and blah, blah, blah. I can't say for sure. But that such a high level of short interest has been maintained through that whole drop. It never even dropped below 50 million. That seems to me that people are betting on zero. And now I feel very confident that they're not going to get it. And because they're not going to get it, I mean, I'm just repeating shit I just said. But sorry, Super Salsa is trying to get caught up. Not when you expect to go regular. Sabu, welcome. Cheers. And I agree. That's right. If you expected to go to zero, especially, and that's the thing, you would have thought that they were betting on it to go imminently. And remember, back in March and April, I mean, their stores were closed. You know what I mean? Their stores were closed. So it's not like even I was surprised. We were talking about this a couple streams ago where I'm bullish on GameStop, but when their stores were closed and we didn't really know what was going to unfold, I'm like, GameStop could be in trouble. What if the consoles are delayed a year? You know what I mean? Like back then, you can kind of understand. They're like, all right, what's going to happen here? And then, but as another quarter passed and then another quarter passed, right? No, it was really just one quarter that passed. Right? Because we got March and then we got June, so it was only June, and then by the time September rolled around, Cohen was already in. You know what I mean? Like maybe part of their conviction back in earlier in the year was that GameStop. Then once they, you know what I mean? Like once that's the thing. We were a sub 4 last year. But then maybe they were doubting management too and thinking this can't be turned around. And now we're like, I feel like we're turned around. And then they chose not to close because they felt they were right. When, though? Like, you know what I mean? Like, if it was gonna, this is the thing, if it was gonna happen imminently, when you have this, I'm out of my element here because I don't know this type of stuff, but when you have that heavy of a short position, again, we don't know who it is, but that when you have 50 million plus shares short in a company, I kind of think that you think it's going to go to zero fairly soon, right? Not 5 years. I don't. Is that a worthwhile trade? Maybe it is. It could be. But now I feel like that's dead. That GameStop's going to zero in the short term is dead, and they've been adding to the short interest has been rising, and so maybe they think maybe it was always just a long term, play. Seems risky to me. Seems very risky to me. I can't even think through this shit. That's what I keep saying, Rod, right? Are we all dumb? Like, I've been asking myself that shit all year. Like, I'm like, what am I missing? I felt like I was going crazy. Multiple times I felt like I was going crazy. And then came the summertime. I'm like, well, that's where I was at in September. I'm like, this is bullshit. I'm like, this is bullshit. Coming July and August, you know what I mean? I felt like I had enough information to know that I wasn't crazy, but you're still pulling the trigger, worried that you are. But you're not worried, but like you're like confidently pulling the trigger, but in the back of your head, you're like, my experience suggests that I'm right, but you never really totally know, especially as like an outside small investor. You always feel like you're a little bit, even right now, I kind of.
I'm muted. I was muted that whole time. God damn it. God damn it. The strategy thing was not that interesting, I'll be honest. There was a couple companies that were interesting. The most interesting thing about it is seeing all these little baby-ass companies getting into Bitcoin, and then you think about GameStop, and you're like, damn, GameStop's on such a bigger scale than all these companies, and all these companies are getting into Bitcoin because they're going bankrupt. And yeah, it was and also just being in the chat, it was crazy seeing how many people like were honestly just overlooking GameStop. It's crazy, bro. That the live stream was whatever, but the chat made me so bullish. It was crazy. The chat made me so fucking bullish on GameStop. It was actually crazy. I was in the chat. Yeah, I was trolling. I was trolling the chat. Not really trolling, but I literally ran that chat. I was typing the whole time, basically. Like, bro, people have such negative views on GameStop. It's awesome. It's fucking awesome. I would say more than anything, watch the newest strategy earnings call if you haven't watched it. That's going to be more interesting than the strategy world. Strategy world was okay, but I think their earnings call was a lot better. There were, like I said, there were some little pieces of information in that stream that were okay, but I don't know. Overall, I didn't think it was that great. It definitely could have been better. But at the same, I was also, like I said, the chat was what like interested me. Seeing all those people who are bullish on Bitcoin and treasury strategies, not being bullish on GameStop, that's crazy to me. That's actually insane to me. All because Ryan Cohen hasn't said anything. They need all those crypto investors need their fucking hands held to invest. It's pretty funny. They need their hands held because they don't know how to read a balance sheet or like use their brain. Not one person agreed with Corey and his GameStop thesis. There were a couple that kind of got it, but majority didn't understand. Say Bitcoin is still in the early phases, but I said 60K. Here we are. Companies are early, not the average person. I don't know. Hard to say if you're early on Bitcoin. I mean, it seems like it. There was only like 1,000 people in that stream. If that makes you wanna, if that gives you an idea of how early we possibly are. We're not the 50, 100 people who bought in below the thousands or below 10,000, but we are definitely somewhat early in some case. Polarizing views on GME is what drives my conviction. Bro, that stream made me more bullish than I've ever been. Like, I'm not even joking. Like, seeing all the negative sentiment in there and how people view GameStop, that made me more bullish than I've ever been. It's crazy. It's actually crazy. Seeing all those negative views and talking shit on Ryan Cohen just because he hasn't announced the purchase, that made me so bullish. Feels like people are more bearish than 2020. You think so? I mean, I wasn't really here in 2020, so I don't really know, but it's crazy how bearish people are. And maybe not bearish, like Matt said, like overlooked. I don't even think people are really bearish. I think they're just not looking. And, I think that there is a lot of bearishness. Don't get me wrong, but I just think people aren't looking. But I need to get out of here, bro. We've been streaming for 8 hours. We've had the past 2 streams have been 8-hour streams, and they've been the most dead streams we've had. That's fucking awesome. I'm so glad all the trolls are gone. Straight up. I'm so glad all the trolls are gone. I mean, unless Hugh's a troll, I don't know. I think Hugh's legit. Who knows though? I think, who fucking knows, dude. I love Hugh, but I'm glad all the trolls are gone, or the fake viewers, or whatever the fuck was going on. I always had a feeling there was no way we had like 15, 20 people in here. So, it's nice. It's nice seeing the real number. I was amazed. See, you guys are a game of Among Us. I mean, you put yourself in the position to, you know, you put yourself in that position. It's not our problem. It's not our fault that we think that way. It's your fault. It's your fault for putting yourself there. Not my fault. That have read GameStop's balance sheet. Yeah, for sure. Or maybe they have and they just don't know how to read a balance sheet, you know? But I'm out of here, bro. I need to go. It's been a long stream. Long ass stream. But I appreciate you guys. God bless ya. I hope you have a good rest of your day. Much love. I'll see you guys tomorrow for another exciting stream. I have no clue what we're gonna do tomorrow, but we'll figure it out. But peace out, guys. Muma, Matt, Hugh. God bless you guys. Peace.